Spinny Scrub, your new best friend when it comes to cleaning. It's got a powerful motor to rotate at high speed, so no more scrubbing by hand. It comes with 5 different brush sets, so no matter what you're cleaning, you've got the right tool for the job. From your bathroom tiles to kitchen countertops and more, the Spinny Scrub has you covered. So if you want to make cleaning faster, easier, and way more effective, the Spinny Scrub is your answer. And right now, if you order today, you'll get 20% off. Trust me, your cleaning routine will never be the same. Go ahead, scan the code on your screen right now and get yours today. You'll thank me later.
When it comes to bath time, our dogs deserve better. Earn their most personal moment. Show them love. Mama Brush. With its built-in shampoo dispenser, Mama Brush cleaner listens to your feet while removing dirt. Whisper, your dog will bite. Shabby gave it a lot of food. Eyes on it. Make bath time your most cherished experience. Mama Brush.
We've all been there. A dead battery, a flat tire, and no help in sight. But what if you had the ultimate emergency tool at your fingertips? Introducing the Flash Charge 4-in-1 Jump Starter Power Bank Plus Tire Inflator, your roadside lifesaver. With wireless inflation, emergency ignition, LED lighting, and a mobile power supply. The Flash Charge is compact, powerful, and reliable, designed to handle the unexpected. Order now and never be stranded again.
We all are recipes of garlic, but trying to make an awkward garlic is nothing best. Introducing the great garlic, the ultimate kitchen maker from effortlessly crushing garlic to perfection. Just place a teaspoon of garlic under the grate, rock it back and forth, and say goodbye to chicken chopping and next mince. Great garlic ensures consistent results every time. Scan the code on your screen to order your great garlic today. This is a limited time offer, so scan now and find out for yourself just how great the great garlic is.
That's time for some of today's top trending tickers for watching Lockheed Martin, AstraZeneca, and DR Horton. First up, Lockheed Martin's second quarter operating profit plunged more than 60% after it reported pre-tax losses of $1.6 billion during the period. The company also cut its full-year guidance. The losses tied to classified programs in the Lockheed called the charges, quote, a necessary step as it looks to improve program execution. Lockheed Martin CEO called out several catalysts for the year ahead in the earnings release, including more than $1 billion in missile-related contracts with the U.S. Army and additional satellite orders from the U.S. Space Force, shares in at 8%. Next, AstraZeneca investing $50 billion for manufacturing. The company followed the lead of many big pharma peers, which have pledged a combined $200 billion in spending. The investments will include expansions of current sites in Maryland, Massachusetts, plus the construction of a new site in New Hampshire. AstraZeneca, based in the UK, said it currently relies on U.S. market for 42% of revenue. The CEO telling Yahoo Finance he hopes to increase that U.S. market share to 50% of revenue with this approval. And finally, homeowner DR Horton's revenue topping estimates in the most recent quarter as buyers incentives sustained home sales during the period. Those incentives, though, are not great for the bottom line. DR Horton, which is lowered the range of its revenue outlook for the full year as macro pressures continue to weigh on the housing market. In an earnings release, DR Horton's executive chairman noted demand for new homes but pressure due to both ongoing affordability constraints and cautious consumer sentiment. You can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's spring ticker page. The stocks reached new record highs Monday, peaking at 6,336 for the S&P 500, over 21,000 for the Nasdaq. It's the latest in several record highs reached in recent weeks. The stocks continue to power up. Their valuation getting stretched for this value. It's always good to see you. And this has been the question that we keep asking, and stocks keep going higher here. Is there anything that you see that is going to be a more meaningful offer?
Really important is the message it just talks about.
Good morning. Good morning. Yeah, Brett was late this morning. Brett was late with his update. Okay, so got about 9 minutes to go. 9 minutes to go. It's summertime. Our futures are flat at the moment.
In your latest ideas that came out recently, you talked about having multi-asset even with relatively bullish on equity, they could still think people need to be sort of well-rounded portfolio.
Yeah, I just think so that it's always important to have also movement components.
Okay. Let's take a look at the junk bonds and high yield corporate did close bullish yesterday. With a gravestone doji, but still above the 9 and 21 day. Okay, let's look at high yield, HYG. It's always a good idea to take a look at these in the morning just to get an idea what the markets have in store for the day. We could pull back a little bit. We could stay flat at this point. Junk bonds, high yield look good. Breath is a bit flat. It looked a lot better yesterday, if you recall, early in the morning. A lot of stocks drove higher. NASDAQ looks okay. That's still pointing upward. Okay. Breath. Let's see the way we closed. Closed mixed 1-to-1 across the board. Across all the indices, we're 1-to-1. So that's telling you Doji. We made it up to what, 63.38, I think it was yesterday. Cash. What was the high? The high yesterday, 63.36. 63.36. We closed on a gravestone doji. Not a big deal. We could see some consolidation after a big gain in the markets. We are headed into August. August tends to be a weaker time of year. Okay, trend and consolidate. Looks like we're consolidating in the green box SPY with an upward sloping bias. Okay, got 6 minutes to go. 6 minutes to go. First few minutes of the trading day, I'm just taking profits off the table if warranted. If I'm up substantially overnight, I'll take some profits off into strength. Look for others to do the same after a dip intraday. Doesn't always happen, but after a dip intraday, I look at the stock if it's bullish. Looking for a follow through. All right, so looks like Meta is up, Tesla's up, Nvidia's up this morning. 5 minutes. 5 minutes. Bitcoin. Bitcoin looks okay. Let's see. Let's go here. BTC USD. Okay. Okay, we're inside that wick from yesterday. Spiders are right up in here in this wick. That high on the SPY around 630, 631.50. Okay, let's take a look at these. Tesla this morning. Tesla. All right, so here we are. Tesla. 5,200 day. All right, we're 329 inside day on Tesla for now, off the highs that we saw in the morning yesterday. NVIDIA. NVIDIA. Off the low. We did get down to, looks like 169 or so, 169. Broadcom. 3 minutes to go. Broadcom. Okay, inside day for now. All right, NASDAQ 100, we've got about 15 stocks green to start. Looks like we've got about 15 green to start. S&P 500, mostly advancers or unchanged. I would say we have about 50 stocks that are declining on the S&P 500. About 100 advancing, and the rest are unchanged. Coles, yeah, that looks pretty good there, Susie. Coles, KSS Coles, grinding along the 9 EMA, 921.50 up and to the right. So it looks like Coles could get something going. What does TJ look like? TJ Maxx? TJ Maxx off the 200 day. Target, still having a hard time. Target. United Health. It's a dud, United Health. No follow through there. Okay, less than a minute to go. We're about to open here. Market's about to open. We're open.
How I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes.
Let's keep an eye on what's working this morning.
Let's move on, shall we? Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Morning movers brings traders the biggest headlines to start the day, from volatile overnight swings to the early.
Okay, CoreWeave is trading at 125. CoreWeave. Walmart. Walmart ringing the bell at the NYSE. Okay, advancers. Okay, advancing stocks taking over. We started off with about 15 stocks green. We're about 50 now. Broadcom pulling back. Okay, let's see. SPY. Let's see what SPY can do. We did pull back a little bit on SPY.
Something that would justify a move of 100% in the stock. Absolutely not. So what's going on? Very big short position. Yep.
Okay, there goes Palantir. Palantir with the bounce. Palantir with the bounce.
So this is GameStop almost.
Palantir on the move. Early. Not making much of these moves in the morning. The New York Fangs are all mixed. That tells me all I need to know. New York Fangs are mixed to lower. It's like profit taking. Okay, Kramer, whatever.
Morning, Nicole. Well, looking at the overall markets, we talked about this yesterday.
We're down about 3.5% at this point. This is a company that also reported earnings this morning. They did take a $1.1 billion tariff-related hit in the second quarter, and they said the tariff impact in the current quarter.
All right, so next week we have quite a few big names as well. We got Tesla tomorrow with earnings, and stocks getting sold. You can see why you don't want to do anything early in the morning. Get chopped up. Palantir. Okay, who is doing well here? Let's just go through the list of stocks that are most active. Gosh, I hate this. Why do they do this? BKNG again. BKNG. It's up 0.5%. It's the top of the NASDAQ 100. ANSYS, this one gapped down. I'm just going through the top 10, 20. Even though this is down, I don't know why this is on the list. Meli, M-E-L-I, Meli. Okay, let me just get this.
Triple-digit sales growth in EV business, but its reaffirmed profit outlook is causing some concern amongst investors. GM warned that second half volume will be lower than the first half, and even $4 billion.
Okay, PACCAR, PCAR, PACCAR. Gap up and fade. All right, so they're selling the open on semiconductor. Give it a few minutes for the markets to settle down on semiconductor. On is trending. Electronic Arts. There was some news on that one yesterday. EA, Gap, and going. Electronic Arts, Gap, and go. Okay, MongoDB, that one's been active lately. MongoDB, MDB.
Shares off by double digits in early going today. Investors also appear to be engaged with other names at Beyond Meat and GameStop. Barclays estimates that retail investors have poured more than $50 billion in global.
MongoDB, day 6, trending. Looks okay. Just going down the list. NASDAQ 100. Team Atlassian. Atlassian off the low. None of these really look that interesting. Regeneron. Adobe. That was mentioned yesterday. Adobe turning. What's Lulu doing? Lulu. Okay, Lulu. Might get stopped down on this one, Lulu, if it drops much more. Lulu. triple bottom, double bottom. AstraZeneca. Nah, not that much interest there. Starbucks. Starbucks flat for the last few weeks. Starbucks. BIIB. Okay, what are the nukes doing? Nukes taking another day off. Nukes. Okay, so watch SMR. This could bounce here. Watch the nukes. Let's see what Oklo looks like. Oklo. Okay, that one's giving us a little pullback too. Nanonuclear. Lightbridge. Okay, these are all doing the same thing. What about airlines? Delta. Flat. United. Flat. Cruise lines. Carnival. Man, I've been seeing a lot of bad press on Carnival. They lowered their rates so much that now you've got people who would normally be on a cruise. That's why I like Royal Caribbean. They're more expensive, but they're more the elite. You got Norwegian, NCLH. These are all pretty much doing the same thing. Oh, so travel. TNL. Travelandleisure.com. Netflix. Just going through the list. Not much going on here. IDXX. IDEX Laboratories. All right, that looks better. Veterinary and veterinary sciences. I believe they do quite a bit with the universities too. Like LSU has a mechanical and agriculture college, and with the agriculture college, they have, cattle and livestock sciences. It's a big campus, LSU. It's where I graduated from as an architect. Architecture, engineering, psychology, law. They have a law school as well. Lots of things going on at LSU. Nice college. Apple starting to climb a bit. Okay, going down through the list of top 20 because there isn't much going on at the moment. KHC. Kraft Heinz. Okay, that's turning the corner, starting to trend. What's some of these defensive names like Colgate? No. Clorox? No. Kimberly Clark? KM. What is Kimberly? I haven't looked at this one in a while. Kimberly Clark, KMB. I put KMC. Okay. Figures. No, nothing there. All right, let's look at the sectors then. XLB. Materials were starting to look okay yesterday. So was communications. Communications. Okay, that's a doji for now. Okay, communications, you would see Google in this group and Netflix in the group. Netflix in the top half of yesterday's range. Need to stay above the 50-day. Netflix. Okay, the futures are starting to rise. S&P is starting to move off the low. Very, very extremely tight range here. We had up down volume leading yesterday 1-to-1. Up down volume was leading yesterday and then closed 1-to-1. Now we have the New York Stock Exchange. When in doubt, always check the New York Stock Exchange. Okay, that's up 2.4-to-1. Okay, that's looking pretty good. 2,000 stocks on the composite, broad measure of market participation. The NASDAQ composite, the comp, 2,700 stocks, the comp. Let's see what that looks like. It's flat. Up down volume is 2-to-1 up though. SPY's okay. We just talked about SPY. SPY's flat. All right, so look at the price action on the index. That's telling you a lot. Okay, there goes Apple. Apple's on the move. Apple's popping. Watch Apple here. There goes Apple. Okay, let's look at Apple. Maybe something early on Apple. Okay, what's the news on Apple? Anything? Apple iPhone revenue estimates rose 2% from higher shipments and prices. iPad estimates increased 9%. Mac estimates grew 1%. Wells Fargo optimistic. I have to tell you, all we need is a catalyst. We need a catalyst on Apple. It's slow going. Doesn't have a high ATR. ATR is only $3, $3.75. But once this gets going, we're probably going to look pretty good. All right, so I got a little selling into that strength on Apple. That could be institutions pumping it up just to get people to grab it so they can sell into strength. I would go with the overall message from the New York Fangs. They're just flat to lower. Okay, Apple. Futures. Okay, let's keep an eye on futures. Okay, I need to take a 2-minute break. I'll be right back. Watch the index.
I think they'll be a good person to level set what's going on here in GameStop. So we're seeing activity in meat. GameStop is really, I've been tracking these moves at open door, which are just totally wild. What do you tell folks that are in a stock like Open Door, trading in and out of this frenzy? A company that, barely makes anything?
Well, first of all, I want to know why I'm the one to level set on these stocks.
Well, anytime you look and focus on valuation, you're the long-term minded investor, just bring clarity to these folks out there on the Alpine platform, bidding up these stocks. I mean, this is wild stuff. I really came out.
Yeah, and it's just kidding about that. But meat stocks, look, the phenomenon of meat stocks isn't going away. I feel like the genie's out of the bottle. And it's just become a way for a certain subset of everyday investors to trade. And that's completely fine. It's your money. You do whatever you want with it. If you're trading these meme stocks, if you have a little bit of cash on the side, I mean, what I'll say as a side note, what we've seen is that investors do still have a lot of cash on the sidelines. So does it surprise me that more speculative media is creeping in the markets? No, and I don't think you can say when the froth is too much or not. You can only tell a bubble in hindsight, so I'm not going to do that. But if you are trading these meme stocks, if you were one of the investors in Open Door yesterday during its wild ride, just remember to set your targets. Understand why you're investing in Open Door, and really, again, going back to the targets, really understand where you're getting in and where you need to go.
I was actually going to have to put down with the bullshit Coke. But we're on my
Do you love a good Coke?
Yeah, I suppose. Allie, let's work you real quick. These moves and meme stocks. I think back to we all cover your knowledge, the original OG meme stock movie. Now this isn't quite the same, but it's extreme and something we haven't seen before.
Yeah, I think that's why it's a big talking point on Wall Street right now. If we are at levels that are too frothy, but most strategists that I talk to say we're not there yet, and that's because the market is pretty healthy right now. We have obviously tech leading the way higher, trading at record highs, but we've also seen this breadth across other sectors as well. Financials, communication services, industrials, they're also at records, and that's a sign of a healthy bull market. Now, July is typically the quietest month for stocks on a seasonality basis. Usually in August or October, you see a bit more choppiness, and I think with the Fed policy still.
All right, pretty quiet this morning. Let's see what's going on with Trace. All right, so Tesla's starting to bounce. Tesla. Okay, Gamma currently. It's early. You can see that the dealer hedge flows are just starting to show up. S&P opening. And hedge flows are starting to show up flat. Okay. Looking at Gamma, you can see there's nothing really below 6,200, 6,250, really, 6,250. Nothing really below this. So we definitely want to stay up here, but it's kind of sticky. You can see all this Gamma overhead. 63, 30, 40, 50. Looks like today is going to be pretty sticky, folks. Nothing below 63, 63, 62, 50, 62, 50. All right. Mm-hmm. Okay, I would expect choppy price action today. What I'm seeing is just selling in the open, selling the open, profit taking. Apple trying to hold on. Tesla trying to bounce, trying to hold on to here. The 50 days down below. Tesla earnings tomorrow. Okay, Palantir pulling back, so that was a wise decision to reduce my exposure in Palantir. I did buy the dip on Palantir. I just want to show you why I buy the dip. Oh gosh, I hate this. Why is stock charts changing their format? Okay, so let's see. Palantir. Okay, so Palantir on Friday. Okay, Palantir on Friday. I bought this dip over here on Friday. Talked about this yesterday. And, you know, I felt that Palantir had a good chance of continuing the trend. So I bought here at the lows. And yesterday, right about this time here, we took out these lows. And I took the trade off because I felt like it could continue. The point I'm trying to make is buying the dip gives my stop. My stop is much closer to my price where I am presently. So if the stock rolls over, I'll get stopped out and I'll know I'm wrong immediately. Whereas if I buy the high of the day and I just hope that it's going to reverse, then I'm faced with this kind of situation. Instead of taking the stop after a pullback to the low of the day and it rolls over, instead of doing that, if you buy the high of the day, now you're faced with a situation where you keep hoping for the stock to come back. What if it doesn't come back? What if it just keeps moving lower? So that's the dilemma, and it's a very simple fix for most traders. Is just to not buy the high of the day. I'll give you another example. Here's let's see what J.P. Morgan looks like this morning. J.P. Morgan. I saw lots of people adding or buying J.P. Morgan yesterday. Okay, it was up here at the highs. That's a bad area to add, especially if you're trading options. If you're doing this, you need to pay attention. I'm not saying that, I'm not trying to criticize. I'm just saying observation. Don't buy calls at the high of the day. Is my most of the time it's not going to turn out too well. Wait for a little pullback because if you're buying calls down here today, more than likely you're going to be okay. It's still early, and J.P. Morgan still looks pretty good. It may be that the trade works out, but why not give yourself a good footing or a better entry rather than adding at the high of the day? We never know. This could have kept going, but looking at RSI and MACD was probably not the best idea to add up here. Okay, so the New York Fangs are still kind of chopping around. Futures still gliding low. Looks like it's going to be a negative day today. Okay, yep. Powell speaking at an event. UNH, what's UNH doing? UNH? UNH has got a lot of work to do. Don't they have earnings coming up? UNH? Maybe UNH earnings can help.
CPUs are actually subject to an upgrade cycle to really
UNH.
devices.
They have earnings July 29th next week on Tuesday next week.
But you know, the likes of AMD or an Intel do have the
SBSW. Okay, let's take a look at SBSW.
understanding just how, in fact, real that total
SBSW.
would be important. The second thing, as we know,
Is that what they do?
remains a constrained
Rare earth?
technology. It's just difficult to get a lot of that technology across all the potential landing points for it. And so the deep sea
Okay,
is actually,
SBSW.
in fact, a bit more of a transformative technology. So how Intel, how AMD, and how other companies are able to help transmit speed to market, we think will be an important driver. So a very important report for us to gauge what's happening in tech as well as what's happening in semi-specific.
Okay, stop.
Well, we don't pick single stocks at Ripples, but you know the biggest tech companies on the market in tech.
Okay, SBSW. Let's take a look at SBSW. Jim bringing that to our attention. Looks pretty good. SBSW.
And look, we're watching global wins, global trade wins. We're watching global catalysts, and I think the semiconductor industry is the
Okay, let
one of the
me
best places
pull
to
up
look
market
to get a sense of
search.
those global trade wins. Intel's hard. You have to separate the macro color. We'll be watching the macro color a little bit more, but I don't think you can look at Intel and make an argument that it doesn't have its own issues to fix here. What I'm watching though, especially because Intel is one of the first semiconductors to report.
Yeah, I've seen these guys before. South African company engaged in mining of platinum, metals, gold in South Africa and United States. Okay, that one's been on a tear lately. SBSW. SBSW. Okay, that one just keeps trending. Okay, I'm not going to do much today. The New York Fangs are telling me to stay put. I'm not doing anything.
Between Intel and a lot of these other big AI plays. But I was talking to one of our reporters, Laura Bratton. She has a great piece out on what this make or break moment means for Intel, and it really relies on this new chip making process called 18A. And this is what Wall Street sees as the last real shot for Intel to take that semiconductor crown away from TSMC. 18A is set to launch later this year.
Okay, all the New York Fangs are lower right now. This is telling you not do much. Here's Apple. Okay, let's go through them. Apple, Doji for now. Amazon was hot yesterday. Amazon, AMZN, Amazon, hot yesterday. It's still trending. Note the Bollinger Band's coming in. Broadcom, lower Broadcom. Okay, these are all getting sold. All right, these are getting sold. This looks like we could be topping out here for short term. Okay, maybe buy some puts. Let's see what breadth. Okay, you can see a completely different look than we had recently. Note the hedging flows are all lower, so maybe buy some puts. Let's see, SPY. What's VIX doing? VIX probably still cheap. Puts are probably still pretty cheap. VIX. Okay, VIX is turned up. Okay, so puts are going to start getting expensive. Maybe buy some puts. I'm going to buy some puts for, let's see, what's today? Tuesday? Well, we go for Friday. We could get a bounce here, so not a good idea to buy puts at the low of the day. All right, so I'll scale in. SPY. I could just sit still and not do anything. Wait, you know what? I'm going to sit still. I'm just going to follow the rules here and wait. See if we get a bounce first. Get a bounce and see if I can get a better entry for puts. Right now, you can see VIX. VIX is starting to gear up. Maybe the VIX is the play. Let's see, VXX. Okay, UVIX. I would expect to see Russell show up here shortly. UVIX. These are all starting to turn. Okay. ETHU, I think Brother Bill was looking at. Okay, Brother Bill. I thought you said you tripled up on this one. This is pulling back, actually. Okay, this is the volatility shares Ether ETF.
depreciation schedule now.
So what does this actually trade? Does this track Bitcoin, Ethereum, or what does this track? Is this the volatility index? ETH, yeah. Let me just see.
It is about the amount. So again, we do think there is a lot of good news already priced in, but we're still buyers, we're still believers in technology. So we would not be, taking the side of that at this point in time.
Callie, what are these large tech companies? What do they need to do?
Leverage Ether linked ETF that seeks to provide daily investment results for fees, expenses correspond to twice the performance of Ether
And they have been,
for a single day.
especially bigger tech companies have been consistently.
Oh, that's weird. Okay, that's a very strange thing to invest in. Just not my cup of tea. All right, so what I just said is I don't want to buy puts at the low of the day. Let's look for a bounce, okay? So that would have been a mistake. All right, so correcting myself, following the rules, don't buy puts at the low of the day. Looking for a bounce first.
So, I mean, tech is a compelling space. I think it's hard.
British Petroleum. It used to be British Petroleum. They got bought by somebody, right? BP. Amoco. Did they get bought by Shell? BP.
Hundreds of billions of dollars on CapEx. And I'm not sure how they're going to thread that needle when these reports come out. Of course, this is a short-term concern. Again, I think tech is the leading sector for a reason. But right now, especially if you're looking over the next 3 to 6 months, we think it makes sense to maybe pull back on some of those profits.
You know that the Horizon, whatever it was, the platform out in the Gulf of Mexico that screwed up. I almost used the F word. Yeah, that looks pretty good. Let's look at some of these energy stocks might be getting something going here. Let's look at Apache, APA. Okay, holding on. This one hasn't gone anywhere. Let's see what's working today. Let's see what's working. IQV, Covia. Okay, Gap and Go. The builders, we talked about the builders about 2 weeks ago. We were saying that they were probably bottoming. Okay. Builders are bottoming. XHB stocks. Yeah. What's the news? I don't think there is any news that's cracking the markets. I wouldn't call it cracking the markets. I would just say that it's the time of year. It's the time of year, Joel.
When your phone, wallet, keys, loose change, and more fall between the seat and center console of your vehicle, it's impossible.
That's time of year.
Oh no. Again, introducing the console catcher, the perfect addition to any vehicle. It's flexible, easy to clean, and even easier to install. Simply place the console catcher around the base of the seatbelt button. That's it. The console catcher keeps anything from falling between the cracks.
July, August, the end of July, the last 2 weeks of July, we could see a little bit more. Tends to be more weak in August, but it could be a little early this year because we got a 32% gain. Too early to tell. I might just be some profit taking. When you get distribution, it doesn't happen all in one day, right? Distribution. Now, this could continue, and we could actually just keep going. I mean, there's a lot of catalysts. Earnings are good for the most part. So we're down 0.3%. Down 0.3%. We're sitting on top of the 9 EMA. Does this turn into several days of pullback? It would still be bullish if we're above the 50-day. Okay, let's look at junk bonds and high yield corporate. Junk. Junk is fine. Junk actually gapped up. See that? Junk actually gapped up. I don't think really anything's changed. HYG bullish. HYG is bullish. All right, so this is a good point. This is a good point. All right, I love this. I love the fact that Joel brought that up. Looking at the markets, one day, looking a little iffy. All the New York Fangs are lower. Okay, the New York Fangs gave us a breakout yesterday, right? So we got a breakout yesterday and a reversal today. Okay, we're just back into the range. The 21 days right there. The bullish trend is still intact. We're below the 90 MA, but we're not gonna roll over in one day. Is it time to start reducing your exposure? I would say yeah. I mean, I tend to do that anyway. My shtick, if you want to call it that. Kind of a negative term, right? I heard this lady talking to Pierce Morgan. What was her name? The black lady with the what was the black lady's name on what was it? MSNBC or whatever it was, CNN. Uh, that was she got fired recently. She shaved her hair or whatever. She was using that term with Pierce Morgan. It just happened to flip the channel right when she said, "Pierce, that's your shtick." So I assume that that's a very negative term. I don't like watching politics; it'll make you crazy. But I just happened to notice that a lot of people getting all crazy with politics. My advice: stay away from politics. It'll make you crazy. Vote, do your thing, but just stay away from politics. I try to stay away from it as much as I can, and here I am talking about it. Just trying to point out. Okay, so this looks like an upward sloping channel. That's what it looks like to me, and it's in a we're in a bullish trend, right? If we came back down to the 21 day, we'd still be intact. Okay.
Thank you, gentlemen, for being here. It's really interesting to see Mohammed do this morning that how leaving would actually.
Okay. So we are fading. RSI is fading. Technically, we're in a bearish divergence. Okay. Technically, bearish divergence there, Joel. Okay.
Nobody would be asking for help if pressure getting resigned. So the logic seems to be, given the president's pressure, as to reassuring the markets, is the job of the Fed to reassure the markets, or is it to ensure that we have full employment?
Okay, so technically you got a bearish divergence. We have this slight upward sloping channel. We got a downward sloping RSI, so that's divergence. Okay, does it lead to anything? Over here a couple of weeks ago, it didn't, and we popped up right in here, starting off the end of June into July. We had this rally. It looked like we're going to get this bearish divergence to micro. Okay, MACD is rolling downward. So is stochastic. So we could see a few days of pullback, Joel. So you might just be a little early. We're going into a month. We're going into the weaker period, the second half of July into August, September. We've had plenty of pullbacks during August. Okay, let's go look here. S&P. Let's go look at 2015, 16, 15, 16, 2015. These blue areas, these are August, the August, September period. Okay. August, September periods tend to be weak. You can see over here, 2013, we had this pullback. This is a weekly time frame. 2014, we rolled over into September. Okay. September, October. I mean, it's not a science. It's not exact, but we look for weakness because people are on vacation. It just makes a whole lot of sense. Here's August back in 2015. You remember that. 2015, that was the Greek, wasn't that the Greek issues? We had Greece having issues, I think it was. Let's take a look here.
Certainly there is a tendency that the shock value.
Where is my chart here? I gotta make this more obvious so I can find it easier. Okay, here we go. This is what I wanted to look for. 2015. What was 2015? Okay, the Russian ruble devaluation, commodities, that crash, the whole China issue back then. You remember the ghost cities and all that stuff, 2015. That's why I keep this chart, because sometimes I forget why we get some of these pullbacks. What happened at the time? When was Greece? Greece was April. Here's it. Okay, Greece was back in 2010. Okay, so that's off a bit there. Let me pull this up where I can see it. Yeah, this time of month, this time of the year tends to be a little bit weaker. Okay, let me go here. Buy. Look at the difference between. Okay, here is the Chinese stock market bubble, 2007. You can see what is this? This is MACD. No, that's stochastic. Stochastics rolls over. MACD rolls over. Are we rolled over right now? Is the momentum rolled over? Not really. Not really. Let's see. 2015, we rolled over here. Stochastics rolled over here in 2015. This right here. Okay. 2015. So that's down here. And what happened to MACD? MACD rolled over. Is MACD rolling over right now? Bearish? So the markets don't move in one day. Still plenty of time for this to peak, of course, but I don't see any reason to get worried at the moment. If junk bonds and high yield corporate, this is always my go-to. If junk bonds and high yield corporate are moving higher, that's telling you that these investors don't see a market that's dropping precipitously. They are risk on right now. This is not risk off like over here in February. Okay, junk dropped down. If we start to see junk dropping and the indices were rolling over, then I get a little bit more hesitant. Let's take a look at Bitcoin. What's Bitcoin doing? Okay, Bitcoin just pulled back a little bit, but it is in a descending channel, okay, which is bullish. The 921.50 are all below, up and to the right. Okay, so at some point, but Bitcoin's probably going to come back up and test this 123 area. Let's look at breadth. Breadth did pull back today. Earlier, breadth was lower. Okay, now look at this. Look at the difference already. So I didn't buy puts at the low of the day. That would have been a mistake. Follow the rules. Okay, look for dips. Dip is getting bought. Okay, let's go take a look at Trace now. Let's see what dealer hedge flows are turning up. This actually might be a good entry for a long. Okay. I'd like to see a little bit more data, but this looks pretty good. It would have been very easy to just buy puts here. Okay, it would be very easy to buy puts here. Getting scared or thinking there's more to this without doing any kind of analysis. So we just talk for 5 minutes there, maybe 10. Looking at reasons why the markets would roll over. Look at the breadth. Breadth all turned back up. SPXW.
Well, I actually think there is a case for the Fed to be easing now. You know, if I were to sit around that table next week, I would be making a case for the Fed to ease, or at least.
Okay, not yet. Just going to see a little bit more.
You know, Chris Waller made a case for easing relatively soon. He's a governor on the Fed. I thought a lot of what he said was relatively.
I'd like to see a little bit more price action. Okay, MP turn back up. Because that was kind of strange. Look at the New York Fang. I don't like the way this looks. I will say that. I don't like how easy this was to roll this over. Okay, so New York Fang, look at this. This was a entirely red candle. It's in an upward sloping channel. There is divergence. But all of these stocks are bouncing. Pretty wild. Okay, we got Apple bouncing. Okay, so you see it as a wick. You'll see it as a wick underneath the candle. If we look at the 5-minute. Okay, the 5-minute starting to show some signs. Tesla just bounced. Tesla has earnings tomorrow. Sometimes just waiting and seeing if the market actually starts trending downward. Still kind of early. Yeah.
I'm going to make an argument that the Fed should not be cutting interest rates. It's right to hold the line. And it's not at all clear to me that a rate cut in September is going to be the right move to make. And here's how that argument goes. You know, the low point of inflation is so far in this cycle. We hit it almost a year ago in September of 2024. The Fed's preferred measure of inflation hit 2.1%. And we bounced off of it. We haven't been back near that. The core inflation rate, which is more stable, which takes out food and energy, hasn't gotten below 2.5%. I think there's a risk that we're not going to get near the 2% inflation target in the foreseeable future for 3 reasons. One is tariffs. A lot of economists say.
Mondo, check your DM.
I think tariffs are attacks on supply chains. I think there are long run effects that.
Yeah, no problem.
Medium run on goods prices. I think the Fed's independence has already been compromised. And Greg mentioned Chris Waller making the case for lower interest rates. Chris Waller is reversing.
Okay. Good morning. Good morning. Okay, EXC you're looking at there, Nick? Okay, EXC. Some of these stocks on the move here. EXC, yeah, it's turning the corner, broke the downtrend. Exelon. Let's see what kind of earnings they have. EXC. Yeah, this is occasionally on the IBD 50, Nick. Pretty sure, right? EXC. EXC. Exelon. EXC. Utility services, EXC. They have good metrics, all 4 metrics green. I like when that's the case. They beat the top expectations last time. Exelon, utility services, energy generation, Con Ed, Pico, and BGE. What is that? BGE, is that Baltimore? Baltimore Gas and Electric? Is that what BGE? Anybody have BGE as a utility service? Is that Baltimore Gas and Electric? Okay, all of these are bouncing, folks. All right, so these are all starting to bounce. Let's take a look. Microsoft. Okay, Microsoft has been on this hell-bent price action for 13. This is week 13. Okay. The most that we see is a pullback to the 9 EMA most of the time. If you look at Microsoft, okay, is this going to be another day? Could be some distribution. I'm trying not to get so focused like a microscope on price action until it breaks the 9 EMA decisively and gives us a really red day. These dips keep getting bought. So if I were I noticed this about 2 or 3 weeks into it that it wasn't losing the 9 EMA. I kept looking for a base, kind of like what I was looking for on CoreWeave early on. Different animal, of course, but CoreWeave, I'm expecting it to base up here somewhere. It lost the 50-day, so the odds go with the basing action for now. I don't see AI and the need for server space that runs all of these big Blackwell chips and servers that SMCI is putting together and TSSI for Dell and all these other big companies. Not every company can afford it, right? So CoreWeave is probably going to do just fine. It just ran up so fast. Everybody jumped in that we needed to base first. So it looks like it's going through that process right now. So anyway, looking at Microsoft, like I was for CoreWeave, once it broke this uptrend, we started looking for a base. It ran too fast. Now Microsoft has just been in this upward trend for 13 weeks. So just looking for this to give us a signal. Probably going to bounce again. That's what it looks like right now. NVIDIA looking for a wick underneath the candle. Okay, we got a wick so far. We got 3 days off the high. Okay, so that's not the most positive. So at this point with NVIDIA, you could get tricky intraday and trade for the bounce. Or what I'm looking for right now is what happens. Does it pull back to the 21-day? Does it bounce 2 or 3 days later? Does it wait until next week to make a move back up towards the highs? Okay, in the meantime, you could trade it intraday, right? These dips. This looks like a catching a falling knife. The difference between catching a falling knife and buying the dip is this is no longer trending upward. It's starting to show signs of breaking the uptrend. So I don't want to buy the dip in that case, right? This could probably trap you. So buying these dips on the way up, it kept holding the 9 EMA. So even if you didn't buy this day here, where we had this red candle and the next day was white, if you didn't buy that red day and waited for the next day, it still started the bullish trend. So buying the dip made sense. Let's take a look at Netflix. Netflix looks like it's not doing so hot. Netflix look like it's gonna lose the 50-day. Okay, looks like it's gonna lose the 50-day. Okay, let's go look at the S&P again. Okay, hedging flow is just kind of sitting here. All right, we're already starting to fade a bit. Nothing yet. Nothing yet. Okay. SPY. Up, down volume. Okay, let's look at the New York Stock Exchange, NYA. Okay, NYSE. 4 days sideways along a flat 9 EMA. Okay, IWM. What's IWM look like? IWM. Okay, Doji. So right now it's not giving us a trend. Okay, I'm always looking for a trend, whether it's intraday or on the daily. Let's look at the 60-minute time frame. Let's look at it this way. Okay, so you got a flat 20 EMA. So that's telling you right there that it's going to be choppy, IWM. SPY, 60-minute. Okay, back below the 20 EMA. Just take it easy. The Qs led last week. We're a bit stronger. Now we're below the 20 EMA. New York FANG components. New York FANG. Flat 20 EMA. This could be distribution up here. Okay. Distribution doesn't happen in one day. Then the 20 EMA rolls over and starts to move below the 20 EMA on the daily. Then you get a downtrend. So right now it's telling you to just be cautious. Peloton. Okay. It's just getting back above the 20 EMA. Okay, Peloton. Flat 50-day, flat 9 and 21 day mostly. Okay. Yeah. Ow. Stop. I fed you. Here, there's food right here. Cat's getting a little bold there. All right, so Tesla's starting to bounce. Tesla has earnings tomorrow. You know what it feels like? It feels more like betting. Something's going to move rather than a trend that we can trade. Okay. Tesla, maybe this develops into something. Tesla coming off the low. We should know pretty soon. It needs to get back above 330. I know I realize if you're scalping this that you're going to miss, a couple of points, but I'm just a little bit more discriminate right now. Okay, Tesla. Tesla. Oh boy, let's see. Tesla. Just feels the summer. It just feels like summer. A lot of my son's friends, parents, they're on vacation. They're doing things. Not that they're investors. Actually, there's a couple of them that are investors and day traders. Found that out recently. It's pretty interesting. One of his good friends, he's always trading Tesla. He goes short or long, and the kid's 15. 15 and thinks to go short a stock. That's pretty wild because most people just think you go long, right? They don't think much about shorting. His name is Lance. Okay, I'm not gonna bite. I don't see the bullish trend yet. I don't see anything. The dip gets bought. We're rolling over right now. Apple trying to push. Took a lot of profits off the table, so I don't want to put too much. I'm at 78% cash now. Okay, so I've been taking things off. Was at 50% cash just 2 weeks ago. I kept accumulating. I kept telling you that I wanted to reduce into the month of August. I'm not talking about my 401k. I'm talking about day trading. I had a lot of positions open. Okay, let's see what Trace is doing now. Okay, so you can see the dealer hedge flows are moving sideways. That's not saying sell, sell, sell. You got support down here around 62.60. Very sticky. Highlighted that this morning. Let's see what the 0-day looks like. 0-day, pretty much the same thing. Okay. So we got support down here at 62.60, resistance up to about 63.15, 63.20. If for some reason we were managed to get above that, there's nothing overhead. You can see there's nothing overhead up here. I don't see that happening. More than likely, what's going to happen is we're going to stay inside this zone. Let's see what Brett had to say. I didn't really read because he was late this morning. Tuesday, let's see. We got Jay Powell speaking. 63.25 resistance. Support 6,300. So that's a very narrow range. 25 handles on an S&P.
Brian, when it comes to owning General Motors, do you have a preference for it? It sounds like you're still, sort of maybe reluctantly,
Okay.
despite a lot of headwinds, still positive on the stock. How does it then compare versus a Ford or some of the other competitors in terms of whether you want to own it in your portfolio?
Yeah, I think just taking a step back, I think it's very difficult to own automakers. I'm speaking more for what Mary Barr and her team have done, not necessarily for the stock itself.
62.50 support. Okay, so that makes sense. All right, so he's highlighting this positive gamma here. A lot of puts bought, long dealer puts. Dealers long the puts, so the street is short those puts. Okay, so he's highlighting yesterday's closing note. Let's see what this has to say. Okay, so yesterday we had a rapid move up. Brent talking about here. Quiet pen near a 99th percentile. Okay, 99th percentile. Should always pay attention to that on trace. We'll talk about that in a minute.
Inexpensive and a lot of times inexpensive for a reason, but when you take a look at GM in a worst case scenario this year at 8.5 earnings dollar stock, you're starting to get to the point where risk can be appropriately priced in for some of these things for sure.
Gotcha.
Open? Interesting.
The number of new vehicles on the road versus the number of existing vehicles on the road. Brian, thank you so much. Appreciate it.
Good, thank you very much.
Open had 3 million. 3 million. Okay. So we had 3 million contracts in open yesterday. It's a $3 stock. Largest single stock volume in 2025. Huh. Interesting. Risk off below 6,300. What's the S&P at right now? Okay, we're below 6,300, so we're risk off at the moment. Even though junk and high yield corporate aren't giving us a bad signal. So he was talking about open. All right, so open. Wow, look at that volume. What? Look at that. Look at that volume yesterday. Wow. That's crazy. Yeah, when stocks like this go vertical, you know that we could see some weakness in the short term. Not always. Open. Okay. So back to Brent's notes here. I know this is going to kill your eyes going back and forth. Okay, there's nothing down here below. Looking for a tag of 62.50. All right, so 62.50. Okay, we need to get back above this level, 6,300. Okay, so back above 6,300 is what I'd be looking for. If we can manage to run, as far as buying dips, looks like this wants to go. Looks like this wants to go here. So, Frano, I was talking before about taking SPXW. If I did, I'd put a stop on it if we lost this level here. With 0 day, obviously, because you've traded it, the premium can go against you real quick. So I'm going to try something. I'm going to see if we get a rally here on SPXW. Looks like we're starting to turn up right now. SPXW. I'm going to buy a few handles out of the money. Okay. So I'm going to go 0 day. SPXW, SPX. Okay, so we got a fair value gap right there. Fair value gap. I'm going to look at where is the high. I'll go 50%. Okay, so 50% is going to be right around 6302. 6302. Let's see, we're starting to go here. We're starting to go. S&P, so 6302. Come on. 6302. Okay. All right, we're starting to go. Okay, I'm going to buy some 6305s. SPXW. $63.05. 420 fill. Oops. Putting this in the wrong room. Sorry. Why is that doing that? Okay. Okay, so if I lose 50% of this, I'll give it $1. Actually, I'm going to give it $1. $1. Stop. All right, so if this loses, if it gets back to 3, I'll take it off. Yeah, weird. Okay, let's keep an eye on the hedging flows, obviously. We want to look at hedging flows. So we need to get back above 6,300. This could turn into resistance, of course. Okay, there goes Tesla. Tesla's popping. Okay, I'm not going to take a whole lot of risk on. I'll select a couple of names. I'll do maybe S&P, Tesla maybe, but I'm not going to do a whole bunch of new names. I'm not good at juggling like 6 balls at one time. Okay, I got to take a 2-minute break. I'll be right back. Watch the S&PX. Okay, S&P on the move. Okay, those are up $1 already. Uh, 150. All right, so we're on the move here. Okay, watching. Okay, Tesla just popped up. Okay, let's go see what's going on here with hedging flows. Okay. So it's one thing to guess. It's one thing to guess. It's another to see what dealers are actually doing. That's the great thing about the Alpha platform from Spot Gamma that I've been using. So I've been using it more to help everyone. Okay, so I'll just go through these real quick. Okay, you can see Tesla. You see the flow is bullish on Tesla. So I'd like to see that continue to trend during the day so we can buy dips during the day. Palantir, nothing yet, I don't think. Palantir. Yeah, Palantir is still off a bit. Let's see what Microsoft is doing. Microsoft. Here's Microsoft. Okay, Microsoft looks good. Okay, so the dealer hedge flows are update every 10 minutes. So you need to use Hero if you're using this platform. You need to use Hero. This is the real-time hedging impact. So this is updated real time. And the purple line is just telling you what dealers are going to do. If dealers start hedging more bullish, you'll see this turn up. Let me turn off. Do it for Y. Okay, there we go. Much better. Okay, so you can see the hedging flows. Hedging flows. You could argue that hedging flows and the markets turned at the same time. So I want to see this start to outpace price action. So I want to see the purple line start to accelerate faster than the white line. That indicate that dealers are definitely pounding it, looking for more upside. Okay, so SPY. SPY's, I would keep an eye on SPY too. SPY, hedging flows. Okay, watch for that to pop up a bit more. Let's see what happens here. Okay, there goes Bitcoin. Bitcoin's on the move. Bitcoin. Bitcoin turned back up. So watch Coin. That had pulled back recently. Coin. Okay, COIN. So still looking for a base up here. If it starts to turn and take off, it is what it is. Bitcoin. Let's see what junk looks like. JNK. Okay, HYG. Okay, HYG looks good. All right, Tesla turning. I see a few people going long Tesla. I already have shares on Tesla. Okay. Bollinger Bands are still fairly tight compared to some of the previous price action we saw back in February, March, April. So the only thing I'm trying to point out is that I'm going to do an iron condor most likely on Tesla. 310, 350, something like that. Short strikes. Okay, all the New York things are showing signs of short covering, but not follow through. Not follow through volume yet. Buying. So we're seeing short covering. All right, watch the S&P. S&P here, flagging. Okay, it looks like Tesla wants to go. Okay, let's keep an eye on the flow on Tesla. Okay, Tesla fading. The flow is fading at the moment since 10:36. Okay, let's take a look at the tape, see who is leading in terms of Equity Hub. Okay, so let's see. Open is starting to get options volume again today. Open. Somebody just mentioned Open a few minutes ago. Was it Jim? Open. Yeah, Jim mentioned Open again. Option volume. Call side heavier weighted than the put side. Okay. Gamma notional, NVIDIA, pretty high. Okay, Tesla's not even on the list right here just yet. Tesla. That's interesting. Okay, here's Tesla with 91 million. Okay. Top daily notional. You see Tesla right here. Here's Tesla here with 322,000. Top options volume 322,000 on Tesla. Okay, we got Netflix turning. All right, so it looks like a little scare there. Shorts are starting to cover. Shorts starting to cover. Microsoft getting some action. Let's see, is it on the list here? Microsoft, I don't see it. Core Scientific. Okay. Palantir, 103 million already. Palantir. Netflix turning up quickly. Netflix. Okay. Gold. Largest daily trades. Interesting. Gold and the 20-year. The Qs got the 600 call. 7.9 million on the Qs. 7.9 million on the Qs. Okay. Somebody bought 5,500 of the. Actually, they're selling the calls. They're sold calls here. At what strike? The 600 strike. So somebody's selling the 600 strike Qs. Looks like a Russell. Looks like a Russell trade. 600. All right, that's pretty wild. Somebody's selling the 600 call. Tesla still hanging in there. Tesla. Let's go here. Tesla. Watching the flow, needs to turn back up. Tesla. S&P, very, very keen on the S&P, looking for that to run up again. Okay. I'll just talk to you about what's going on in the background. See junk bonds while we're waiting for the S&P. Junk bonds are higher. High yield corporate is higher. We had breadth improving. At the start, breadth was pointed lower. Now we got breadth, big caps, mid caps, small caps, and NASDAQ all rising. Okay, so that's looking good. Breadth is improving. Let's see what up-down volume looks like. Up-down volume is still mixed. 1.5 on the NASDAQ composite, 2-to-1 up volume on the New York Stock Exchange, 1-to-1 down on the SPY, 1.8 down on the Qs. Okay. So I'm not going to take on a whole lot of risk here, but markets are pretty flat for the most part.
I did have a chance to speak to Pascal earlier, and he did talk about the investment and sort of why he sees the push to reshore as
Okay, got resistance overhead. That's a 96 percentile, 97 percentile. Okay, positive gamma is growing up there at 63.10. You see the difference between at the open? Over an hour ago, we had about 10.9 million in positive gamma. Now we've got 26.7 million. So that's some positive gamma on the dealer part. So if we start to move higher, the dealer is going to have to buy underlying a basket of stocks. So we'll look at this S&P equities, a basket of S&P equities, or buy futures. They can buy futures, I guess.
When I did talk to him, though, I asked about the tariffs and whether or not it is a threat. AstraZeneca seems to be a little bit more protected because it already is looking at
S&P, no follow through yet. S&P. Okay, we got a lower high. I got a lower high on the S&P.
I was only commenting on our company because we are so much invested in manufacturing in the US already that is, to some extent, we're insulated and will be further insulated with the investments we're making right now.
So that's one of the areas to focus on, right? Is the investments that they're making. And I did talk to him about whether or not that means that now it's every country for themselves and whether
Bitcoin still rising. Bitcoin. What's Coinbase doing? Let's take a look at Coinbase. Hedging flows on Coinbase. Okay, that looks okay. Coinbase. I'm just adjusting this so it suits my perspective at the moment. Okay, Coinbase looks like it's going to make a higher low, higher high. Bitcoin is pushing. So let's go take a look at Coinbase. COIN. Okay, still flagging at the 90 EMA. Riot, a bit higher. Mara. Okay, that's all right. IBIT, IBIT. Okay, a little bit higher. Trying to break higher. IBIT. I have a position in IBIT. Okay, I don't like the risk right now in the market. Okay, we're not getting any kind of follow through on these upward movements on the S&P, for example. S&P. There's no follow through. Looks like a bear flag could roll over very easily. Daily. Okay, RSI is kind of flattening out too. RSI. MACD's flat. Stochastic's flat. Be very easy for this to pull back. I'm starting to lean more towards pulling back, only because we've been up for 3 months now, 4 months since the April 7th low. We've gained 32%. We're going into a period of the year where we have usually seen weakness into August. And they start selling some of their positions at highs, keeping it up there. Very directionless at the moment. So it's a bit more risk because we're not trending like we were over here just a few weeks ago. Moving away from the 9 EMA. Right now, we're just kind of hugging it, just sitting here. Bollinger Bands coming together, telling us to look for consolidation. And we do have breadth and junk bonds, high yield corporate, telling us that everything's okay. I just don't see the advantage right now. With 1-to-1 up down volume, that's what's tick cumulative. Tick cumulative is flat. All right, hopefully we'll get a direction here. Domino's Pizza. We just got some Domino's yesterday, so maybe it was my order. We got this going. Domino's Pizza. That's a weird looking chart. Don't like that chart. What's JP Morgan doing? JP Morgan? Okay. JP Morgan. All right, so we're starting to move back up. JP Morgan. I like this better on the dip. JP Morgan. Okay, JP Morgan looks good. Let me see what I can do with JP Morgan. JP Morgan. Okay, so tight Bollinger Bands. Tight Bollinger Bands. Let's look at JP Morgan. JP Morgan. Okay, nice little bounce there. Let's see if we got any buy order blocks this morning. JP Morgan, just waiting for that to display. It's a little slow lately. All right, so we got buy order blocks. We got supply just overhead. Okay, nothing. The market's just kind of stalling here. Okay, JP Morgan starting to push a bit higher. Maybe I'll join Susie with JP Morgan. JP Morgan. It's got supply right overhead, so it could get rejected there. JP Morgan. I'll go out a little ways. JP Morgan's earnings are out of the way. September 295. That's 295s is a 50 delta. JP Morgan. 50 delta 295 305. Let's see, buy. Could sell some premium instead. Probably a better idea for now. Let's see what I could buy. What could I get? And let's see. I don't want to do September. Let me go 30. Let me go 24 days. Let me see what I could sell here. JP Morgan, just looking at selling some 20 deltas. What can I get for a 20 delta? Sell a 20 delta. Sell a 20 delta. Puts. One, two. 280 is a 20 delta. Okay, so 280, 280, 270. Let me see what that's worth. Let's see. Nah, it's not worth it. It's not worth selling premium on that one. I'll probably buy some calls. Okay. I'm just looking at JP Morgan. It's ticking a bit higher. It's right at resistance. So I'd probably $3 out of the money is a 30 delta. 295s. 295s. Okay, it looks like it's going to go here. JP Morgan. JP Morgan. Okay, I'm going to buy some JP Morgan here. Okay, 295s. 295s. I bought some 295s for not so fast. Hasn't filled yet. 295s. Trying to split the bid here. Vertical. I'm going to do a vertical instead. Let's see. Okay. Bought some 295s for JP Morgan on the. Okay, 480 fill to put a stop, 20% stop, dollar. Probably better if I had gotten off this stop right here, off of this buy order block. Okay, so put a stop underneath this. 495, 295, 295. That's 2 to 1, 2 to 1. That buy order block just disappeared. Okay, so Tesla looks like it's putting in a higher low right now. Tesla. Let's see, Tesla. Let's go look at Tesla. Okay, watching the flow on Tesla. Still, the flow still faded. Now it's starting to turn back up. Okay, so if you like Tesla, buying this dip might work. This little dip right here, Tesla. Okay, let's come back to this one, Tesla. Okay, I'm taking it slow, a lot slower than usual, only because the markets aren't really cooperating. All right, Tesla, a little bounce there. Okay, S&P, you need to see this break back above 6,300 and stay there. Okay, so we're right at 6,300, getting whacked on the head. We've got fair value gaps on the way up, so people trying to buy in this, it's moving too fast. Got a buy order block. Let's see how far we can go with this. S&P, 0 day. 6305. 6305. $63.05. 0 day. 550. Looking for more upside. Like to see 100% on these calls. Okay. SBSW starting to move higher. SBSW higher. Okay, SBSW had a little dip there. Now it's starting to move a bit higher. What's going on? Kramer's still yapping. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is a slow going Tuesday, the 22nd. Slow going because the markets faded big off the yesterday's high. So we're very cautious that this doesn't turn into another day like yesterday. So far, we're hanging in there. We got a wick underneath today's candle. We're starting to push a bit higher. but we're stuck right at 6,300. It is 11 o'clock, straight up 11 o'clock.
Jim Beam, owner Suntory Holdings, to discuss his outlook for the industry as well as expectations from ongoing U.S.-Japan.
Okay, markets just seem to be stuck right here.
Once again, a sub 1% range. 19 straight days is the longest streak we've seen that since December of last year. But for the time being, you can see the yield backdrop pretty friendly, 434, and the VIX south of 17 once again.
Feels a little quiet ahead of the big tech earnings. Nvidia is under pressure, along with Broadcom, Palantir, and Amazon. We'll start with the impact of tariffs, though, on earnings.
Okay, here's the flow. Nvidia's flow.
What did you learn?
Not trending. It's bouncing around at the low.
Indication in terms of the cost impact of the tariffs in the second quarter. Look, they beat on the top of the bottom line.
Tesla.
But it's the metrics of the quarter. This really shows the impact of the tariffs.
Tesla.
If you look at these numbers, it's pretty clear that General Motors, it had to eat a lot of the costs that go along with these tariffs. Total profit down 31.6%. North America profit. Remember, North America is the profit driver for GM, down almost 50%. Automotive free cash flow down 46.6%. All of these in comparison to Q2 of last year. Here is the GM CFO, Paul Jacobson.
IWM flows are starting to move up. IWM flows are starting to turn back up.
Tariffs are obviously a big story for us, as we've seen throughout the quarter. They impacted our quarter by about $1 billion, $1.1 billion, in line with our expectations that we laid out earlier in the quarter when we talked about a $4 to $5 billion impact for the year. So we're in a bit of an adjustment phase right now.
By the way, General Motors is expecting the tariff impact. They thought the greatest impact would be in Q2. They now believe that will
Okay, dealer hedge flows gradually moving a bit higher. We've got resistance overhead at 63.10.
Production ships are going to be coming over the next 18 months. And look, they've done some moves here, and they've made some changes in the business that have positioned them to deal with this as good as possible, as well as possible. Look, the transaction price on the average vehicle sold in the second quarter was more than $51,000.
Kohl's big move this morning. Kohl's.
As much as some of their competitors, and yet when you take a look at shares of General Motors, keep in mind the bottom line is this: trying to get some handle for investors in terms of where they see tariffs playing out in the second half of this year. With regard to the rest of the year and their guidance, GM
Kohl's nice little bounce.
Remains the same, $10 to $12 billion. EPS guidance, $8.25 to $10.
Okay, Kohl's got the bounce, starting to move higher.
None of that has
Looks like
changed.
some sellers.
The bottom line is this, guys. The cost impact is substantial. And the question becomes, as GM and other automakers try to take some steps to mitigate that impact, how long before they have some certainty here? This really was the overriding question from analyst to CEO Mary Barra during the conference call today.
Meantime, Phil, any read through on this to Tesla, especially given some of the cautionary warnings we've gotten last
Kohl's
about their exposure to things like batteries?
No, I think we're going to see a lot.
Okay, I bought some shares, Kohl's.
Including Tesla, when it reports after the bell tomorrow.
Stop.
With regard to the impact of tariffs, that is
$12.
$12.
There are
a couple of questions that are out there. One, obviously, robotaxi. Elon Musk will be on the call. No doubt he'll talk about how optimistic he is about the future. But are there any definitive benchmarks that he can share with analysts that will make people say, okay, we understand where it is since it just started
Okay,
in
KSS.
and what's expected this
Okay, I bought some shares here. Kohl's, KSS. Got filled here at 14.10. I'll put a stop underneath 12 if it loses this level right here.
Because there have been a couple of reports out of Europe that the big declines that we saw in the first half of this year, the year-over-year declines, that may
60-minute.
stabilized a little bit. And in China,
60-minute has been gradually grinding higher. Okay. Tesla stalled. Okay, let's look at the New York FANG components. New York FANG components. The index, New York FANG. Still in an upward sloping channel. Northrop Grumman on the move. Northrop NOG. What are the drones doing? I'm not crazy about that. UMAC pulled back yesterday. followed through on the move from Friday. Now we're looking for a bounce. What's Oklo and those guys doing? Oklo. Okay, looking for a bounce. SMR. Okay, Apple's trying to bounce. Apple's got a wick under today's candle. It's a doji. It's a doji. Wick on the top and bottom. Okay, back to Trace. I know this is killing your eyes going back and forth, but let's keep an eye on S&P. We've got a lot of long gamma added here. You can see that we just 60 minutes ago we had 2.9 million at 63.10. Now we have 36.8 million. Dealers are long at that level, so a move up towards that level, I imagine they would start buying futures to hedge. Netflix, no follow through yet. Netflix.
All of this, especially as we get more earnings this week, how quickly these manufacturers can ramp output. As Lockheed Scott noted, the recently passed budget and tax bill will incentivize more U.S. and domestic production. Lockheed's investing more, so are the others. This was also a big key topic on the RTX call that just wrapped a little while ago. Sarah? Yeah, I mean, that's a good problem to have. Thank you, Morgan. Morgan Brennan.
Okay, just watching the hedging flows here, S&P.
Joining us here post-9 is Alexander Wilson, Elizondo, Goldman Sachs Asset Management, OCI Multi-Asset Solutions. What are you telling clients about stocks at record highs and where the opportunity is from here?
S&P looking for this to launch a bit.
When you look at the market, it's done a tremendous job of reading through a lot of volatility, noise. There was a very low hurdle rate coming into earnings to outperform. But that being said, there's a couple of things that are making us a little bit nervous on the margin. One is when you look at fund manager surveys or risk appetite and sentiment, things have shot up to record highs in 3 months. So really quickly, tactically, people have reinvested. And further, the structure of the buying. And when we look and see the amount of buying that's coming from retail, it's coming in at much higher levels than it has in the past. So over the last month, we see about $50 billion of buying from retail. It's about 40% of the market share. And in our minds, that's very vulnerable to changes in the labor market. So you think short-term we're due for a sell-off? A little bit of a correction, yeah. And it would be an opportunity for us to continue to add back into the portfolios.
We mentioned Jan's note this morning talking about the labor market approaching what he called stall speed. So the thinking is if payrolls really do soften, and I think he's looking at 90K as maybe a new benchmark in the months to come, that there would be less freedom for retail to sort of play in stocks?
Yeah, there's a very high correlation between the labor market and, the ability to want to be invested in risky assets. And so we think that there's some vulnerability there. So what makes you so structurally bullish, like longer term? Yeah, when we look, beyond 2025 into 2026, the cocktail of policy is much more supportive and accommodative for risk assets. So whether it's monetary policy or seeing the one big beautiful bill impact start to come to fruition, we see a lot of reasons for high velocity capital to come and play into broader growth in the economy. I did mention earlier this CapEx, the spending by corporations, has really surprised, I think, in a positive way. There's a great chart going around, and the Treasury put this out, that first half of the year, more than 16.5% rise in CapEx, capital expenditures from companies. They're spending on plants and equipment, on research and development. You see that going further? Is that the kind of growth you're looking at? Yeah, exactly. And in our minds, the level of stimulus and support will allow corporates to continue to invest in longer term structural themes. And so it's one of the many reasons that we're confident about staying in equities. In our portfolios, we're positioning ourselves with overweight equities and reducing credit exposure.
So today, just taking it a little bit slower. It's a doji day, a lot of tight price action. The Bitcoin is pushing a bit higher. I would like to do something with Coinbase, but I am taking it a bit easier. We've been taking profits off into strength for the last 5 weeks now.
Which doesn't sound like an environment that we are watching with our own eyes.
I'm like 78% cash. My trading account, my retirement accounts, haven't done anything with that. Those are all fine.
Watch what they do, not what they say. Exactly. do you think? Do you think
Tesla's
the
starting to
new provision
fade a
of the
bit.
big beautiful
Tesla.
bill on expensing, is that the driver? Yeah. So I mean,
Nvidia
one of the big
stalling,
drivers in the big
Apple
beautiful bill
stalling,
is,
same thing with
you know,
Microsoft. All of these look the same.
expensing and R&D is, you know, very accretive and beneficial to corporates. I also think that there has been a level of, you know, calmness that we've achieved, so lower volatility in the market, despite there being no big changes. We're still right back to the original
Coinbase,
tariff rate of the second.
what's SPY doing?
But
SPY,
there's more information that people can operate in an
SPY
environment
making
where
higher highs and higher lows, but not trending like we've seen recently in some of these names, like Microsoft, trending from the open and just keeps going.
I mean, it's always a possibility, but a lot of that is in
Price action is kind of sticky in this area. You would expect that when you see all of this gamma.
one of the reasons why, you know, we're a little bit tactically
Positive gamma overhead at 63.10. Negative gamma at 63.20. This is dealer positions. Dealer long at 63.10. Short at 63.20. This level started building here. I didn't notice this before. 63.05. Notice the change in the last 60 minutes at 63.05. Okay, notice the difference. Can I get that?
Especially for retirees, you know, people who are looking for consistent income to go without taking on the extra level of risk that you would get in equities. You barely mentioned tariffs. Is that part of your call here? So tariffs are part of the call. You mentioned, you know, Jan's note earlier. We've been focused on, you know, growth coming down towards 1%, core PCE coming up to 3%. But, you know, again, people are really looking forward to the next element and phase of policy. This is behind us. You know, we just started seeing some of the impacts coming into inflation. I do think that will keep the Fed sidelined a bit, but ultimately we do expect them to start, you know, cutting in September once they've been able to see a couple of prints of normalcy.
Okay, let's see what this does. 63.
That's starting to, you know, decelerate from here. Yeah, it feels like sideline for next week at the meeting.
63.30. So if they don't cut them, all right, somebody's been selling into 63.30. Wow, that's a big change from 2.9 to 3.6 in 30 minutes. 60 minutes, sorry. So there's probably some resistance there. That is 98 percentile, so highly probable resistance at 63.05, 63.10.
The CEO of Suntory here at Post 9 under brands like Jim Beam and Maker's Mark, the spirits industry is dealing with the impact of
Okay, AEVA. Those had pulled back again this week. AEVA. What's JP Morgan doing? JP Morgan looking for that to follow through. JP Morgan. All right, so JP Morgan turning out okay so far. JP Morgan. Okay, JP Morgan looking good. JP Morgan. All right. So JP Morgan buying the dip rather than the high. Much better odds. Because if this rolled over, we'd have a stop underneath VWAP at this point. Okay, JP Morgan. Let's go take a look at that setup again. JP Morgan. We talked about a few minutes ago. JP Morgan, stop below. Okay, looking for this to push a bit higher. JP Morgan. Okay. S&P, no follow through yet. Tesla's trying to do something. Okay, so the New York FANG looks okay. Bounce after a bullish break higher yesterday. We have an upward sloping channel in the New York FANG. Okay, New York FANG. So benefit of the doubt goes to the bulls. As long as we stay in this channel. If we start to lose the 21 day, then I'll start to scale out even more, maybe get more bearish. S&P's pulling back now. S&P pulling back a bit. Okay, so no follow through. No follow through yet. Get a little fade. Higher highs, higher lows, maybe. Higher highs, higher lows. All right, more chop, more chop.
Similar level.
Netflix just sitting here, threatening a loss of the 50-day. Netflix thought maybe it would get back above the 50-day yesterday. It looked like it was going to.
I think it's very important that we do the smoke-free transformation, where not only we offer better solutions for smokers, but also we somehow satisfy our
Oracle?
stakeholders. And I believe what Philip Morris has so far in the 10 years of transformation demonstrated that we can accelerate the growth, serve better smokers, offer them alternatives, actually address the very important problem from a public health perspective, while at the same time very general.
You can feel it. The markets just feel very sticky, not going anywhere. Okay, we'll go back to Trace. Okay, that's Gamma. Let's take a look at Delta. Okay. All right. Very kind of cautious day, 1-to-1 up down volume. Market's not moving much. Flat here. Okay. See if we get a bounce. Tesla's trying to push a bit higher. Tesla trying to push a bit higher. Watching Tesla. Hedging flows in Tesla.
I mean, there's so much importance with that lens that's on Alphabet due to the AI narrative. We see this team that Zuckerberg is putting into place the AGI, artificial general intelligence, which is really just the game.
Yeah, I had the same thought. Same thought, Corey. When did the Oracle start making chips?
Which is where Google comes into play. We think about early on in the world, the internet.
Yeah, when did Oracle start making their own chips? They're a database company, software. Maybe they acquired chips that they don't need. I don't know. Tesla flow is turning up.
But here's what I need to watch for in Q2. They could deliver several positives, especially with artificial intelligence.
Okay, watch for Tesla here. Could go. Look for a breakout higher. The flows are turning up now. Okay, you can see they're starting to move away. See that? See, this is what I look for. I look for the acceleration away from price action to indicate that dealers are hedging to the upside. This is Tesla. Okay, what do I have on Tesla that I want to maybe add to? Tesla, I have calls. Okay, those are turning up. I have the 25th. Okay, so we got earnings tomorrow after the close. Got the 335s. Okay, that looks good. Tesla.
Yeah, so when we look at Alphabet here, we can see that our green line 181 is one that's coming to.
Okay, there goes Apple. Apple popping.
Here, it was
beyond that point, then it became resistance. Old support became new resistance. And after the breakout to the upside, it once again was more of a floor. So these price levels can come back into focus many times. This is one of those.
Okay, Apple's turning up. Watch Apple. Let's go see what the flow on Apple looks like. Apple flow. Apple flows. Want to see this accelerating away from price action? Okay, I can move this around, so don't get misled by it being below price, because I can move that around. I can move it up here if I want. Just want to see this accelerate away from price action. Apple, it's top of the range, no big deal. Material sector, Albemarle, material sector has been acting strong lately.
190 to 193 or so. RSI, though, backing off a little bit out of that overbought area. Still short-term green trend line in play here. And also still really quite high overall as well in terms of our momentum indicator. Now we can see that the volume picks up here in this area around 193. So this could be a congestion zone for the bulls to look out for. And also the volume is heavy here around 175. That also coincides with our linear regression line and our orange 63-day exponential moving average here. So those are some downside levels that stick out beyond that 181 level that we discussed previously.
The technical trend for Alphabet ahead of that all important earnings report coming out tomorrow. Last but not least,
okay, JP Morgan. JP Morgan. Looking for more.
Crossover of the 13 and 26 weekly moving averages. And then upon further investigation, I'd like to layer on the 200 weekly moving average, which we haven't talked about too often, or at least I haven't on this network. And it's
okay, Netflix drifting lower. Netflix is losing the 50-day. Netflix.
And there was a breakout above that. In my view, that stronger technical momentum and a shift possibly to a longer-term bullish trading cycle. But I want to discover where that momentum really came from, and it was this buyout talk that's happening with U.S. Steel, the $14 billion buyout. Sparked some interest.
Apple trying to push. Tesla just stalled again. Tesla.
Being particularly asset rich, it could benefit from any high valuation sentiment. Certainly across the entire industry, there's other macro tailwinds that come with tariffs and trade policy, and if that's making tightness.
Yeah, the markets are not following through. Not crazy about the way this is trading.
Little caution with it overcoming that key level that I'm looking for, which is the 200 weekly moving average. So I want to see that to continue. So the way that I would position this is really looking for a neutrality type of trade, which is neutral in the short term, but then bullish in the long term, which would be via a cash secured put somewhere relatively close to the money, about 45 days out. Then that will help me, one, capture some volatility, but two, understand the rest of the picture, what happens with tariff and trade policy is that it's rather uncertain, and see how that actually translates over into work.
The New York Fangs are just sitting here, choppy. Most of them off the lows, but still very choppy. Nvidia off the low. Broadcom's trying to turn. Apple's trying to do something. Doesn't feel like institutions are present at the moment. Present and accounted for. They're just kind of, the market's just sitting here. Okay, let me go back to S&P. Okay, just watching.
So that's the first place that just stands out to me that I was going to discuss, in the segment here. But there's other areas, if you were having that more neutral outlook, that stand out to the upside as well. We're pretty close to one of them now, actually slightly surpassing it here. So as I said, this resistance area would become support here, 143. General lows, low point, breakdown point, highs once again, and about where we are today here. So that's one upside area, or rather around where we are right now in terms of price activity to keep a close eye on. Also 158 here, we can see high point, breakdown point, high point there as well. So that was another upside level that was sticking out to me. We can see RSI a bit short of that overbought area as well. The bulls would want a strong push above the resistance with a corresponding push in the RSI, preferably entering the overbought area as well there too. So if we were to look at our other studies here, volume profile, standard deviation channels, 143, that the area we're discussing, a heavier volume area to watch out for. Then it picks up once again around 150, 151 or so. To the downside, 135, not really the biggest volume area, but just below that, it's pretty heavy, starting around 132 to about 127 roughly. And to give a quick illustration to the 5-year chart, I meant to point this out in our first chart as well, but here's that 1326 weekly moving average crossover that Jessica was discussing there. We can also see a big breakout from a long-term downward channel, weekly RSI surging to the upside as well.
For all very different businesses, but very important stories. Thank you so much for highlighting those. Jessica Inskip and Rick Ducan, appreciate you for being here. Well, coming up next, so spotlight the case for junk bonds and why the high yield bonds may be a safer play than stocks. That's next. Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and
All right, Tesla's starting to move. Watch Tesla.
Thinkorswim and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach.
You're looking at Micron there, Tony? Okay, let me take a look at Micron. Micron. Precarious position to be. Micron could come back to the 200-day. It's sitting at the 50-day.
Tom White hosts a fast market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading 360 on St. Barnabas live from the floor of the New York Stock Exchange. It's time to spotlight the fixed income market. Joining us now is
Okay, look at the New York Fangs are looking a little better. Nvidia, Tesla, Broadcom, Snowflake showing higher lows now, higher lows. Futures doesn't look like it's going to go very far. If the S&P doesn't get going pretty soon, I'm going to take these calls off. They're flat basically.
Obviously a lot of attention around Jerome Powell. We think that if you take a look back, the yield curve has been flat for quite some time now. It's really back to the regime when we had much higher inflation. We've made a lot of progress on inflation, but not all the way down to the Fed's 2% target. So I think Powell has stated numerous times that he's going to be patient. His decision is going to be gap-based. But he's even alluded to the fact that he's probably holding off even longer because of the threat of tariffs. He doesn't know how that's going to impact inflation, if those higher prices from tariffs are going to filter through to the consumer. at the end, we think a lot of
Okay.
headlines
Mhm.
really having that.
Okay, Tesla's starting to move more. Tesla. Yeah, Tesla earnings tomorrow.
Over like a lot of the big headlines that we talk about in the world these days.
Okay.
And that, we do expect that we'll probably have one or two rate.
Tesla earnings are tomorrow. Okay, here we go. Tesla's starting to move. Tesla's on the move.
We've got that headline out of the way. We can have some of your thoughts about how you do see the world, and one of those is that you think that investors should rethink junk bonds.
Yeah.
Talk to us through that thesis.
Sure, absolutely. So, when the junk bond market really came to its birth, that title, junk bond, is a little bit of a derogatory, negative connotation.
Right.
So that stuck with it really for the next 30, 40 years. And we think that the market has evolved quite significantly. In particular, that the credit quality has improved. Even if you look at the rating agencies, they place 20 different categories of ratings, whether a company is going to pay you back or not. They drew a line between BBB and BB,
Right.
investment grade and non-investment grade. We think that in many ways is oversimplification. There's some very good qualities that they give below investment grading ratings to, some pretty heavily levered companies that may not be able to meet their debt in investment grade.
Okay, Broadcom looks like it wants to go here. Broadcom, we just checked that out. Broadcom, flow. Coming off the low, Broadcom. Yeah, it's okay. You can see that the trend. See the trend over here on the left. See how it's dropping. I'm looking for the reverse of that. I'm looking for the trend to just move up markedly. I don't see that. I see the hedging flows just sideways, which is telling me many of these stocks don't look like they're going to go anywhere. Look at Coinbase. Coinbase, flat hedging flow. Google, making a higher low right now, flat to slightly lower hedging flows. Tesla's trying to trend up, higher lows, higher highs. Okay, so there goes Tesla. Tesla's probably going to push a little bit more. It is sticky right around this 330, 331 area. No follow through yet. S&P stuck too. S&P is not going anywhere. Crushing theta, crushing premium, especially 0 day. 0 day doesn't get moving. 0 day premium just evaporates very quickly. So we need to see a move in the S&P pretty quickly. Otherwise, these calls, the S&P calls, are going to start to lose more.
So this leads us to companies that are crucial to the economy, crucial to their customers. So we own a good number of food distributors. They distribute groceries to supermarkets. We are have a good investment within the airline space, both in terms of carriers and the lessors. It takes a tremendous amount of time and energy to produce an airplane in this day and age. The people that have that equipment and are able to lease it out to their end customers, the airlines, are in a very good place right now. They're starting out as high yield companies, but it's important for them to get to investment grade. So they do what it takes to improve their credit, which benefits bondholders.
Right.
Oftentimes they'll get too successful and move beyond our yield targets. And then we have other, kind of smaller companies. We own a company that produces the credit cards. They don't issue credit cards.
All right, so I'm just looking at the New York Fangs, and they're just kind of just doing nothing. They're just sitting here. So whenever you see that kind of action, that tells you there's no trend. It's just blah. So trying to make something out of nothing, you're going to get nothing. Just going to sit here and get frustrated. Okay. Maybe they get something going after lunch. Tesla's trying to go, so maybe Tesla gives us something here. Tesla maybe gives us something here. Starting to move up a bit. Tesla.
over the last 30 or so years.
I have 335 calls, Tesla.
Broadly syndicated loan market, leveraged loans, and then private credit. So now, if you're an issuer, you have 4 different tiers in the marketplace. Highest quality go to investment grade, then high yield. So private credit and leveraged loans tend to be the lower quality issuers in the credit market. To your point, a lot of that came to be because of the regulatory changes after the financial crisis. The big regulators did not want systematically important banks lending to lower quality.
All right, Tesla, I'm looking for an exit on these calls, make a profit, and then sell an iron condor tomorrow.
Okay, which is why you obviously see some of the opportunity there with the rapid growth we've seen there. It's been a really fascinating chat. Thank you so much. We have to wrap it up there. We've run out of time.
Okay, there goes Tesla. There goes the flow. Look at the Tesla flow. Tesla flow ramping up again. Okay, Tesla flows are ramping up again. There we go. Nice little pop. Tesla. You can see the flows right here. Okay, Tesla flows are ramping up. You can see the nice trend. So we're going to get a pop. We're going to get it right now, it looks like. There goes Tesla.
Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest.
Okay, 335s are working on Tesla.
Schwab.com/coaching and start learning today.
Okay, Tesla, let's get going. Come on, Tesla. It just hit the high and got stalled again. Okay, watch JP Morgan. JP Morgan still dealing with this area right here. JP Morgan looking for a follow through. Okay, Tesla. Tesla keeps running into the supply overhead. I assume there's some supply overhead. Okay, let's see. Go to the 5-minute Tesla. Yeah, there was a wick right there. Probably some supply right there. See these liquidity grabs? These little wicks with the box around them. That's a liquidity grab. Portfolio managers, hedge funds, dealers, whatever. They push this up. People buy on the breakout and they reverse it back in, getting them to buy in this area so they can exit positions, do whatever they're doing. Don't know exactly what they're doing here, but Tesla isn't moving much. So maybe they're trying to get out of positions like I am prior to earnings so they can set up something for earnings. I'd like to sell an iron condor tomorrow. Okay, I have to base it on tomorrow's price action. Not right now. So roughly I'm looking to sell up here near 365, 360, maybe 355. I don't think we get through the supply. And then I'll sell some premium down here near the recent lows. That seems like that'll work. Tesla's trying to go now. Another thing about doji days, 1-to-1 up-down volume days, is you got to be patient. You could have a profit. You just don't get shaken out of your position. Watching Netflix, for example. Looks tempting to be scared and to sell into weakness, but looking for a bounce. What is that? PACCAR. Okay, going through the top 10 on the NASDAQ 100. Let's look at these real quick. PACCAR. That had a dip lately, right? A dip. We gap back above the 50-day. PACCAR, not interested, but is on the top 10 of the NASDAQ 100. Team Atlassian. Okay, that's turning flat base. I don't like it until it gets above the 200-day. Once that happens, then we can see a trend maybe up and to the right, 921.50 or all flat and below the 200-day. It's trying to turn. Team Atlassian. I believe they're out of Australia, right? KHC. Kraft Heinz. Okay, that looks good. KHC. KHC trending. KHC, Kraft Heinz trending. Okay. On Semiconductor, that looked pretty good this morning. On Semiconductor. On is trending. On is trending. Okay, that looks good. On Semiconductor. What's Micron? Micron, Tony's looking at Micron. Tony, it needs to get back above the 50-day. Even if it does get back above the 50-day, I wouldn't buy it today. The probability that rolls over, pretty decent. I'm looking at the same thing on Netflix. Okay, Netflix, I have a position on Netflix. Got above the 50-day, but still kind of like hanging here. It could roll over and continue lower. I have 1160 verticals that I sold, so I want this to move in the opposite direction. Tesla's starting to move a bit more now. Tesla. Okay, we need to get through this wick right here. Okay, so if we can get through this area right here, right now, that should do it. We need to get through this area right here. We're starting to push through it right now. Tesla. Okay, got buy order blocks. Tesla. Okay, we know where we are on the daily, so I'm going to zoom into the 5-minute. Okay, here we go. Here's your 5-minute. You got buy order blocks. Okay. So the rule here is, if there is one, the rule here is, if you're going to buy right here, where's your nearby stop? I would probably use the 20 EMA on the intraday 5-minute. Use the 20 EMA. It loses that, I'd be out. You got a buy order block there. Now, I would zoom out. I would zoom out and see what we can see. There's some supply right there. Let's see how far we'd need to go for 2-to-1. 2-to-1 move right here. If you were to buy right here, a 2-to-1 move would be 338-ish, 337. Okay, so it looks like we're going to get that on Tesla. If you bought the low here, LA was talking Tesla over here this morning, higher lows. Okay, I have 335, so I'm looking for Tesla to get a move on so I can take some profits off in the strength. Looking much better. Can we get a pop? Can we get a bop here? Tesla.
The very least, in case it does move higher by expiration and you achieve your max profit of $1.50 per share.
All right, that was a look at Circle Group. George Tillis, thank you so much. Really appreciate your time today. Coming up next, it is time for our 360 round, breaking down General Motors earnings. The stock is falling as the company deals with the cost of tariffs.
Buy order blocks. Got buy order blocks 40 minutes ago. Okay, your stop's underneath the 20 EMA. Five-minute chart, your stop is just below. Okay, that's at 3. I want to say 329. 329. There goes Tesla, starting to move. Okay, good.
Plus, get 24/7 live and access support by phone.
Let's see how far this goes.
Believe me, when it you'll love Pearl's Way. Exactly. I can invest and trade on my own.
Yes, and I want to manage some investments for me too.
Broadcom. I'm going to put JP Morgan here so I can watch it. JP Morgan. Okay, we're coming into the 12 o'clock hour. JP Morgan breaking higher. JP Morgan. JP Morgan breaking higher. Okay, let's take a look at JP Morgan. That's a trade from this morning. Okay, that's working. Okay, the profit and loss little thingy here is what I put on the chart right at entry. Okay, so moving above this level right here. Okay, entry. entry earlier. Entry right there. Stop if it loses this area. 2 to 1.
Welcome back to Trading 360. Time now for the 360 round.
Buy order block down here at the low. Okay, so you can see if you just follow this method, it gives you the setup. You get the buy order blocks early in the morning. You get a nice little follow through off the low. If you had taken it at the open, put a stop underneath here, you would already made your 2 for 1. So what time is it? 11:52. See if we can get a little bit more out of JP Morgan right here. Tesla's still moving. Okay, so we'll come back to JP Morgan in a minute. Okay. Need to get to 338. We got supply in between here and there at 335-ish. Not expecting a whole lot of the markets today with the S&P just sitting here doing nothing. Nothing. Tesla flow, let's see. Tesla flow is still pushing higher. If you just watch the flow as it accelerates away, price action is not accelerating as much as the flow is. The dealer flow giving us a bullish tailwind for now. Let me add JP Morgan here. What's IBM doing? IBM. Okay, the flow is down on IBM. Okay, so that's your signal right there to do nothing. Let's see. What did I just say? I was going to look at.
So I think that's the story of what's happening in the market. The underlying and the fundamental business, it looks strong, right? I love the fact that they're looking to mitigate 30% of the tariff weight over the next couple quarters, that they're making the right moves. Again, you hit it, the bad story and the bad side of it's the margins. 80% of that margin compression came from tariffs. The other 20 still came from regular business operations. So that's not what you want to see. But I think a lot of it is there's a lot of headwinds, right? There's still tariffs to be had. There's potentially a slowdown in maybe credit and buying, right, from U.S. consumers.
Okay, JP Morgan still pushing. JP Morgan still.
A little bit lower, maybe when it gets to the 6 times PE. But I just really think it got ahead of itself. The business is still strong. Still a lot of potential growth and
Okay, Bitcoin just below the morning highs. Bitcoin presently looking pretty good on the daily.
So I suppose we have to keep an eye on that as far as what they say in the coming quarters. I do want to also talk about what is happening here at home with some of the EV credits being phased out. The impact on companies like this. Bob, do you have any thoughts?
Apple, nothing yet. Apple, nothing. Nvidia, nothing yet. Nvidia flow is rising on Nvidia, so maybe we'll get a little move back up to 170. Looks like we could see that.
That is a huge number for them, and they are now sitting number 2 in the United States.
JP Morgan.
Deliveries just behind Tesla, which obviously is the dominant player in the business.
JP Morgan moving. Okay, here's JP Morgan. You see the flow looks really good. Okay, notice the flow in JP Morgan. Okay. Call wall's 300. JP Morgan. We've got 7 points to go.
Part of their portfolio of electronic vehicles is certainly here to stay, and they're investing in it in a big way.
So we're going to be hearing from Tesla as well as we get those earnings, as we get the first cap off the rank for the Mat 7 from that company. It's interesting, Bob, when you talk about Tesla and GM, really taking the crown this
JP Morgan. Okay, just keep an eye on JP Morgan because it is moving. JP Morgan.
So on that note, I'm just wondering, Tony, what your reports on the broader market are ahead of those Tesla earnings.
Yeah, I think from a broader market standpoint, and Bob hit it, it's been impressive what GM's been able to do in the EV market. 3-4 years ago, to be honest, I didn't necessarily think they can make that big of an impact and get to the point they're at just because of how dominant some other players we thought were going to be, whether it be Tesla, Rivian, Stellantis, any of those names. And that's where it's really been. GM is at least fundamentally
Okay, we're coming into the lunch hour.
Whereas Tesla, right, coming into it, it's a little bit more speculation of, is it the car company, right? And that's where kind of the
NVIDIA.
Valuation comes in. And so I think from an EV,
Okay, NVIDIA's starting to stall a little bit.
I believe GM, right, and is a name that you kind of want to wait and see, and maybe
JP Morgan.
jump feet first in. I think it's a bigger risk than Tesla's the other play, but where is that going to go? Is that going to go up $200? Is it going to go down $200? And so I think when you're trying to find a pure play EV, I think you kind of wait and see. You maybe play GM a little bit more than Tesla. Again, just because from a speculative standpoint, Tesla isn't trading at EV multiples or automaker multiples. It's trading at robo-taxi and futuristic plays. And so I think there could be a lot of carnage in that market, depending what comes out from those results.
Yeah, I mean, the question is whether it's a company or a tech company or an energy company, but we'll be obviously hearing from Tesla tomorrow. Tony Taparo and Bob Lang, thank you so much for joining us here on Trading 360. It's been an excellent chat. That does it for us. Download the free Schwab Network app available in the Apple App Store and tune in 24/7 here on schwabnetwork.com. I'll see you next time.
JP Morgan looking good.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me and my advisor, Jennifer. She was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
JP Morgan looking good.
Full hours of trading. I'm Tom White. I'm Kevin Higgins. Catch me on
Let's see.
Fast market.
Yeah.
Ready for you. Ready to go.
Okay, so it's 12 o'clock. Let's see what these guys have to say over at. Is Wapner back? Oh, it's Frank. Frank again. Awesome. Much better.
Joe Terranova, Stephanie Ling, and Cindy Wells, Chief Investment Officer, Kate Moore. But first, a very quick check of the markets. You can see kind of a mixed picture right now. The Dow just fractionally higher.
Yeah, the market's not trending so much. Broadcom rolling over.
Winning streak. Chip stocks really weighing on the index. Joe Terranova, you're right here at Post 9. I'm going to start off with you. Are we starting to see signs that the rally may be running out of steam? And if so, what are the signs?
Well, I think you're watching the semiconductor industry for sure. It was one of the catalysts that led the recovery from the April low. So they've been very strong. They are literally the mobility of the economy. We're going to hear some earnings in the coming weeks. Texas Instruments is going to report tomorrow. Texas Instruments near a 52-week high. So they're critically important. If you are bearish, if you're looking for a catalyst for markets,
Market's still just sitting here doing nothing. Oh boy. Okay, JP Morgan just flows, watching the flows on JP Morgan.
I fully expect that when we're talking about the semiconductor industry, the CapEx and spending is going to be there. It's going to be strong. And those companies have to feel a lot better than they did on April 2nd.
Stephanie, seeing any signs of fraud? Is the market getting a bit too tight? We've heard a lot of people come on our air and say they're seeing those signs of fraud. They're beginning to get concerned. Even the kind of the reemergence of meme stocks may be a sign that maybe the market's getting ahead.
August and September could be volatile.
Okay, Apple's just range bound since the open between 212.50 and 213.80. Pretty narrow range. All right, watching JP Morgan. What's Tesla doing? Tesla trying to go. Tesla.
3 years ago from 9.1% to 2.7%. So all of this adds up to, I think, earnings pretty better than expected. Expectations are for 5%. I think you're going to see 10% because I think in a 2.5% GDP world, you could see mid-single digit revenue growth, but with margin expansion, which I do expect to see, especially led by tech, I think you could get to 10 to 11% earnings growth, and earnings are going to get revised higher. And that is actually what is going to drive the markets higher. But volatility in the next couple of months, of course, it certainly could be normal and expected, but you want to use that to be buying, and you want to buy cyclicals versus defensives.
Josh Brown coming up from the office. Put this in perspective for us. Again, market's pulling back, but the S&P and the NASDAQ still both very close to their all-time highs, probably about 1% away, even with the slight pullback today. We also got to keep in mind today's pullback is from NXP, which really focuses on the auto business. It's not necessarily part of that AI trade. So I want to get your take. Are we making too much of this? Is this just, the market's trading at highs and a natural pullback, or is it the sign of something else?
I think you want to pull back. If you're a bull, you're not looking for vertical lines straight up. I think if we're really in a healthy uptrend and we're in
that's a good point.
Cyclical bull market that began on the heels of the trade war blow up in April, what you're not looking for is another 20% of upside in the next 6 weeks. I mean, you could want to see that if you're, I guess, a swing trader, because you think you're going to scalp, some more profits and some momentum stocks. But if you're a serious investor and you're not a trader and you're focused more on the long-term health of the bull market, a pause would be absolutely fine. I'm sure everyone on the desk would agree with that. One of the things that you want to not do, and I wish somebody had told me this when I first started investing, is not extrapolate sideshows into so they are in the center ring of the circus. So there's a freak show happening outside the tent, the main tent, right?
What the hell is Josh talking about? He's getting off the track like I do from time to time.
Friday was $9 stock. Today it's 14. It opened at 19. Just outrageous, right? I mean, great for people that own it. Congratulations. No disrespect. 45% of that stock was held short. Okay. 87 million shares traded hands by 10 a.m. Not normal. Can only happen in the retail fever swamps of Reddit. And we've seen this before. There's another name just like this, Open Door, which was a former SPAC, now a meme stock. Heavy retail favorite. All the platforms say this thing is going crazy. It's up 200% open in the last week. Also, completely abnormal. Absolute freak show. And again, congrats to the
open.
What you want to do
Oh, wow.
is look at that activity and then tell the story where it's indicative of a toppy market. Because if you do that,
you'll miss the bigger story, which is earnings growth. And earnings growth specifically in the technology space. Kohl's is $1 billion market cap. It could disappear tomorrow and it wouldn't matter. That's not the thing that you want to focus on. You want to focus on the leading stocks in the market, what I call the best stocks in the market, and then understand why they're going up. And to Stephanie's point, the backdrop is a growing economy, sure, decelerating somewhat. We sort of all knew that would happen. But in the end, you have economic growth, and you've got earnings growth in the biggest, most important companies. And that is the real show. And that should keep you on the right.
Oh boy. Netflix still fading a bit. Netflix.
All right, Kate, I want to come over to you. Is Josh right? Are these some of these moves we're talking about, these meme stocks like an Open Door and Kohl's, are these just sideshows? And the real story has been the secular bull market that still has the potential to continue. And of course, we have Alphabet earnings coming up tomorrow.
Yeah, much more focused on what's going to happen with the mega cap and big tech earnings. And I want to kind of highlight something that's been coming up in this conversation so far is that some of these names are extremely well owned right now. And watching the price reaction after they report is going to be critical.
Tesla still's hanging out here at the highs. Tesla. JP Morgan. Tesla pulling back a little bit. No follow through yet. A little profit taking.
So I think that'll be a sign for fatigue or no fatigue in the market in the near term. And as Stephanie pointed out,
Tesla. Okay, there goes Apple. Apple's trying to do something. Apple keeps trying to pop above 213. 213.50. Apple. Okay, you can see the supply that we keep running up against. Apple, you can see the supply. That red band, that's automatically generated. I didn't do that. Okay.
Especially with some of these things that Josh is calling a sideshow. Joe, I'm going to bounce this off you. 5% higher with Joe. Standard part.
Okay, NVIDIA's trying to do something here. Okay, back to the flows. Let's see what the flows are looking like. Tesla is just kind of fading at the moment. NVIDIA, looking for NVIDIA to do something. NVIDIA. Flat at the highs. Apple, watching Apple. Apple's at supply. You get a nice little pop in. You can see how price action, this accelerates, the blue line accelerates away from price. That's hedging flows as we lift it a little bit there. Apple.
So it's plausible that these stocks have a degree of exhaustion. What Kate is talking about, what I referenced in my opening remarks.
Bitcoin watching closely.
Price action. What does good news, bad price action mean to you as an investor? It probably means that you just need to understand that your expectation is over the coming course of time that the equity that you own moves sideways to potentially lower. It's not a call to action more than anything else. It's really a call to, you have to exhibit some patience and just ride out what potentially might be a time correction. So I don't think you could rule out anything after the dramatic recovery that we've had since the lows in early April, when you're talking about some areas of the market that are up 75, 80, 100%. They could clearly pull back very obviously. What do you want to do? You want to focus, as Stephanie said, on where you see the good fundamentals in the market. I am not suggesting that you want to go out and buy companies that have the extreme valuation and are long duration assets and are hoping to grow at some point into an extreme valuation. I don't think that's the area of the market that you're going to find the comfort in right now. And I think there's enough opportunities, and we see that represented in the financial sector with a lot of mid and large cap, where you can find companies that have a decent valuation and they're actually, for the first time, giving you the growth.
Are you also excited about the idea of deregulation, acquisitions happening? Today we're talking about Goldman and Northern Trust. Last week it was Huntington.
Let's talk about the financial sector for 1 second. So in the Joe T ETF, we have a 30% weighting to financials. And it's really rooted in the belief that fundamentally you've had the combination of a revival in earnings growth, M&A, trading activity. There's strong engagement in trading activity.
and then you have the regulatory relief. You add upon that the premise that now you have this technical momentum. So our top performing.
I know I bought the 20s.
Best financial stock we own.
I bought the 50 Delta. 50
Charles
Delta.
Schwab, another name, New Holdings, digital banking company down in South
Okay.
America. Morgan, obviously performing remarkably well. Northern
Sentinel
Trust,
One.
Bank of New York. So the financial sector is giving you the growth
Okay.
opportunity. And to Kate's point, when you're thinking about positioning,
Let's see what Sentinel One looks like. Sentinel One.
there could be a need to work off some
Okay. Flows are bullish, climbing.
Where do financials score even with the rally that they've had? They are the third lowest valuation out of
Yes.
11 S&P sectors at a current PE of somewhere around 18.5. That's still cheap enough to get me excited and keep me anchored in the sector.
Yeah, by the way, just to your point, Bank of America with their client flows, big financial inflows amid bank earnings. A lot of other investors going into the banks. Speaking of, Stephanie Link, you have a move in the financial space.
Yeah, what we were just talking about. Wells Fargo, they had reported a good number. They beat earnings. They had good fee growth. Provisions were under control. Credit costs were low. Efficiencies were in line and strong and good. They're buying back. They have a buyback program of $40 billion. That's 15% of the market cap. And the stock fell 5% on the day. So
This is Sentinel One there, Frano. I'm looking at right now. Okay, you got 100 of the 20 calls for December.
With the asset cap lift, I think your ROTCE goes from 15% to 17%, and that's a very good thing for multiple.
Okay, let's see what kind of premium we're talking about here. Premium.
You also own PNC. Made some news today announcing a strategic partnership with Coinbase. Just while we're on it.
235,000 bid. Sell calls at the 20 strike. That's interesting. That's one.
Some crypto access. PNC, USB, we call these names super.
26,000.
Candidly,
Buy a call.
I've expressed this over the last several weeks.
20.
In the way that regionals are trading.
December.
It's really
A lot of December calls.
Like a Huntington Bank.
A lot of December. A lot of December.
Citizens is another example where it's trading well, and then you have other instances where regionals are not working particularly well. Not particularly excited about what I've seen over the last year from PNC. I think it's up somewhere around 11%. You could lump USB in there as well. I think the money center banks is really where you want to find the opportunity right now. Wells Fargo, on a valuation perspective, obviously attractive, but it's also had relative underperformance, and you will get that mean reversion at some point. So I think you can trade higher up. You don't have to go to the regionals, the super to regionals.
20 strike. 20 strike.
Speaking of Josh Young, JP Morgan, is this your broad take on the financials?
20 strike on Sentinel One. Pretty active.
Goldman looking to acquire potentially North Trust. Huntington Bank last week. I'm sure there's some other acquisition targets out there as well.
So the deregulation story is like the climate. Like it exists, and it's a different climate than what we experienced over the previous 4 years. And it probably in the background has helped people feel a little bit better about buying some of these wealth managers, asset managers, money center banks at a elevated price to book, let's say, over what they would have paid 5 years ago when they were being regulated like utilities. So now, like, a little bit more slack in the reins. I don't know that anyone
Let's see.
any specific
Bitcoin still going.
oh yeah, deregulation is good for 20 cents per share in earnings for this company next quarter. I don't think it's
Bitcoin's still grinding higher.
I don't think it's quite that formulaic. I just think it's the climate, like it's the atmosphere. But it's helpful. It's a tailwind because look, you think about the growth of just as one example.
Okay, let's see who else is working here. IWM at 1.6 billion trading today. Top daily notional. DQ, Wolf. These are looking interesting. Gold, ELV.
It's not that that's necessarily negative per se, but it's definitely held back the potential earnings power for these banks in what would otherwise be a roaring bull market.
Let's see. Above the ask.
At all-time highs, you've got more millionaire households than ever, multi-millionaire households. explosive growth in 401k balances.
Ask.
You've got
ELV.
leveling up in their spending.
Yeah, it's not big. That's not big.
Companies. Like these stocks have done well. In this environment, they should be doing better. And some would say the next catalyst will be the first rate cut. Okay, maybe gotta wait till September. Maybe that's true. But these stocks are doing well without them. So I like what Joe said about Interactive Brokers. That's on my best stocks list. I think that's going way higher. Just looking at the way Schwab and Robinhood have been treated, I think that stock should get a bigger rally. And there are tons of those stories everywhere I look in the sector. So I think it's going to continue to work. I think you want to be in financials at the end of the year.
You know, to your point, the CEO of Interactive saying he sees another 2 or 3 years on the rally, I believe. Kate, I want to come over to you. By the way, Citi hitting a 52-week high, talking about these big banks moving higher.
Broadcom.
Comment on that.
July 25th. Tesla. TSM. Tesla.
The capitalization requirements are unnecessary burdens on financial institutions.
All right, just wasting time. There goes the S&P. S&P pop. There we go. The S&P popping now. Okay, let's see what we got going here with flow. Let's see what flow looks like.
Very strong stories across the entire sector. We've highlighted a few of them across regional banks, across some of the money centers. I think the important point here is that it has been an unloved sector for a considerable period of time. It has not been any place anyone's been taking big concentrated risk. They may take a name or two here and there.
Okay, S&P cash. Apple trying to grind through this area. Apple's got resistance. Tesla got resistance at this area. Tesla, little resistance. Watching NVIDIA too. Watching NVIDIA. NVIDIA looks like it wants to do something. Squeezing NVIDIA. Okay, we'd like to see some buy order blocks down there at the low once this displays. No buy order blocks. Okay, there goes Google. Google popping. Google turning the corner. Google was down earlier, right? Google down earlier. Google on the move. Okay, do I have anything on Google? I don't. I took some profits on Google yesterday. Okay, buy order block recently. Okay, so the rule here is put your stop underneath that and see how far we can get. See how far we can get on Google. Okay, we got supply right overhead. If you were to get long right here, that's just shy of 2 to 1, 2.5, 1.5 to 1. So you could bring your stop right up even there. Fudging a little bit, 180, 190. Okay, that would give you 1.7. If we could break above this level, Google, get you 2 to 1. Okay, Google looking pretty good. Google turning the corner. Watch Google. Let's go see what the flow looks like on Google real quick. Google flow. Okay, you got buy order blocks. You got flow turning up. It's still relatively flat, but flow is turning up. It's been trending up since 11:30, and we got Google. Got the buy order blocks right there, 11:30. How far can we go with that? Already getting rejected. Okay. Somebody just came in and sold against that.
If you look at Alphabet today, it's higher today. It's on pace for a 10-session win streak. It'll be its biggest win streak ever in the history of the stock. So just kind of holding on to gains right now. Surprisingly, nobody owns it. But Josh, I'm going to come over to you. Is this rally really hinging on these big tech earnings? You got Alphabet tomorrow. I'm just going to look at the numbers very quickly. The last business is expected to grow by 27% year over year. The ad business by 7%. Is that realistic? And even if it hits it, does it have to blow it out the water or just meet it to keep this rally going?
I think it's realistic from the standpoint that at Alphabet, they have a lot of different levers to pull in different areas of the business. And if they feel that this quarter, it's really critical to report a certain metric, they'll find a way to do it.
Okay, JP Morgan still pushing. JP Morgan.
Alphabet earlier this year took a profit after having held it for a long time.
JP Morgan still pushing higher.
In doing that was that, I've got tons of exposure
Okay, JP Morgan, let's go take a look at JP Morgan. Google looks like it wants to do something here. Somebody sold some there.
Accomplish on this call, which I think is more important than any specific number outside of the earnings per share number and the guidance, is they're going to have to get everybody on the same page in sell side land about their AI strategy and their ability, believe it or not, to compete. And as we've talked about on the show, Frank, this is something that Alphabet shareholders have never had to worry about. They had plenty of things to worry about, but competition wasn't one of them. It's a company that had 90% of their
Now they have competition with OpenAI. OpenAI is developing a search engine, but it's not going to be like search, regular search. I guess it's going to utilize AI.
query results when Gemini takes over from where a search result used to be, and how are we going to replace the revenue from blue links now that the consumer has grown accustomed to a new way of search? They don't want Google to tell them which website to go to find the answer. They just want the answer. I think Alphabet has the potential to figure this out and not cannibalize their traditional search revenue.
Okay, so this is still looking good.
Betting on if you're buying the stock here at 190, we don't know for sure. So people are going to want to hear that they're holding their own as the consumer's behavior fundamentally changes for the first time in the history of the internet.
Okay, coming over to you. Does this rally hinge on big tech earnings? Does it hinge on Alphabet tomorrow? We saw last week Netflix did better than expected, gave better outlook, and it moved lower. Do you think we're on pace for a similar setup? I'm not asking you to ask about the actual company, but a setup where good's just not good enough, and then does that change the rally's trajectory?
I think big tech has to put up good numbers. That's necessary, but not sufficient for an extension of the rally. So this is what I would suggest. Big tech is kind of table stakes at this point, beating expectations and offering solid guidance, basically saying, regardless of what happens in terms of the economy, we have stable earnings. We're going to continue on.
Kohl's, I sold it, made lunch money.
I got to tell you, the thing that I'm really watching as we go through the balance of earnings season, so this week and next really, is what happens to discretionary stocks. This is an unloved part of the market. And if we get better news, whether or not they're handling the margin pressures from tariffs, or that they're getting actually solid, like we saw in retail sales activity from the average consumer, I think that will go a long way to kind of supporting the market.
All right. We're going to switch gears just a bit right now. We want to go down to D.C. Our Eamon Jabbers is at the White House with some breaking news. Eamon.
That's right. President Trump just finishing up a Q&A session, an extended Q&A session with reporters in the Oval Office. As he sat along
Kohl's, I just sold it. I made a point or so. Looks like. Not much. No, I didn't make that much. I didn't make moved a bit. Okay, it's not really hustling higher. So that was earlier this morning over here.
That they've passed their big legislative agenda for the summer, and Congress is about to go on recess now until September. So an idea that the president is clearly kicking around, though, is a very populist idea.
Google slipping. Google slipping.
Gains tax. The president also said
slip sliding away.
That he does expect
Google is slip sliding away.
He says he's not there yet. So they are apparently hammering out some details there today. He went on an extended critique of Federal Reserve Chair Jay Powell, as he's done in the past, saying that he views Powell as being too late, as being political, as somebody who's spent too much money on renovating the Fed's buildings and not focusing enough on lowering interest rates. But he also said in that same critique that he doesn't see himself moving to try to fire Jay Powell because he's going to be out in 8 months anyway. So that might be a little bit reassuring to markets. And then finally, he did float the idea that he may be meeting with Chinese President Xi Jinping in the not too distant future. No specifics on that, but obviously the global economy will be watching closely to see when those two leaders do meet face to face. Frank, back over to you.
Yeah, not only just possibly meeting, but the president said he got invited to China, so we'll have to see if the president actually goes to China. By the way, back to that first story, Eamon, I think every realtor in America, you just woke them up.
Yeah, that's right.
Some champagne is coming out of the fridge right now.
Okay, S&P just pulled back. All right, S&P just pulled back.
The amount of money that would represent. Just off the top of my
Not getting any kind of follow through right now.
The real estate sector would really benefit from that one, but we'll have to figure out exactly how many tens or hundreds of billions we're talking about there.
Amen. Guess what? I think there's an email from the National Association of Realtors coming in right now. Wait and see. Amen Jabbers live at the White House. Great to see
Circle
you.
moving lower. Yeah. CRCL circle. Okay. Yeah. It's rolling over. Circle. What's Coinbase doing? Coinbase is just hanging out at the highs. Nothing to do here. I would, I don't know. I just feel like we've maybe hit a pause for the time being, unless something changes. I mean, earnings have been looking good. So depending on what earnings are transmitted through the next week or so.
Stocks on the move. We have to watch some real estate stocks probably, including one Steps names that's on pace for its best day in nearly 2 years. Then later, Josh Brown comes back with an update to his best stocks in the market. Halftime back in just 2 minutes.
All right, Netflix still fading. Netflix. Markets are just kind of marking time right now, not doing much. Let's see, S&P 500. We really need to be above 6,300. We could lose 6,200. If we did, we'd see a fast move down towards the 50-day most likely. So far, we're just kind of hanging out at the highs with earnings coming out every day. We got stocks like JP Morgan managing to trend. Banks look okay. JP Morgan looking much better. Okay, let's see what the S&P looks like. Hedging flows. S&P hedging flows just sideways, chopping people up. Hedging flows. All right, so we're just stuck in here. So move below this level right here, 62.80, 62.80. We could see a fast move down to 62.50. Okay, that's 0 day. Okay. All right, NVIDIA just rolling over here. Tesla fading. Just feels like the street is trading today, not institutions. That's my impression right now. My impression is the street trading, very little volume, and much more risky because they could flush it very easily or pop it. So looks like stocks that have been running up, like Netflix, still consolidating. That is fading, Netflix. So I'm not putting on a lot of risk. Took off a lot of positions, a lot of exposure over the last 5 weeks.
And welcome back to halftime. Now to some more stocks that are on the move. Let's start off with DR Horton. Top estimates on earnings and revenue. Steph, you on this one?
Yeah, there was very, very low expectations. The stock hasn't done anything.
Yeah, let's go take a look at
good quarter. They beat earnings.
the
They beat on deliveries. Most
builders.
importantly, they beat on gross margin.
Builders
I
looking
was
good.
kind of nervous about just
Toll
the pricing
Brothers,
pressures.
Pulte
Orders
Homes,
were actually better than expected at flat.
KB Homes. These are all taken
I'm
off.
excited about
KBH.
order growth, but I'm excited about
Okay.
the execution of
Beezer,
this company.
BZH,
Trading at
lower
earnings on
price.
forward estimates.
Beezer.
Do need interest rates to come down, and when they come down,
Builders
when the Fed
continue.
does start to cut, these stocks are going to take off, and I think in anticipation of that, you're going to start to see buyers now because we think that they're going to cut probably sometime in the fall.
All right, talk us through this one. I mean, the shares are up almost 15% just off in earnings. I mean, this is a huge upside move. Was there something in this report that?
No. Well, no. I mean, I think slightly beat expectations. I think that this whole sector has been under pressure because of the interest rate environment. Like I've said,
think housing is a decade-long theme, but you do need interest rates to come down. You need a 30-year fixed below 6, not near 7. But when you do get that, there's pent-up demand because we are 5 million homes short in this country. And the builders have underproduced for 15 consecutive years. They'd rather buy back stock, which they're all doing, than build at these levels. So I think the supply-demand metrics are very favorable for the long term. And these guys are just exceptional in terms of operating.
Yeah, they've also been doing a lot of buying down of rates, something that's kind of weighed on margins for a lot of these home builders as well. D.R. Horton shares up. Some big upside moves.
All right, D.R. Horton.
Downside and upside. Excuse me. Lockheed Martin cut guidance for Northrop Grumman.
D.R. Horton, big move on D.R. Horton.
Look at this chart right here. Give us your take. You own.
I do. I own Lockheed Martin. I own Northrop. And also own General Dynamics, which will report tomorrow all of the JOT ETF. When you're looking at the aerospace and defense stocks, it really has not been the defense stocks.
XHB.
We've seen the strong positive momentum. It's been names like Howmet and other
Looking good.
aerospace names that have been the strength in the industrial sector. This report today, it's owning all of these. It's literally like having a pillow fight because on one side you have Lockheed Martin, which is down 8% because of the procurement cuts and a $1.6 billion charge that they needed to take. The other side of it, this is where stocks can be so idiosyncratic, and you have to understand that idiosyncratic risk. Northrop Grumman up 8%. Why? The President Trump's 2026 budget benefits Northrop Grumman and their
What about Nail? What's Nail doing? Nail doing well.
Benefits as well. So
Nail.
in each instance,
XHB.
you're seeing that one stock is benefiting, the other stock obviously is being punished because of a lot of the cuts. And ultimately, for me, as a holder of both, it leads to a wash.
Builders First Source, BLDR, Builders First Source. Okay, that's just starting to turn. Builders First Source.
Yeah, look, this is a breakout that I think deserves another mention, just because it's a $27 billion market cap. It's not yet in the S&P 500, although I think by year end they will have put together enough consecutive quarters of GAAP profitability that they will have to be considered just on the basis of that market cap. I think the lowest
Nail, LGIH, that's another one. LGIH, just occasionally on the IBD 50. This is turning the corner. LGIH.
And that's because Hess was finally fully acquired by Chevron. So there will be other names coming out of the S&P, and I think Toast could be in the running by year end. Not anything imminent, but that'll, in my view, that'll just be the icing on the cake because
LGIH.
asset managers have discovered this name. You're seeing
When do they have earnings? LGIH. LG.
About 40%. And I think the story here is still super compelling, despite the fact
August
that the stock has
5th.
gone up
Okay.
a lot from when we originally started talking about
All right, let's see which builders do the best. Look the best. Beezer, LG.
50% CAGR over the last 5
Beezer.
years. Profit margins have now gone up 5 consecutive years.
Toll Brothers.
Operating margins, five quarters.
Tri-Point Homes.
From negative 4% at the end of 2023 when the stock was a teenager to now 3.7%, and they're rising each and every time this company reports. So you have this combination of profitability finally arriving. You have revenue growth
Hovnavian.
exploding, and you
They had a reverse split a while back. This used to be a penny stock under $5.
And saying, hey, you want to take our handheld device to ring up your customers. They're doing deals with Marriott, doing deals with Applebee's, operators that have hundreds, if not thousands of locations. And that's the part.
Imagine if some of these builders get back to recent highs, just even 50% retracements. These are really these look ready to go. Interest rates will undoubtedly come back down a little bit. Pulte Homes, KBH, Lennar, gapping up, Lennar, MTH, Meritage Homes.
Don't chase. Be calm. Be calm.
We're going to start with the headlines. Our Bertha Coombs back at CNBC HQ.
Okay.
Hey, Bertha.
Hey, Frank. The House of Representatives is starting its August recess early because of a Capitol Hill fight over the release of the government files on Jeffrey Epstein. House Speaker Mike Johnson telling reporters today the effort is for, quote, political gains. Earlier today, the House Oversight Committee unanimously adopted a motion.
Be so interesting if they release these frickin' files.
Meanwhile,
Let the cards fall where they do. Gibraltar Steel, Rock. That looks good. Some of the steel stocks looked good yesterday too, like Cleveland Cliffs. Cleveland Cliffs continues to pop. Don't chase it. Wait for your next dip. Rock is trending along the 9 EMA. Just looking at these builders, probably the best thing to do is what Susie's doing. Either XHP, we talked about that early this morning, and maybe Nail. Okay, these two. Okay, Nail is the Home Builders and Supplies bullish ETF 3 times.
Bertha, thank you very much. Our Bertha Coombs live at CNBC HQ. Thank you again. All right, coming up here.
What's the ATR on this one? $4.50. It's up double that. So you'd be chasing it right here. Maybe we'll get a better entry on some of these builders. Okay, Citigroup, you got Citi. Oh, nice. Citi, nice. Citi's nice. JP Morgan, high of the day. We're going to get the high of the day here, JP Morgan. Yeah, high of the day. JP Morgan. Okay. All right, so watching that. Okay, builders requiring some patience for the last few months have been turning, Toll Brothers, others. Okay, since May, these have crossed back above the 50-day, looking really good. Most likely are trending. You just got to have patience. Don't buy the high of the day right here.
Hi, welcome back to Halftime. We're back with Josh Brown's best stocks in the market. Josh, I want to focus on 2 names that are actually in danger of falling off the list.
Yeah, Joe Terranova would tell you one factor performance this year is momentum. Better than value, better than dividend, better than growth or reasonable price. Just far and away, this has been a momentum market really since the jump. And as a result, a lot of the names on my best stocks list have.
Okay, Coles is fading a bit. Coles.
Not every trade goes right. And I wanted to use this as a teachable moment because I have a couple of names that are in danger right now. One is called Expand Energy, and the other one is called Deere. And the important thing here is one of the number one mistakes I see investors or traders make, and this is throughout my whole career, buying a stock for one reason, it goes against you, and then coming up with new reasons to not take the loss.
Yep.
It's just
Yep.
like the
Agree with that
kiss-
100%.
the absolute kiss of death. So you'll see people say, I bought it on the technicals break down, and then they're like reading through an 8K. And it's like, what are you doing? So here's what's going on here. Expand Energy is a U.S. energy producer. It's not been a good
Sarepta, SRPT. Who was it that mentioned Sarepta yesterday? Sarepta.
Natural gas prices are negative 15% over the last month. Crude is negative 5%. These stocks just can't hold up in that kind of an environment. And so you see that across the sector. For investors, I might be tempted to leave it on the leash because it looks like it's finding support here around this $100 level, and it's found support here twice earlier in the year. For traders, when we put up these columns at CNBC Pro, we're already telling you, here's where you're wrong. Here's where you might want to exit if you're a shorter term trader. And those people should already not be in the name. So I'm just highlighting.
Okay, JP Morgan still pushing higher. JP Morgan.
Becomes just a mediocre stock, and it happens all the time. We never assume they're all going to work.
JP Morgan trending.
Sorry. Deere still deserves the benefit of the
Let's see, Goldman Sachs, GS, Citigroup. Not so much Goldman Sachs yet. Wells Fargo. Wells Fargo looking really good. Citigroup. Okay, looks good. I have JP Morgan. I have no Wells Fargo. What's PNC look like? PNC is following through. Morgan Stanley. Okay, not so much. Okay. JP Morgan. Wells Fargo. PNC, Citi.
Managing supply chains, and I do not think that's going to take this thing down when they report. So that one, it's in danger, but I would still stick with it as an investor.
All right, Josh Brown with the take on his best stocks in the market, Expand Energy, formerly Chesapeake Energy, and also Deere. Josh, thank you. We appreciate the courtesy. All right, coming up next, Mike Santoli joins us with his midday one. We are back right after this.
All right. Kohl's is fading a bit more. Be careful with Kohl's. I tell you what, I've been into a Kohl's like maybe once in the last, I want to say 2 to 3 years. I've been in Kohl's once. I was looking for something. There was nobody in the store. Now it was a Saturday too, which was really weird. Not a whole lot of people there. It's in North Myrtle Beach, which is a really nice area. A little newer than Myrtle Beach itself. So you have to drive about 20 minutes from where I am to get there. But, they have all the new shops. So retailers will do that. Retailers, they look at the demographic whenever they're developing properties, and they'll have a 5-year lease, and they have extensions to the lease that they can execute. So a lot of times they'll have like a 30-year lease. They'll start off with 5. And the 5-year lease, a lot of times they'll look at the demographic changing and they'll go, oh, let's move up towards, in this case, North Myrtle Beach. So a lot of the bigger retailers like Kohl's, Home Depot, Lowe's, Burlington. They have a brand new store that they opened about 3 years ago, Burlington. TJ Maxx, Home Goods, they all have stores up there, and the merchandise is a little nicer too because the customers will pay a little bit more. And the point is I went into Kohl's when I was up there about 2-3 years ago, and there was nobody in the store on a Saturday. Everything else was busy across the street, which is really weird, So Kohl's, just be very careful with that one. Maybe they're making a turn. I knew the head of construction for Kohl's back in 1998, 2000. He left there and went to Toys R Us and developed for Toys R Us for 5 years or so, and then left and went somewhere else. I don't know where he went, but so that was a long time ago. And Kohl's has been in the toilet forever, it seems like. Yeah. So maybe it's breaking the downtrend. I don't know. Maybe somebody buys them out. But maybe it's not really a good strategy. I made a little profit, made some lunch money. I got out of it because it didn't really suit me. It just keeps fading. It's starting to roll over a little bit right now. So I bought near around 420, I guess. 420, sold at near 1470.
And we're back on halftime. Senior markets commentator Mike Santoli joins us with his midday word. Mike, what is the word? Markets kind of at highs, but we're seeing a pullback today. And some of the best performing stocks this year. I'm looking at the balance.
Netflix is still fading. Netflix.
Call it churn, I think would be if they had to go to a single word. It's almost as if the market is sort of working backwards from let's keep the S&P 500 flattish. We're on a very long streak with not even a 1% move in the S&P. But internally, it's rotating around. The overheated stuff in the market, you mentioned Palantir, the best performing 5 stocks year to date.
Good thing I sold Palantir yesterday.
At least 2%. On no news. So it shows you that there's this sort of mechanical mean reversion going on. Stuff has to cool off. It's consolidating for a few weeks. At the same time, some of the laggard stuff is getting a break. I'm noting interest rate sensitive stocks working, home builders, guys we talk about, but also utilities. And so, 10-year yields easing back. So I think it's a lot of this sort of churning and push-pull within the market. It's sort of the market's way of attempting to stay supported and not get thrown off by the erratic flows into the super aggressive short squeezes and speculative, stampedes that are going on in the options market.
Yeah, by the way, for the audience, Mike lost his voice telling us, don't worry about those sideshows. Focus on the actual
That's
market.
right. Always keep it above.
Okay, I want to come over to you. Just your view on what he's calling some churn. And by the way, just important to note, from the start of the third quarter, the S&P equal weights actually outperforming the S&P 500. Is that, in your mind, a sign of some of the churn that he's talking about?
I like this phrase mechanical mean reversion because that's what it's about, right? The stuff that's lagged year to date is not the fundamentally strongest part of the market. And I get a little tired sometimes when we start at the end of last year, beginning of this year, everyone wanted to see rotation. But the truth of the matter is when you look at the performance in terms of the top quintile of stocks year to date, it's very much like the composition is very much like what we saw in 24 and in fact in 23. And that is because these companies are more fundamentally sound. They have more sustainable earnings. They continue to surprise the analysts on the upside. And even though they're well owned, there's always room for reallocation. So when we get these days where we have this sort of mean reversion or this mechanical rotation, I like that. I'm stealing that, Mike. I'm inclined to fade that and stay very focused, frankly, on the fundamentals and not just on the technicals.
All right, we're going to have to leave it there. Mike, thank you for your midday work. Coming up next, we got some committee moves. Steph is ready with 2 more trades. Much more halftime coming up after this break.
All right. I hope everyone's having a good day. Just watching the markets, XHB in particular. Just keeping an eye on this one. And NAIL, NAIL, the 3-time ETF. NAIL. It is Tuesday the 22nd. It's 12:49 on the East Coast. Okay.
Solutions through acquisitions and of course the expenses through organic growth. I think that's essentially why maybe the stock has been sort of listing or drifting effectively sideways since its last earnings report. Now, when they're reporting earnings tomorrow, their estimated EPS is expected to be quite robust, still around 14% higher to $3.57 versus $3.13 billion. The kicker is you notice that 14% increase in earnings estimates is being offset.
Okay, Google.
Higher revenues at 18.6%. That comes in around $3.12 billion versus last quarter for the same quarter last year, $2.63 billion. So the revenue is estimated to be about 19% or close to
Netflix still fading. Netflix.
So I suggest maybe this is a quarter that is going to illustrate higher spend, capital expenditures, and this is also a business which, if you look at growth rate wise, last year's sales grew around 21% sequentially for the last 4 quarters. Estimates are still 20%, quite robust, but they're down from other 5-year average 26%. But nonetheless, earnings estimates going forward are expected to decelerate to 23% versus 36% last
Google.
year. But those numbers are still higher than the 27% 5-year average. So effectively, this is a company that's becoming more profitable over time.
One of the things I noticed is that their net income margins in the last year have actually improved by about 300 basis points, but gross margins are relatively stable, only higher by about 60 basis points compared to their 5-year average. But that efficiency may have been offset by higher expenses in the last couple of quarters, and maybe that's why the stock is essentially drifting effectively to the downside on a year-to-date basis. But since their last earnings report, it's a gap higher and sort of stationary in a trading range.
You mentioned a concerning word when talking about ServiceNow, and that is deceleration. I mean, a stock that's growing like this, and they're in, AI development. I mean, they've got a hybrid pricing model that should help with them to monetize the services that they provide. But George, if you and I have reported on this enough times with time, if their growth starts to decelerate, they're going to take valuation out of this name, and it still trades about 130 PE. So if their growth starts to trim or starts to decelerate, they're just going to take valuation out of this whole sector.
Yeah, I mean, that's the kicker when it comes to this name. I mean, on a trailing basis, it's expensive. If you look at the forward earnings going into 2026, it's close to $20 a share, which roughly places that earnings multiple around 50 times next year's earnings. So it is still a little bit of expensive when it comes down to earnings or the earnings multiple. Now, the growth rates, like I mentioned, 23% for this fiscal year. And so again, maybe over 2 times earnings growth is still a little bit rich, even though the forward earnings multiple next year is a lot less than it's trailing, which you mentioned is at over 100 times. I do think that the company may be struggling from the standpoint of integrating as fast as they can optimization using artificial intelligence to improve productivity workflows.
Say hello to Tues.Podcast, the effortless corner stripper. That's cream of the crop with its ergonomic design. Peeling corn has never been easier. Crafted from solid rust-proof stainless steel, the Tues Gobbler is built to last.
I love the Tues Gobbler. Totally changed my salad game.
I used my Tues Gobbler so much I bought 3 more. It shucks great.
Elevate any dish with freshly shucked corn. It's quick, simple to use, and easy to clean. Scan the code for an exclusive discount.
All right, so okay, let's see what we got here.
Pick the style and size you want, and that's it. The Instacozy photo blanket is proudly printed in the USA and shipped absolutely free. This is a limited time TV offer and not sold in stores. Wrap yourself in comfort and memories with the Instacozy photo blanket. Scan the code on your screen to order now.
We should yell at this for those to stay on your skin. Now you can with Edo Band. This tech marble harnesses sound waves to create an invisible shield. Works up to 130 colors in a single function. Look and see your band for every member of the family. And type OTL stable.
And we're about to some more committee moves. Steph, you're making two moves. You're actually buying Freeport-McMoRan ahead of earnings.
Yeah, so I bought Freeport back and I sold Dynamic Energy. I just like copper market better. The inventories are at record lows for copper. And every 10 cents per pound change in copper is $200 million to Freeport's EBITDA. So I think that there's a lot of upside. Copper prices are up.
Yeah, I was looking at Freeport too. Stephanie's buying Freeport. Let me go take a look at Freeport-McMoRan.
So trading at about 6 times.
Freeport FCX, another miner. Freeport. Stephanie buying Freeport.
Copper prices are up 13% just this month.
No, I know.
Again, on the tariff announcement. So do you see potential for a big pop because they might raise guidance, as you just mentioned? They have like a big multiplier effect every time copper prices go up.
And I think long term, copper sets up very well, much more so than energy. We have a lot of supply in the energy market.
And Freeport-McMoRan, you're also benefiting from the price of gold higher as well. Any thoughts, Josh?
You know, this is not really my favorite area of the market, nor is it anyone else's, but this chart looks great. I think Steph's going to make some money here. And you can't ignore the correlation between this and global stock markets around the world rising. I think it's a signal of increasing demand relative to what we had expected even 6 months ago. The world is booming, and we'll see increased copper demand.
All right, Freeport McMoran share is up over 2% right now. Stay with us. Final trades are coming up on halftime. You don't want to miss it.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
All right, so Freeport McMoran, Stephanie Link talking about Freeport. She's buying Freeport. Has been buying Freeport. You can see where she was buying over here probably 2 weeks ago, maybe even adding to it this week. This continues to trend. It's above the 921, 921.50 or above the 200-day. All three are above the 200-day. All four, well, the 200-day is slightly down sloping, but 921.50 or above, not up and to the right. RSI rising. Freeport looks good. Stochastic's turning. I'm probably going to buy some shares. Freeport will buy shares on any PC dips now. Freeport McMoran looking good. Stochastic's turning. MACD's turning. Volume looks good. We know Stephanie's buying for the right reasons. I like it. Freeport pushing higher. JP Morgan. Okay, a little fade here at the high of the day. JP Morgan. Google trying to push here. Google's trying to go. JP Morgan had a nice little rally today. Okay, a little profit taking most likely. This is traded on the floor of the New York Stock Exchange, so I wouldn't be surprised to see. Some market maker profit taking at the highs. They know what the bids are. They know what people are trying to do, so they can trade their own accounts. Okay. JP Morgan looking good. JP Morgan. Freeport. SBSW. SBSW continues. This one's up under $10 stock. SBSW.
And we are back on halftime with final trades downtown. Josh Brown, you're up first.
I have to report a breakout in progress in the name I Am Long Rocket Company's Value Act Capital has just raised the stake to 8.9% of all shares outstanding over the last 2 weeks. They have bought 2.9 million and change shares at prices from 13.5 up to 14. Resistance in this name has been right about 15.5, 15.75 all year. It is now trading through that level. I'm holding my position. I don't know anything more than what's being reported, but this stock is under accumulation.
Kate.
I'll go fast here. I'm long volatility into the end of third quarter. I think we're likely to see some spiciness in the market. We talked about positioning, seasonality, but I also just want to highlight that tariff threats are not over, and I think that's likely to cause some indigestion.
Steph.
Toll Brothers.
Joe. Fast and all. I like Kate's trade. All right, that's going to do it for halftime. The exchange starts right now.
Thank you very much, Frank. The meme trade is back and Besant doubles down. I'm Kelly Evans and welcome to the exchange. The S&P and NASDAQ are retreating today from their record highs. Even the chips are under pressure. As you can see there, NXP Semi's guidance disappointed, and NVIDIA is extending Monday's declines. NVIDIA is down 2%, same for the SMH. Still, the meme trade appears to be back. Stocks with massive short interest and not great fundamentals are popping again, reminiscent of various episodes we've had since 2021. Open Door is up nearly 500% this month, although it's back to about $3 today. Kohl's is up 38% this week, and it's jumping 35% today for various speculative reasons. And JP Morgan says overall investors are crowding into the most volatile high beta stocks at a record right now. Plus, tariff talks are in the spotlight. The Treasury Secretary saying that August 12th China deadline is likely to be extended. Got the K-Web up on that. The president also saying the Chinese
Tesla
has
got a higher low on
China,
Tesla.
and they would probably meet both in the not too distant future. But we start with the increasing scrutiny on Jay Powell and the Federal Reserve. Treasury Secretary Besant now calling for a full review of the Fed. Here's what he told Tues.Podcast.
I think that what we need to do is examine the entire Federal Reserve institution and whether they have been successful. We should think, has the organization succeeded in its mission? You know, if this were the FAA and we were having this many mistakes, we would go back and look at why has this happened?
Now, the president today saying he likely won't fire Powell, but does continue to call for lower rates. Joining us to discuss is former NEC director and former Fed Governor Larry Lindsey. Larry, it's great to see you. Welcome back.
It's great to be here. Thank you.
What do you think a full review of the Fed means?
Well, what I think it means is they want to check on whether they're doing their job. And I don't think they have to scratch the surface very far to find out that they really haven't done a very good job. You know, here was a test that I actually just conducted. Suppose we took the December FOMC statement, summary of economic projections, and you compare that to what actually happened. So remember, this is December, just looking forward 1 year. The average error since they started collecting these was 1.1%. The target they're shooting for is 2%. That means their average error was 55% of the number that they were shooting for. That's a huge error. And even worse, if back in 2007, you had just simply written down the number 2 for all of the following years coming up to the present, you would have had a much lower error than what the Fed actually did. In other words, the value added or the productivity of all the Fed's efforts was negative.
So all of that said, Larry, there's two questions. One is, and look, they've tried for years to figure out how to make the Fed more forward-looking, more predictive. It's a tough business. Everyone's trying to predict markets every day. They don't seem any better at it than the average. That's one piece of this. The other piece is, when he says the Fed is an institution, is he talking about something broader than just running monetary policy, or do you think that's really all we're talking about here?
No, I think it's broader. I mean, are they doing well? If you look back at the Silicon Valley Bank, you had the head of the bank sitting on the San Francisco Fed board until the day before the bank was closed. They had 23 different memos from the supervisory staff going up that were ignored. I mean, this is just not the way to run a railroad. And I think it's important that we get the facts out and that we make a decision whether things are going the way we want and what we can do to change them.
We've heard different proposals over the years about do they need, more people from the business world, or do they need, I don't know, to consider market factors more. And then they now have the framework review every few years where they try to continually, there's kind of reminds me when you bring in the consultants, that's something, this company is not executing that well, let's bring in the consultants. And then it just kind of, it's not clear that anything really improves over time. So what is there really to be done to this core question of kind of how do you predict the future? How do you see around corners, especially at this ironic moment where a lot of people who were critical of the Fed the last couple of years, and especially in 2022, my goodness, are now saying, all right, for right now, they've kind of done a pretty good job steering through this period of time.
Well, again, they're doing worse than what they would do if they had simply picked a 2% number as far as projections go. They completely missed the uptick in inflation in 2021, which was a big mistake.
Google's starting to move. Google.
Their September move got allowed Bronx cheer from the bond market, right? They cut 50 bips in September, and within a month or so, the 10-year bond was up 60 bips. That's certainly a signal that they weren't doing the right thing. So I disagree with those who say that they're doing fine. It's a tough job. There's no question about it. No one expects perfection. But this is, again, the productivity of all of their contributions has been negative since 2007 when they first began.
How do you fix it? It was kind of the question, too, I was getting at. In other words, what kind of people do you add to the board?
Okay, Apple pushing a bit higher. Apple.
Or oversight tweaks, or how do you incorporate more market-based evidence?
Apple on the move.
Tell them you need to float more trial balloons and then look to a market reaction. You know what I'm saying? How do you bring in more objectivity? Or if you think there's kind of a more reliable thing out there, a Taylor rule or a market-based metric that they should be more adherent to, how do you formally introduce that?
Well, I think their biggest lack is for intellectual diversity. Back in the day, years and years and years ago, when I was on the board, we weren't all economists. Shocking idea, right? And I think that broadened the perspective. In addition, both for staff hiring and also for the analysis of who would be a Fed governor, they narrowed the scope of the number of universities that they considered acceptable to mint PhDs. Well, when you do that, you get more and more of the same type of people. So there really isn't any intellectual diversity, any basis for debate at the Fed. And so they're consistently wrong.
And then I guess that would introduce what kind of criteria? I mean, people have been having this conversation since the financial crisis.
Well, I think it's important to have a banker on the board. I think it's important to have at least one businessman on the board, for example, and I would say the word at least in both cases. So that would be one kind of diversity. And with regard to the staff, they have got to go out and, you can't just have gone to Harvard, Yale, Princeton, or Stanford because you're being taught the same thing at each place. There is some diversity in the economics profession. Let's see it be brought into the staff. So at least they can have a debate and don't have everyone thinking the same way.
Yeah, understood. You don't share those concerns that Goldman says the marketplace is starting to have about Fed independence. I mean, one way or the other, you get someone in there who might run things a little bit looser, the market's going to sniff that out.
Oh, absolutely. But we've come a long way from LBJ and William McChesney Martin, when in the Oval Office, LBJ was a big guy, picked up Martin and pushed him against the wall. That's a real assault on Fed independence. We're nowhere near that. And the president would be well advised not to make the comments he is. I think they're actually counterproductive to what he wants. But, I think that it's going to stay independent. I'm not worried about that at all.
Well, you wouldn't have to pick someone up and shove him if you just thought, well, this guy's just going to do whatever I want him to do, right?
That's right. And Martin was not. Martin was a pretty independent guy. And LBJ was not happy with what the Fed was doing. I think they were being too easy. It turned out he wanted them to be easier, rather. It turned out with the inflation coming down the pipe, Martin was doing a good job. But, at the present time, I actually am on Powell's side. I think given what happened last September, they would be ill-advised to cut again. I don't think the long-term Treasury market is interested in experimenting with lower rates at this time.
which is an important statement to be making right now. Do you have any concerns about any of the Kevins or the other candidates, Waller, who are theoretically on the short list in terms of how they'd run policy?
Oh, I think they're all fine people. I really do. I've known both Kevin Hess and Kevin Warsh for a long time. I think they'd be outstanding Fed chair. I do not know Governor Waller. I don't know if Governor Bowman is going to be in the running. I'm sure she'd be fine. Scott would be an excellent Fed chair, but I think he likes being Treasury Secretary too much. So in the end, I think it's going to come down to Warsh or Hessen.
And will they stand up to the president?
I think so. It can be tough, but that's certainly a prerequisite for the job, that they know themselves well enough that they know that they're not there to follow orders. And I think that's true. I think both guys have a pretty good constitution and will be able to resist the president, who can at times be irresistible.
And is happy to just pound you, and not physically, I'm sure. Not like LBJ. Larry, thanks. We appreciate your time today.
You're very welcome. Thank you, and congratulations.
Thank you. Larry Lindsay with the Lindsay Group. Let's stick with Washington for a moment here. The CBO released its final projection of how much the new tax law will add to the national debt. They put the number now at about $3.4 trillion over the next decade. At the same time, the Treasury Secretary says he's meeting with his Chinese counterparts in Sweden next week, where they're likely to hash out an extension of the upcoming August 12th tariff deadline. And the president today saying he'll probably meet with President Xi of China in the not too distant future. Here to talk about all of that and look ahead to tomorrow's AI policy announcement at the White House is Ed Mills. He's Raymond James Washington policy analyst. And Ed, I guess the journal again becomes the nemesis. I mean, the story about how the what's called Stargate down in Texas, that's kind of off to a fitful start, and maybe Ohio is where that's going to front run these AI announcements to some extent, I would imagine.
Yeah, but I think for President Trump, he's going to say that it's going to be trillions of dollars of more investment because of these announcements. I think one thing that I always go to in conversations with clients at Raymond James is, what are some of President Trump's core beliefs? What are his motivators? It is direct foreign investment in the United States. And so we look at the tax.
Tesla turning back up again.
For the investments of domestic companies. You look at the trade negotiations. There's going to be a lot of things that get people to come to the United States and buy more things. And I think ultimately when we go to the fall and a presidential meeting with Chairman Xi, he's going to be looking for China to invest in the United States, even though I think most people would think that was controversial. That is core to what he wants to see.
You've got a list of winners and losers, you think, from the AI meeting tomorrow. Feel free to get as granular as you want. It's a lot of the usual suspects. Basically, a lot of big tech names are winners. A lot of software as a service companies like Salesforce, Atlassian you have in here, CrowdStrike, Duolingo on the EdTech and workforce piece, all the semi names. So what exactly should we expect in terms of changes to earnings and all that for these companies who are already now trying to factor in a little bit of a boost from the new tax law?
Yeah, so Kelly, the way we look at this is that when we are going to get this announcement on AI tomorrow, first and foremost, I think the Trump administration is trying to keep the United States at the forefront. They're trying to win AI. How do you win AI? Make sure you have the energy resources to make sure that there's the consistent energy available for these data centers that are going to suck a lot of energy out there. So permitting reform, getting kind of streamlined processes, investing in the workforce. But when we look at some of those winners and losers, it is some of the economies of scale businesses. It is not a surprise. Those who have the ability
S&P popping.
to invest in this will win. And when we look at the tax bill, there are a lot of
S&P trying to get through this area this morning, back above 6,300.
This tax bill has $300 billion plus in fiscal stimulus that'll hit the economy this year. How much of that is those tax incentives, and how much is in other forms? And what are those forms?
Yeah, Kelly. So part of the way we look at it, you highlighted that we got a new CBO score. This is the most expensive bill in the history of the United States. But for congressional Republicans, the alternative was the most expensive increase in taxes in history. And so a lot of that's been focused on what got extended of the 2017 bill. At Raymond James, we focused on what are the new provisions, and it's almost $2 trillion. In 2017, the total cost of that bill was $1.5 trillion. And this $2 trillion is going to be spent over the next 3.5 years. This year, it's about $100 billion for individuals and about $100 billion for corporations. Next year, it's almost $400 billion. Most of that is going to be for the individuals, but you also kick in
S&P moving.
appropriations. And so is this tax bill something that should be looked at, goosing fiscal stimulus and goosing the economy, and front end loaded between now and the end of President Trump's term? As we digest that, I think that's part of what has driven markets higher. There is a lot of concern about the debt and the deficit, but near term, how much stimulus is there is driving my conversations with clients.
Yeah, and do you think there's a chance it ends up not being as expensive as
Okay, we got a nice little buy order block. S&P.
You know, the GDP, you get, you know, all the rest. Because again, it's a weird math. We're basically talking about cutting spending, but cutting revenues more. It's not the kind of spending where we literally had, you know, 1.2 trillion or whatever, you know, over and over again during the Biden administration.
Yeah, so that 1.2 trillion is over the course of 10 years. The spending is in the next 3.5 years. I do know one thing is that when we look at CBO scores, scores from the Joint Committee on Taxation, they're almost historically inaccurate. You know, you just had the conversation of how accurate are some of the Fed projections. CBO will blush compared to some of those projections. So from a congressional perspective, that's where I think a lot of this is discounted. And I think the hope is to kind of revive this economy, keep this kind of economy going, and show that the trade policies, which is trying to incentivize more domestic investment, gets further incentivized by these business provisions in the tax bill. And the fact that they were made permanent gives the ability for folks to invest over the long term rather than being concerned this is something that goes away 2 years from now, 4 years from now, Kelly.
Ed Mills calls for a full review of the CBO. No, just teasing. But absolutely, we take your point about all of these moving targets. Ed, thanks for your time today. Good to have you.
Thank you.
Ed Mills of Raymond James. Don't look now, but the meme stocks are making a comeback, and it's cold this time, almost doubling it, more than doubling at one point earlier on. Open Door shares have tripled over the past week. What is it all telling us? Is it a sign that froth is back in the market? Plus, is venture capital close to moving its money out of AI and into crypto? We'll ask VC and political strategist Bradley Tutt. We're back right after that.
This is the Exchange on CNBC.
All right, well, so we have a nice rally here underway. S&P's kicking butt. S&P is going. Okay, watch the flow. We need the flow to turn up with it. All right, let's look at the Qs. I don't have the Qs on here. Let's look at S&P equity. All right, so you can see the hedging flows ramping up. S&P 500. Hedging flows ramping here, SPX. Hedging flows are ramping up. You can see these rising pretty rapidly now. Excuse me. Okay, that was looking good. Here goes S&P. Okay, we got a nice little move here now. Okay.
in this vehicle, we actually produce the additional ether for staking and participating in the decentralized financial.
Hedging flows continue to ramp higher. Look for the follow through. SPX.
Welcome back. It's feeling a little like 2021 if you look at some parts of the market. A lot of people on Wall Street are saying meme trades are back. Like Kohl's soaring today on essentially no news. The number one trending ticker on Tues.Podcast. It has 49% short interest, so it doesn't take a lot to get a short squeeze going, which is what happened right after the open today. Open Door similarly at 210% in the past week. It's short interest around 22%. And according to Bespoke, of the 14 companies in the Russell 3000 that have more than tripled since those April 8 lows, 10 of them don't generate any profits. So is this all a warning sign? Let's ask Charlie Babrinskoy. He's head of investment group and the vice chair at Ariel Investments. Have you been thinking that, Charlie, as you've watched the action here the last week or two?
I do think short interest is a very important story. You've been
There we
able to
go.
short small
S&P.
stocks, oil stocks, building stocks for the last couple of years and not pay for it. And now we're seeing a reversal in that. You'll notice that people aren't shorting the Max 7 because that, of course, has been very dangerous. They tend to be shorting smaller companies. Now, you mentioned ones that aren't making any money, but I would argue there's big short interest in some small cap value names that we think could be very helpful if companies just meet their expectations.
So you love it because you're often an investor in some of these hard hit names. You're like, guys, you need to be in there in the chat room saying, hey, take a look at Apache or whatever.
Absolutely. And we had a stock yesterday up 122%. The dental implant company.
S&P, here we go. Nice little ramp higher. Looking good.
Normally that would be up 30 to 40%. It was up 120% because of the short interest. So we absolutely think you want to own names that the market is short or under owned. You want to be careful owning names that are over owned. And right now, institutions in particular are underinvested in energy. They're underinvested in building materials. They're underinvested in small cap value.
But you don't take all of this as a sign.
All right, so we got nice move on S&P.
Similar episode, and again, it's a near-term market top. You don't worry about things like that in terms of signs of the
All right, so S&P looking good.
I am worried about large cap growth. I mean, that dominates the S&P 500. You and I always talk about Oracle. Even Oracle is making me gulp a little bit here. So I absolutely am worried about excessive excitement. Obviously, crypto is in a class by itself.
You've done incredibly well with Oracle. It's trading about 35 times forward. I believe you mentioned maybe trimming it, but would you look to exit the position entirely?
I think trim is the right word now. It's still a great company with a lot of growth. They have basically 100% increase in their backlog.
Apple turning.
A year ago, they are extremely well positioned. People still don't talk about them as one of the big three internet providers, and they are becoming that. So I still think it's very well positioned. Again, the thesis is simple. Data and AI is all about analyzing data. Corporations have their data on Oracle software, which gives them a real advantage in the AI.
It's crazy to watch its revival. By the way, as we're talking about kind of these market dynamics with retail investors, and I saw some news yesterday, they might be changing the definition of an accredited investor. If you have that detail, but
okay, Google's still pushing. Google has earnings tomorrow night after the close with Tesla.
Yeah, glad you brought this up. This has me a little bit nervous. This is a response to wanting to get people more into alternative investments, private equity, venture capital. That was a
Okay, let's go S&P. Let's rip this higher. Let's rip this sucker higher. Okay. Okay, watch the hedging flows here. Watch the hedging flows.
We saw when investors lose money, they tend to sue people, retail investors in particular. So I'm not a fan of increasing the definition of credit investor.
And of course, I imagine that applies to them, giving access in 401k plans as well. You mentioned housing, and speaking of, possible changes, the president tweeting today, I believe these were, I don't know if it was at the White House or comments on Truth Social, but again, raising this idea of exempting home sales from capital gains tax.
Yeah, remember, that's technically true, but if you take the proceeds from a sale of your home and invest it in a new home, then you don't pay taxes even now.
Right.
And of course, if you pass away, your home becomes part of your estate and there's no capital gains. So I actually don't think that's that big a deal. There aren't that many people that sell and then end up paying that capital gains. Sure, there are some people who downsize where that becomes an issue. I don't actually think this would have as big an impact as some people are postulating.
But I have to imagine that's why Horton's up 15% today, which I agreed seems like an outsized reaction, but it can't be rates. It can't be some housing data. Housing data looks pretty lousy lately.
They had good numbers, Kelly. Their quarterly numbers beat on number of starts, on number of permits. That was a very good number out of Horton, and we're actually seeing it across the board in our building materials. Mohawk, our favorite carpet company, is up nicely today. Residio, our favorite thermostat company, is up nicely today. We think right now the housing market is trading at low multiples on top of low trough earnings. And that's a nice situation. If we can get a rebound in build rates, get back up to the start numbers that we had 30 years ago, we can see a lot better earnings.
Great point. Final question. And Mohammed El-Arian was tweeting this earlier today, but saying, maybe Chair Powell should resign to protect the independence of the Fed, kind of put this whole current pressure situation to rest, bring in someone new.
Okay, we continue to drive higher.
Fall where they may. I don't know. Do you have a
S&P.
take, Charlie, on this fight over the Fed?
So
S&P looking good.
The Fed needs to be independent. I think that's a terrible idea for him to resign. It would be obviously be viewed as resigning under pressure. I like the moves that the Fed make. They took
S&P, nice rally. Buy order blocks. Okay, looking good. If your entry was right at this level right here.
But the Fed needs to remain independent. That's very important. Every administration is always going to be pushing lower rates to try to improve their poll numbers. So I don't think it would be a good idea. Powell's not my favorite, but he should not resign.
All right. Well, you heard Larry Lindsay say, "I want more business people. I nominate you, Bo Brinskoy."
Okay, looking good. Much better. Looking really good here. Okay, there we go. Nice look to it.
With Ariel Investments. Coming up, Stargate, the ambitious AI infrastructure joint venture between the aforementioned Oracle, OpenAI, and SoftBank. It is reportedly facing some roadblocks. Could its pain be Oracle's gain? We'll talk more about that ahead.
Okay. All right, we're got a nice rally going here on the S&P. A big move on the S&P right here. Big move. Nice. All right, looking good. S&P on the move. Big move on S&P right here. Okay, I'm going to take half of these off into strength. The calls from earlier this morning. I'm going to take half of these off into strength and let some more go. All right, I'll take half of this off. I'll take 10 off for now. Okay. Okay, looking good. All right. SPX 6305 calls, taking half off. Taking half off. Keeping 10. There we go. Nice move on the S&P. Very nice move. Hedging flow takes the guesswork out. Hedging flow. Okay, it looks good. S&P is still going here. Okay, we're still going. S&P. Pump it. Pump up the volume. Pump up the volume. Pump. Pump up the volume. Looks good. S&P looking really thrashing the bears here. Okay, cool. Nice move. Maybe take a little bit more off. I'll take another 5 off here shortly. S&P.
Welcome back. The S&P is on pace for its 19th straight day without closing 1% or more in either direction. It's very placid out there. It's the longest stretch of muted trading since December when it went 21
Okay,
days
maybe
without
take a
big
little bit
swing.
more off. I'm going to sell another 5 here.
She has a closer look at things.
Okay, that looks good.
And they're going up and down, leading to that kind of stillness in the markets overall, Kelly. We're going to start with the positive side.
Let's see if we can get a follow through.
Home builders, you can see here, among the best performers in the S&P, due in large part to results out of D.R. Horton and Pulte Group. Both of those builders reported profits and revenues that came in above consensus estimates. D.R. Horton did, though, narrow its full-year revenue guidance as well as its expected home closings for the year. Now, those results overall are lifting other builders like Lennar and BR as well, also other housing and home improvement-related stocks. So the ETFs that track them all up nicely, anywhere from 6.5% all the way up to 15% for D.R. Horton. Next up, though, you got the opposite direction. General Motors, currently lower by just around 7% after the parent company of Chevrolet, Cadillac, Buick, other car brands beat revenue and profit expectations and affirmed its full-year guidance, and also said that its guidance on tariff impacts remains unchanged. Tariffs did cost GM, though, $1.1 billion in their most recent quarter. On balance, GM shares down roughly 6.5%. And we'll cap things off with shares of Lockheed Martin, which are down just around 8% now, 8.5%.
Okay, those 6305s, S&P 6305s looking really good. Excuse me.
Reported revenues that came in shy of
6305s are $8 now.
That's
a double.
It also cut its full-year profit forecast. So we have some up moves and down moves to a still market, Kelly. I'll send things back over to you.
Quite the tug of war, Tom. Thanks. I'll see you soon, by the way. Let's get to Bertha Coombs for the CNBC News Update. Bertha.
Kelly, the White House Correspondents Association today urged the Trump administration to reverse its decision on pulling the Wall Street Journal from the press pool during an upcoming trip to Scotland. The decision comes after the Journal reported that President sent Jeffrey Epstein a birthday card in 2003 that included a drawing of a naked woman. President Trump is
and it
the
was
Journal's publisher, Dow
supposedly
Jones,
fake, right?
over that story. There have been more than 3,000 drone incidents near U.S. airports since 2021. Officials with the Department of Homeland Security telling a Senate committee today it includes 11 aircraft that reported taking defensive measures to avoid collisions. Senators have said Congress needs to toughen penalties for drone use and give agencies more power to address them. And the Air Force says air traffic controllers at an airport did not notify a B-52 bomber team that was performing a flyover at the North Dakota State Fair that there was a commercial airliner nearby. The Delta SkyWest pilot made a sharp turn to avoid colliding with the bomber that he said was in his path. The FAA, Air Force, and SkyWest are investigating. You know, Kelly, when you hear the audio of him telling the passengers what happened, he was just so calm. I'm just amazed.
We appreciate that, but still, it's such a scary situation. Bertha, thanks very much, Bertha Coombs. Coming up, Bitcoin handily outperforming the Mag 7 so far this year. And with the recent success of crypto IPOs like Circle, is venture capital considering moving away from AI and doubling down on the crypto world? We'll ask VC veteran Bradley Tusk about that.
Nice. Very, very nice. Pow. Oh boy, it's nice and dark in the distance. Thunderstorm. I like thunderstorms. I don't like tornadoes. I just like the rain and. Ooh, that was a nice one. Okay. All right. I hope everyone's having a good day. I'm your host, Kazavetti, coming to you from closingprint.com. Looking good. Market's looking pretty good. Okay, looking good, looking good. Markets, Apple's still going, looking good. All right, I'll be taking some more things off into strength. Okay, it does appear to be some rotation. Earlier this morning, you could feel it. The markets weren't moving much. Just felt like the street was trading, but not institutions or hedge funds, fund managers. Dealers weren't doing much. The dealer hedge flows had been moving sideways for most of the morning. Okay. We were watching this moving sideways, and then boom, it started to ramp up. Okay. So we got ahead of that one. That looked good. What's Tesla doing? Tesla's going. Tesla new high. Tesla new high here. Tesla new high. Tesla breakout. New high of the day. Okay, LA, you're still in that trade, or did you take it off? I'm not sure. Tesla new high of the day. Tesla, the flows on Tesla starting to ramp up. Flows are ramping up.
Welcome back down as we have some breaking news on the trade front with Eamon Javers at the White House.
Kelly, that's right. President Trump taking to social media here just in the past couple of minutes to announce a trade agreement that he says he just concluded with Philippine leader who is here at the White House today. The president taking to social media to say that he's going to impose a 19% tariff on the Philippines. They will in turn have zero tariffs on the United States. What's interesting about this social media post here, as you take a look at it, he says the Philippines is going to have an
Okay, NVIDIA next. NVIDIA next. Okay, watch. NVIDIA is going to be next here, it looks like. Okay, let's go to NVIDIA. Let's see what the flow looks like in NVIDIA. NVIDIA. Okay, watching that flow. If it does start to ramp up, NVIDIA could pop. I would say 2 or 3 points upside's possible. Just remember, use stops.
In some cases in the past, the president has announced these, and we've been unable to get confirmation from the foreign country in question for some days as negotiations continue to sort of.
Let's see if we can get some more out of this. I still have 5 calls left. SPXW, the 6305s. Looking for a little bit more upside. If it starts to fade, I'll take the rest of it off.
We'll come back in a bit. Eamon Javers at the White House. Meantime, check out Shared Circle, up nearly 550% since their June 5th debut. That's right. That success, along with the president's new crypto legislation, is touching off a wave of IPO activity. Peter Thiel-backed Bullish and crypto custody startup BitGo are among the recent names filing their paperwork over the past week. Our next guest has been betting on Circle's success for quite some time. His VC firm investing way back in 2018. Joining us now is Bradley Tusk, the founder and CEO of Tusk Ventures. Congrats, Bradley. Were you into crypto way back then?
No, it was really just we got lucky in that some friends of ours sort of brought us the deal. Obviously, there's a lot of regulatory uncertainty around crypto, so that makes it a good focus for a fund like us that tries to work on regulatory challenges that our portfolio companies face. Yeah, I mean, look, it's been a great outcome. We got into the $2 billion valuation. Last I checked, it was a little over $48 billion. But keep in mind, that was 7 years ago, and we got into the Series D, so that was pretty late for us. So it is an example of venture working, but even when venture works, you're really looking looking at almost a guaranteed 10-year time horizon. And so people who want to bet on that kind of upside have to understand that it is a very long road, it is a bumpy road, and you will get some really huge wins like this.
Okay, Bitcoin turning back up.
It's interesting
Bitcoin.
because you're always interested in these regulatory, like the arbitrage. I don't know what word to use, but
Bitcoin turning up again.
as far as I can tell, right? Now it's like, okay, you guys are set on to the next thing. What's the next thing?
Yeah, well, look, ultimately, the biggest thing is AI. What's to me specifically interesting is I don't think the federal government is going to do that much actual regulation of AI, just like they haven't regulated Internet 2.0 yet, right? There's still really no social media regulation by and large. And so they'll talk about it a lot, but where it's happening at the state level, right? So in 2025, over 800 different bills were introduced across the 50 states to regulate AI in different ways. Some passed, most didn't. But really, what
Oh, we're dropping off here. S&P. All right, let me take the rest of these off.
state by state, for us, again, if you're
And you know what? I'll hold on to it. I'll hold on to the view. See if this bounces.
Sure. Tomorrow we have this big AI at the White House. I hope they clear some of that red tape, or if you can be any more specific about where you see the most deals coming your way, because it's mentioned all of this IPO activity now is in the crypto world. On the AI front, is that where you guys are kind of looking to be early investors of some of these names that in 10 years' time we're going to be going, oh, what a slam dunk that was?
Yeah, I mean, most of
POTUS is weighing the effort to remove capital gains tax on home sales. All right, so if you sell your home and you have a capital gains, he's looking to remove that. That'd be cool for the average person who sells a home.
We think that the vocational school market is going to increase significantly. We let the Series A of a company called
The government taxes everything. It's just crazy. I was saying the other day that I put some money into my kids' 401k, kids' covered L accounts for college, and I put one too many zeros. So I wanted to take some of it out. And, you know, the form that pops up, how much taxes do you want to pay? I mean, I literally did it like 5 minutes before and turned back around, and I wanted to reduce the amount that I had deposited because I have a certain amount every month, every 2 weeks. And that form pops up. How much taxes do you want to take out of the money you just put into the kids' covered account? None. Thank you very much. Crazy.
To be New York City mayor.
Taxed when you make it.
You have been saying
Put it into a savings or an investment account. Taxed on the gains. Fucking government's out of control. All right, looking for a nice little bounce here. Okay, so looked like somebody just took some profits. A little algo selling there quickly. Let's see if we can get back up to the high of the day. I'll sell some more S&P at the high.
432,000 votes in a city of 8.5 million people. So that's still around 5% of New York City's population is effectively picking the next mayor. And that's pretty typical, right? You know, you'll have city council races gets from 7%, congressional house races with 10%. It's when only small groups of people are voting. Who are they? There are these streams. They're the far left, they're the far right, they're special interests. And that's why it's so hard to just get sensible things done and get the two parties to work together or to compromise and have consensus and all the things that we actually need. And the only way to change that is to move the incentives for politicians back towards the middle, which means more people need to vote in primaries, especially because of gerrymandering. To do that, you have to meet the voters where they are. And that's on their phones. 97% of Americans under the age of 50 have a smartphone. And most of them don't bother to vote for their state senator or their state rep, city council member or whatever it might be. But you know what, if they didn't have to like be late for work, not take their kid to school, but instead while they're waiting for their coffee to be ready, they can just press a few buttons, a lot more of them would. And fundamentally that gets us a better democracy and B, both a better regulatory climate and a better business climate.
Yeah, obviously, as I mentioned, you have a book about this, you've got a new TED Talk that, you know, this feels like a bandwagon issue. I think I could get on this bandwagon. You know,
we'd love to have you, and like I said, TED Talk came out last week. We'd love for anyone.
Amount of data is also now being more scrutinized than ever, as we just see these companies have so much access to us as its users. So is TikTok unique in any way that it operates, or is it, would we see it eventually turn into more of like a Meta or a YouTube?
And Ian, that's the crazy part is we are so focused on TikTok because it's owned by a Chinese company. But the real issue is, where is the data stored? The data is in China. And here's the crazy part. If you look at Facebook, Instagram, although Twitter, X, all those different platforms, most of their servers are not in the US. Most of their servers are in countries that actually have friendly agreements with China. So the reality is, China not only has access to TikTok, they do have access to all the other social media platforms, but we're ignoring that because the real issue that we should be focusing on is not TikTok. It should be on data sovereignty. Data sovereignty is where users get to choose where their data is located, whether their data is located in the US or outside. And to me, the better way to handle this is for either the president to pass an executive order or Congress to go in and pass data sovereignty laws that says all social media platforms have to give the users options of where their data is stored. If we had that executive order or law in place that said every social media platform within a year has to give users an option of whether their data is stored in the US or not, now we're shifting it from focusing on TikTok to saying TikTok has to figure out how to get their user data in the US just like every other social media platform.
Okay, so walk me through how that would change the social media experience for us all, because this data sovereignty I think is so fascinating. And I will say I'm probably one that's too free with my data because it feels like, you can't control one platform, not the other. It's sort of like at this point, I have like Amazon Alexa. I'm sure she has all of my data. So for that reason, I kind of just say, everything has your data. But would this change our social media experiences?
So the good news is, it wouldn't change our social media experience. We would still operate the same way, but on the back end, you're more protected. On the back end, you're more secure. So your data is only accessible within the US. But then this brings up the bigger issue. Do we really trust Meta more than we trust the Chinese? I mean, Meta is using our data for targeting, personal purposes, and everything else. So the reality is, whether our data is in the US or China, it's really a privacy issue. Do we really want all of that data and information out there? And like you said, people don't even realize it, but try this on your iPhone. Just go in and start talking about a topic. But let's just talk about a random topic like books. So you're interested in books, want to read books. If you then go into your phone and you open up Google and you type the word W, it will auto-fill in what are the top books. If you go in and put in what is the price of books, it is listening to everything we're doing. So this is really a bigger privacy issue, that it's not just China, but our data is being accessed by these social media platforms and potentially used against us.
It's wild. It's ridiculous to me the way I'll even have conversations away from my phone and it's still on like another device connected to my phone. It will pick up these things I'm talking about. Like every stock I talk about ever somehow ends up on my Instagram, which is always a pain. But last but not least, just curious about AI and your thoughts about some of the data and the continuous server build and all that. Only, I think, further challenges the entire narrative you're making, because AI is only going to complicate things as it only develops and further strengthens this mass amount of data.
Yeah, and that's sort of the really, really interesting part of this is, to me, AI, if used correctly, is a net positive, because before AI, all of our data was being captured and used against us. It was being used for marketing and things that could be adverse. Now with AI, it's actually being trained on who you are, what you like, and now it can be used as a tool to benefit you. So to me, when I hear a lot of these executives saying AI is going to replace your job or 30% of the workforce is going to become obsolete, to me, that's the wrong, naive way of looking at it. The way you should be saying it is AI as a tool is going to make your job more valuable. It's going to make you more beneficial, because now it's going to let you search and find things a lot quicker. So we have to look at AI as a tool to augment humans and not as a way to replace humans.
All right.
I completely agree. I mean, like having a curated search.
RKT, pushing a bit higher.
Complaining about that. I'm like, better that than, have something that I'm not interested in, right? I don't necessarily see it as a malpractice. I'm like, there could be very wonderful things that come consumer to independence, which I love the way you phrase that. So we appreciate it. We're out of time, but the great conversation. So appreciate it, Eric Cole, CEO of Secure Anchor, for all that wonderful insight on everything TikTok and hopefully what we're talking about by 2026, as he said. But coming up next, it's time for Under 30. We are switching gears and focused on cruise lines as we are seeing TD Cowen with some favorable analyst calls today on the entire space as a whole.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange. Wow. Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Next time, investing, it's now time to set the seas here and talk these cruise lines, which are getting an appreciation note from TD Cowen today, all with buy ratings on all of our three major U.S.
All right, S&P continues to fade a bit more now.
George Tillett to talk more about this note in the space as a whole, which this analyst called underappreciated share gainers in the travel space. You have to agree with that, but also, like, I think the entire travel space right now has been volatile because we still have like so many unknowns regarding what future policy looks like. So walk us through your thoughts here with cruise lines, George.
Okay, hedging flows continues to fade. Continue to fade here.
Consider, I guess, in the larger context that the cruise lines like Royal Caribbean, Norwegian, Carnival are basically taking the same play out of the airline playbook. And what that is over time, particularly since the end of COVID, these industries, as a group, this whole group has actually cut back on capacity and has increased their bookings rate as well as increased their operating leverage. And so price.
You did talk about the building costs at the Federal Reserve for the renovation that has been the Trump administration's reason or excuse for criticizing Powell recently here. Also, Treasury Secretary Scott Bessent chiming in with his latest criticism of the Fed, that he says that the organization has mission creep, which is something that has come up over the past couple of days. And he says that the Fed should be cutting rates now. So basically just a reiteration of some of the recent criticisms from the White House towards the Federal Reserve. We'll be continuing to monitor it here. We had a fascinating conversation earlier in the show with John Hilsenrath, formerly of the Wall Street Journal, as well as Greg Ip, currently the chief of economics correspondent at that organization. And both of them saying that the Fed's independence has already been compromised to some extent by the actions of the White House. And this is something that we're talking a lot about. We'll continue again to monitor this press conference for any further commentary here. In the meantime, zeroing in on a particular stock here, we're looking at
Microsoft back down to the low. Microsoft. Apple just off the highs. So we got a little bounce, a little spike to the upside on some of these stocks. But back to what we were doing before. Just kind of like chopping around.
And we saw that big run of catalyst because of the Genius Act that just signed into law on Friday. So that's been very bullish for the stock. But now at angle over at Compass.
Good opportunity. When I hear people around here anecdotally say, "Have you seen what you can get in New York?" 10%, 11% tax. I mean, that's been the silver lining. So my answer to you is like, it's been across the board. And so if you think about where a lot of these deals were structured and think about where the demand has been kind of centralized from muni bonds, two main themes here for, I think, fixed income investors in general.
There's been a lot
Bitcoin
of
trying to
fears
push a
taking
bit
on
higher.
lot of
Bitcoin.
duration, which makes sense, right? Just given what rates have done, clients want to stay kind of 10 years in. So if you have a lot of these deals that have longer maturities, you don't have any natural buyers in that part of the curve. So what you've seen is that higher supply has really put a lot more pressure in the longer end of the curve to where the muni curve is tremendously steep. So when we talk about opportunity now, your long end munis are up 80 to 90 basis points in yield. So now you're looking at tax equivalent yields for New Jersey, New York investors in the long end, anywhere from 8.5% to 9.5%, depending on the credit quality and range, which is just absolutely incredible.
I mean, is that sure money? Is there, because at some point you go, okay, there must be some risk that budgetary, I mean, I know it's been a long, long time since there's been any real concerns,
Yes.
but just
No, it's a good question. It's a good question. And I think it all depends on how you take exposure, what type of credit quality, right? Like in any market, there's going to be a vast amount of different credit quality in issuers. The main takeaway
Tesla higher low, looking for a higher high now. Tesla.
was the reduction in Medicaid.
Looking at the indices
For the most part, they all have
currently.
to balance their budget. So, you know, like it all is going to be on a state by state basis. So if a lot of states are
Currently looking at the S&P 500, almost 400 stocks advancing on the S&P 500, 400 advancing. Much better showing than yesterday. 60 out of 100 on the Qs, 60 out of 100 on the Qs are advancing. And we got more than 1,000, almost 1,100 stocks on the IWM advancing versus declining. So it's about 50-50 on the IWM. S&P 500, though, we're looking at nearly 400 stocks out of 5. 400 out of 5 advancing. So we should see the S&P push a bit higher, I would think. Is it an index of stocks or a stock index? Rain's really coming down hard. Oh.
It's hard to not, think seriously about these opportunities. Appreciate Nisha Patel joining us from Parametric. And that's it for the exchange. I will go join Dom Chu today for Power.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today. Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Morning movers, be the first to find out what's shaping early market action. Check. Options Corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Okay, Google's starting to lift again, higher low on Google. Tesla looks like it wants to go. All right, the S&P got a lot of stocks advancing, almost 400 stocks advancing.
afternoon. Welcome to Watch List. And Nicole and the ladies, we're live
Tesla.
for the New York Stock Exchange. It's 2 p.m. Eastern Time. I'm so glad you are with us. Just checking to see
Tesla's going to blow. There goes Tesla. Tesla. Let's look at the hedging flows on Tesla. Continue. Okay, here we go. Tesla. Hedging flows turning up again. Okay, looks good. Okay, hedging flows turning up. Looks good. Trying to get a breakout. S&P turning back up. S&P. Okay, what's Oklo doing? She's talking about Oklo.
So you're seeing some back and forth action throughout the day. And even here, right? The S&P now is down. The NASDAQ is down 111 points. That's a half.
Oh, no, Nicole. You understand, but we should see this rally up here. S&P. 400 stocks advancing.
CBOE, and good afternoon to you. Oil and gold are mixed. The 10-year bond is at 433. Kevin, so we have some good action here today. Some of your thoughts?
Yeah, I think this is all a very dry powder day leading up to a big day that we're expecting tomorrow with Tesla and Google Alphabet.
Okay, SoundHound, higher lows. We did have a little pullback on SoundHound. NASDAQ 100, NASDAQ 100. We've got 63 stocks advancing, a little bit better than 50-50.
I think one of the big stories here is just this. The high-flying stocks that have run so much in the last 3 months, they're struggling. Despite good earnings, the stocks aren't going up.
AMD, nice little dip. Got bought. AMD. Okay, Google looks like it wants to go again. Earnings tomorrow. Google and Tesla earnings tomorrow. Okay, Tesla's near the highs. Maybe I'll take some of Tesla off with a profit. Let's see. Yeah, I'll take these higher ones off here. Let me take this off here. No, 340s.
We'll have to wait and see what happens. In the meantime, General Motors came out with numbers. Some of your thoughts there, as we heard from GM. I mean, there was a beat, some good numbers in there.
340s. Let's see if we get some more upside here. Okay, S&P turning back up. S&P higher low.
Their guidance right in line with where it was between $8.25 to $10. The estimates on the street were $9.30, so pretty much right in the middle there.
Okay, Broadcom turning back down.
Between $4 and $5 billion of impact from tariffs. Now, the adjusted margins overall 6.4% versus 9.3% in 2024. North America 6.1% versus 10.9%. So margins coming down a little hurt from tariffs, and the stock down about 6%, Nicole, despite an earnings per share beat.
All right, next up, I'm taking a look at the home builders. I mean, they were winners here, leading the S&P 500. Names like D.R. Horton, Pulte. Some of your thoughts there?
Remember, the beat-up housing sector and the home builders, those are the ones bouncing with big percentages today. We got D.R. Horton up 15%. Their earnings per share, $336 versus $292. Revenue, $9.22 billion versus $8.78. So big beat on earnings per share, big beat on revenue. Third quarter earnings, remember, this is their fiscal third quarter. Homes closed 23,160. That's down 4%. Home building revenue, $8.6 billion. That's down 7%. So maybe those numbers
Remember, homes closed down 4%, revenue down 7%, better than expected. And that's why the housing sector showing signs of life. And when everything is bad news for the housing sector, as it has been, all the data, it takes very little to make these stocks rally. And you're seeing that today in DR Horton. Now, Pulte, similar story. $3.03 a share versus $2.95. Revenues $4.4 billion versus $4.41. In line in the revenues. Their home sale gross margin 27%. Backlog.
Okay, see if we can get some more short covering. It's after 2 o'clock. I usually look for institutions to show their interest after 1:30, 2 p.m., particularly after 2 p.m. See if there's any interest. Looking for dips to buy. Stocks like Netflix, which are down quite a bit from the all-time highs. Looking for a base. CoreWeave, looking for a bounce, a base to build. CoreWeave turning back up pretty aggressively. CoreWeave aggressively.
You've seen inflows. People have been more and more mesmerized, and they want to be part of the ETF trade, active ETFs in particular. David Mack, ETF product capital markets for Franklin Templeton, is
Okay. S&P looking for another push to the upside.
ETFs. You tell us, what are some of the trends?
Sure. And thanks for having me, Nicole. Right. So
I don't know what happened to my risk reward calculator. I think it got deleted by accident. Risk reward, stop underneath from earlier. That's 2 to 1. 2 to 1 if we make it back up to supply for a 0 day. The earlier entry was around 10:30. I mentioned the 6305s. Okay, CoreWeave on the move. CoreWeave. CoreWeave with a nice little squeeze, taken off to the upside.
We've seen people turning to active ETFs, and they've accounted for nearly 40% of the net inflows. And that probably could grow.
That could grow. Yeah, it's really exciting, and we're seeing it really broadly. And we're seeing it fixed income, we're seeing it in U.S. equities, we're seeing it in international equities. So just more and more investors who have gravitated towards ETFs. ETF industry brought in $1 trillion last year.
Okay, CoreWeave, nice rip there on CoreWeave.
We're just seeing more investors getting comfortable saying, "Oh, I like ETFs. Now I can get out." So,
All right, CoreWeave. CoreWeave, let's see what the flow looks like on CoreWeave. You would expect it to be moving higher. CoreWeave flow is moving higher. Let's see, put call. Calls out. Yeah, calls are definitely outperforming the puts. The blue line are puts. The orange line is calls. CoreWeave looking good. Hedging flows ramping up on CoreWeave. Okay, looks good. Calls getting bought on CoreWeave. You can see down below CoreWeave. Okay. A lot are at the ask. A lot of these trades are at the ask. Let's see. Tesla looking for that to keep going. UMAC is turning up. UMAC turning up. Yo, UMAC. UMAC turning up too.
and that's one of the things that we're talking with investors about is, hey, let's have a thoughtful asset allocation, a lot of focus on growth, and so they're
UMAC catching a bid. All right. S&P 500. Dealer hedge flows. Okay, looking for that to turn up again. Dealer hedging flows.
When you say tax exempt, I mean, at some point when you take your money out,
Can I do?
That's one of the beauty of municipal bonds is
that's good for folks. People love that. The generation before ours loved baby bonds. Maybe the younger folks don't know as much about it, but it was definitely a wave that we saw in the prior generations. Tell me about valuations outside the United States. Are you finding places to park some money and make some money?
Sure. Yeah. So a lot of focus on international equities, and one of the things that's interesting, given all the
Buy dips, sell rips. Speaking of dips, what's JP Morgan? JP Morgan still fading from the high. Okay. Tesla running. Nice move on Tesla. Okay, Tesla. There we go. Tesla. All right, good thing I took those. I had a sell order out there for Tesla. Shorts covering. I'll sell an iron condor tomorrow on Tesla. Probably later in the day, 2:30, 3 o'clock, something like that. I'll sell an iron condor. Tesla running up Tesla.
These are strategies of their own. I mean, they probably work independently of some of the volatility in the market. Big picture, are you more bullish, bearish, or what?
Overall,
Tesla flow is ramping up on Tesla. You can see there, Tesla's flow. Tesla flow is ramping up. There we go. Nice move. How you doing, Frank? Good to see you.
You would be saying take half off the table or go to cash or take profits. It's good to see you, David. Thank you for being here, David. Thank you for being here. ETF Product Capital Markets, Franklin Templeton. Thank you, David. Coming up, Options Corner, and Tom White is standing by. He will highlight unusual options activity from the day. Investors are looking to trade on recent news. FGM Resorts, SLB, Rocket Companies.
Tesla still running. Tesla still running up. Looking good, Tesla. Tesla on the move. All right, it's me taking a little Tesla off the table. Nice trade there. Highlighted by LA earlier. Tesla, nice move on Tesla. Tesla looking good. CoreWeave continuation. CoreWeave continues to push a bit higher. CoreWeave catching a bid, looking for CoreWeave to continue. Looks pretty strong. All right. CoreWeave still moving higher. Tesla, nice move on Tesla. Starting to lose a little momentum here, Tesla. I have 335s, Tesla 335 calls.
It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
More buy order blocks on Tesla. You see that? Buy order blocks. Bump, 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 bump. Nice follow through.
Names every day.
Yeah, I almost bought some of that BP. I didn't get around to doing it. Nice trade there, Frano. BP Amico. Nail. The builders continue to go. Builders. Oh, wow. Wow. Ozzy. Crazy train.
Hey, Nicole. Yeah, this one, it's been a tale of two cities for a lot of these gaming stocks, right? They're doing well in Macau now. They weren't doing well in Macau last year. Vegas was really good last year. Vegas not doing so hot anymore. So they just can't seem to right the ship here just because portions or segments of their business aren't doing well while the other does well. The stock was downgraded today out of Seaport Research. That the Macau was a surprise to the
Ozzy.
upside. But then,
Is it true? Jeez, that sucks.
that's going to be a drag. Maybe it's not going to last. Las Vegas continues to deteriorate a little bit as visits are down there. The stock's still up about 7% so far.
Oh, wow. 76.
Next week, so we'll get
That's a
some
cool photo of
clarity,
him, too.
on their objectives and where they see, future trends moving. But right now, it just seems like every time Macau does well, Las Vegas is down and vice versa. So that's going to be something they're going to have to figure out moving forward. But we did see some bullish activity. Probably this trader trying to take advantage that the stock's going to move higher post earnings. This was out in the August 1st weekly cycle that expires in 10 days. You're going to capture that earnings event on the 31st. Trader
Wow.
bought 3,000
That
of the
sucks.
August 37 and a half strike calls, paid an average debit of $1.20. So that takes a break even up to 38.70 over the next week.
All right, Broadcom still drifting lower.
Above the current share price in there.
Nail and XHP.
Volume's more than double normal daily average volume that we've seen over the last week of trading. And there's only been about 6,600 calls traded on the day. So this one trade was nearly half of the volume on the day. So we typically don't see big.
Okay, S&P just dropped off a little bit there.
This is probably one of the bigger positions that somebody's putting on ahead of earnings.
Understood. I'm seeing some analyst reports that are bullish. I mean, I saw Truist with a buy on MGM. They had its price target of $50. So that was some good news. But there was also some short interest and maybe some short covering happening too. Overweight from Barclays at $44. That's higher than where we are now. What about SLB? Let's turn our attention over to the world of energy.
Yes, having a little nice little rebound here today, up over 2%, but the shares are still down about 11% so far this year. They're up 30% from the 52-week highs also, so still in bear market territory. They did just recently, you see there from the chart, just bouncing off of those 3-year lows that we saw a few months ago. So it hasn't been a good run for SLB. They did have earnings last Friday. They missed on EPS just slightly. Revenue came in a little bit better than expected. So a mixed report. The CEO said that the company is navigating several dynamics, including fully supplied oil markets, OPEC plus supply releases and ongoing trade negotiations, and geopolitical conflicts causing that. Really high correlation to the price of oil, and we've seen the price of oil slip. We've got crude trading about $65 a barrel right now, so that's not a bonus. They did state that they're working on their new digital.
Ozzy Osbourne. Wow. Okay, Tesla just pulled back pretty aggressively there.
That's supposed to be, helping them move forward as far as what they're doing as far as digital
76.
automated oil field services solutions, which is what they're part of. But as I mentioned last Friday when they reported earnings, didn't really help out the stock, still lagging. But somebody probably taking a shot here, but giving themselves plenty of duration. I saw some unusual option activity.
All right, Tesla, big drop there on Tesla. Somebody just took some profits off.
22 days till expiration on this one. Trader bought over 7,000 of the 37 and a half strike calls in November. Paid an average debit just over $1.30 on those. So the break even of 38.81 over the next basically 4 months. That's about 13% above the current share price in there. Now, that break even 38.81. This stock for the first 3 months of the year was trading above in the low to mid 40s. at that point. So it does have that ability to get up there, but you're going to need a pretty big move. I think that's why the trader gave themselves plenty of duration for this trade to work out to the upside.
All right. And I mean, I see that it's near 3-year lows. Really disappointing for people in the world of energy. I mean, you know, that was always supposed to be somewhat of a safe haven, a dividend payer, blah, blah, blah. You know, everything else is taken off. But good to have a bullish trade there that you show us. How about rocket companies?
Yeah, shares are spiking today about 5%, up over 50%.
RKT. Okay, that looks good.
9-month highs in today's sessions. They report earnings next week also. But they did get a price target hike out of Jefferies. They raised it to $14 from $11.50. They kept their hold rating on the shares. Now, this has been an M&A story here for RKT over the last several months. They acquired Redfin recently, Mr. Cooper. So it seems like when the housing market and the mortgage market's not doing too well, Nicole, what do? Well, it's depressed asset classes right now in this space. So maybe this M&A activity will eventually pay off. I think that's
It's weird. So Rocket bought Mr. Cooper. That's weird because I had a mortgage through Rocket, refinanced through Rocket back in 2021 when we moved down here. And then right after, actually I had Wells Fargo, mortgage. Wells Fargo bought my original mortgage from a Jersey bank at the time. Hope. Let's see.
1730, where this trader starts to profit over the next 3.5 weeks.
Let's see, we got a new member joining us. Let me just shoot him an email. Lucas.
On a percentage basis, those moves aren't that common, but at the same time, when you have event risk like earnings, maybe this trader is looking forward to something positive where they're going to say maybe these acquisitions that they're making are going to be accretive immediately, and maybe they're going to give some semblance that the mortgage and housing market's turning around.
Look, as you said, some recent momentum and 6 months of 45%, 3 months
Austin,
of over 35%.
Texas.
Really has had some incredible moves. Tom White, thank you. Options Corner every single day here on the watch list on Schwab Network. So Tom brought us MGM, SLB, and Rocket Companies. Coming up, we'll break down KPMG's mid-year M&A survey.
Okay, Lucas.
Is that going to heat up in this space? It was supposed to, right? That's what people were saying. Well, let's see what they have to say now.
Okay, let me see. Let me get him here.
Trading at Schwab is now.
All right, looking for the S&P, shaking the tree here a little bit. S&P, they keep shaking the tree. All right.
Including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading Schwab is now by Ameritrade, giving traders even more ways to sharpen their
Okay, watching S&P at the moment. Still choppy. Could go either way aggressively.
all crafted just for traders and with guided learning paths stacked with content curated to fit your unique goals.
Okay, so watching here, 5 minute on the S&P, looking for this to rip higher. I got a hammer back down into this range. Didn't get quite back to that buy order block. Turning back up. Okay, looking for it to run up to that supply overhead. That would be a nice area to take the remaining position off.
Broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand.
Okay, Tesla climbing back up.
Schwab.com/coaching and start
Tesla climbing up the slippery fire pole. Google trying to climb back up to the high of the day. S&P trying to get back up.
Ladies, we're live on the floor of the New York Stock Exchange. M&A activity, that's been in focus for all this year. And now what are some of the
Can we get another lift here? S&P.
strategy? Head of markets at KPMG US is here to speak about this. We knew that everybody was saying the Trump administration was going to be business friendly and less regulated. All this M&A activity was supposed to happen. Is it happening or is it in the works? What's going on?
Oh, it's in the works. We had a survey back in May that talked about the fact that companies want to do a deal. Looking at a couple of things, yes, a very friendly M&A market, but 300 deal makers told us, half corporate, half private equity. 2025 was the year to do the deals. Reporters saying they want to do it, mostly though in the Q3 and Q4 25.
So I also feel like, and you tell me, I mean, when we got the tariff, board with 45%, people were walloped. They didn't really, understand it. It seemed like a lot. They didn't necessarily know how to value anything. Now, does there appear to be more clarity?
More clarity in the sense that, yes, tariffs are going to be at the norm. But the reality is you still got to do your strategy, which means acquiring other companies, thinking about what you want to do for your business. The question may be, though, you may look at other jurisdictions, other geographies, and thinking about ways to factor that into the overall deal thesis. So there's more certainty.
Come on, S&P. Okay, so the New York Fangs are still very mixed. A red day.
Do we know how much money is ready to go? You said 3/4 of the folks want to do a deal.
Yeah. Well, these are big
Most of the New York Fangs are, they're starting to turn a little bit. We've got Amazon turning back up. Could be a nice trade on Amazon. Do I have anything on Amazon? I think I sold my Amazon position. No, I don't have any. I have AMZU. Amazon. Okay. New York Fang components. Okay, still in this upward channel. A red day today because most of these are a bit lower today. Let's see. Tesla trying to go. Tesla above the 50 and the 200 day. Tesla above the 50 and 200 day. Looking forward to launch. Got earnings tomorrow. Okay, Amazon though. Amazon. Okay, so Amazon looks like it's going to keep trending. Maybe I'll try something on Amazon. We'll see. Let me see Amazon here. Amazon. Would like to be a little bit more bullish today. Do we have any buy order blocks and where is supply? Buy order block was earlier around 12:30. Here it is at 2:15, 2:30. All right, so 2 hours later, got a higher low. Not much in the way of momentum. I don't see overhead supply though. Let me go to the daily. Let's see what the daily has to say. Daily supply is up there at 238. Where are we? 227. What does Money Magic Levels say? Money Magic Levels. Got to use Money Magic Levels, especially if you're going to trade options. Amazon, we got 230, 232, 50. All right, so 230 is up here. All right, so if we do get anything going on Amazon, we could see that run up. It's stalling right now, Amazon. Lack of momentum. I don't feel it in the markets. Markets don't feel doesn't feel like they have much momentum here. S&P.
You may see more of that. So you talked about using tech and even technology, media, and telecom being areas that are hot, right? What about healthcare?
Still raining. Nice day.
Life sciences and healthcare. I think that life science companies are trying to focus on the future. Think about ways to incorporate the potential tariff considerations regarding their business. But I think more life sciences will see activity.
There was an article that talked about using AI for deals and that investment bankers, that there were going to be fewer investment bankers because this AI can
Got really dark out.
than the investment bankers.
Thunderstorm.
Does that have merit?
listen, I think that you're going to always find ways to enhance how you look at an overall target. But you're going to have people that have to be in the loop to help them understand what the AI is saying.
Right.
I would tell you, those that use AI replace those that do not. That's the difference.
How about here at home versus
Come on, S&P,
international?
let's
What
go.
trends are you seeing?
Amazon squeezing. Kind of bored. Really not a good idea to trade when you're bored, but I'm going to buy a few Amazon calls here. Let's see what we can get out of this. I'll buy Fridays. That way they'll be cheap. Or should I go next week? Let me see what these are going for. Buy or block recently, no overhead supply. We got 230 is the call wall. 230, 230, 250, Amazon. Okay, so let me go out another week. And I'll go with a 40 delta. 40 delta, and I'll sell like a 30 or a 25. 40 delta. 230, 235. What are we trading at? 227, 230. 230. Okay. All right, I'm gonna try something here with Amazon. I'm gonna try the 230s. I'm gonna sell the 235s vertical. Let's see what happens here. I don't want to chase it.
But the idea is most people still think we're going to get 1 to 2 rate cuts this year. Would you be in that camp? You like that?
Our economist is telling us that's possible, but it's going to help people do deals because it'll be cheaper. A lot of our finance the overall transaction.
Okay. I got some Amazon 230. Looking at 230. Amazon.
Despite all the noise in the system from early in the spring.
Right.
If he's going to go ahead and tell us deals will get done in the next couple of weeks.
What about IPOs versus M&A activity?
Well, you got to hedge. Some companies want to go out and do a track, might go out and try to do a transaction, but they want a marketplace.
Right.
Have some certainty in terms of the overall capital markets, but it's a lot more activity within our business. Focus on IPO readiness, getting ready for the next 18 to 24 months to go actual.
Is there any way to compare the current administration? I'm not really looking for the politics. I'm looking more for the trying to do the deals in the business side. This administration versus the Biden administration. Does it seem easier to do deals? I mean,
it's raining like hell outside. Wow.
Or the FCC or whatever. I mean, does it seem like an easier environment?
Yes, both in November survey and in May, the thought was it'd be a very friendly business environment. A lot more deals. 2/3 of respondents felt that because it's administration more business friendly, will create more deal opportunities for us. So yes, absolutely, they want to go ahead and do deals because.
Why? What makes it more friendly? Is it the people in the roles?
I think more so policy and philosophy that says deal making is a good thing, and of course you want to make sure you have the controls around competitive nature and trust, but. The deal makers are saying we believe this administration a lot more of that.
Yeah, because a lot of the deals got squashed.
That's right.
In the last administration.
That's right.
Okay. Well, it's great to see you. Dean Bell, Deal Advisory Strategy Head of Markets at KPMG US. Thank you for being with us. Technical Tuesday, Kevin Horner is standing by, and he will look at the technical levels, of course, of the S&P 500, Wire, and Oakland. We'll be right back.
Okay. Okay, Amazon looking good. Amazon. Okay. All right, we're back up. Looks like we're back up. Mic check, mic check. Let me see if we're open now. Let's see. Okay, welcome Lucas to the trading room. All right. Okay, let's see. Mic check, mic check. Mic check, mic check. Trade alerts. Let's see. YouTube, are you running YouTube? Let's see. Today. Mic check, mic check. Let's see. Yep. YouTube, are you running YouTube? Okay, so that's me talking to myself. All right, Tesla's at the highs, starting to taper off a little bit. I'm going to take a little bit more profit on Tesla. It's got earnings tomorrow. I have the 335s, so I want to take some profits on Tesla at the high here, if I can get out. Tesla, what's Amazon's turning up good. Tesla, 335s. Okay. Create a closing order. All right, so Tesla, gonna exit Tesla verticals. All right, Tesla, I'm out of the 335s. Okay, so I just sold some Tesla into strength. Might go a little bit more. Let's see. Where did the spider S&P went north? Okay, S&P. Okay, S&P is back up, moving higher. All right. Can we get something going on the S&P 500? Hedging flows turning up again a bit. Hedging flows turning up a bit on the S&P. All right. Okay. S&P. All right. So S&P, I just sold some S&P. S&P out the last. 6305s. Okay. What did that go for? I hate to have to like fall all over just to get the trade. 750. Okay. SPXW. Okay, looking good. Had to wait quite a bit. Had to be pretty patient today. Earnings tonight on Texas Instruments. Let me take a look, Corey. Let me take a look. I want to see at least 10% potential. Okay, expected move. Tonight's Tuesday. Enphase. Texas Instruments is only 4.8%. Let's take a look at Texas Instruments. TXN. Texas Instruments. Okay, tight. Bollinger Bands are tightening up. Okay, I just want to check a few things here, Corey. If you were interested, I'll set it up for you. Let's go here. Okay, Texas Instruments. Let me see what that looks like. Is it expensive? What's IB telling you? No, it's pretty cheap. Texas Instruments pretty cheap. 5% expected move. IB is cheap. So I'll pass on TXN. Okay, Corey, if I was going to sell calls, I would really like to see this up here. Okay, even Tesla over here, you can see it's cheap volatility, downside potential. So I might sell overhead. Bear call spreads. I don't know. We'll see tomorrow. I don't see Tesla lifting very much. Texas Instrument is fairly inexpensive. IV. Let's see what the IV for Texas Instruments. SoundHound, for example. SoundHound is IV of 104%. Texas Instruments is only 35%. Greater than 50%. Greater than 50% or higher. SoundHound, for example, SOUN is 104. 104. SOUN. Okay, Texan is 39%. Is that right? Texas Instruments, 39%. That's cheap. TXN. 35%. 35%. Okay. What else is trading? What else are these earnings tonight? Okay. Enphase 11%. Enphase, that's 11%. Let's see what Enphase looks like. Enphase. Okay. Okay, Enphase. ENPH, Enphase. Okay, see, Enphase is much higher. See Enphase here, expensive volatility. Enphase is, I might do Enphase. Let's see. ENPH. Oops. ENPH. Volatility survey says 84%. Enphase. 84%. 84%. Here you go. You hungry? Nobody's feeding you? With all those people downstairs, they don't want to feed you? It has to be me all the time? Huh? You believe it? They don't even feed the kitty cats? What am I supposed to do? Those humans. All right, so Enphase looks good. Texas Instruments is down here. That's Texas Instruments. Okay. Okay, nice one there, Edmund. I see you've been trading ZEP. Okay. Yeah, that looks pretty good. Looks pretty good. ZEP, I'm not into catching these kind of trades. I'd rather see a base first, but yeah, I see what you're doing. I see what you're looking at. Looks good. Yeah, it could be, Corey, that you may very well be doing. Um, you're probably doing something different than I am. Okay, so yeah, we're probably looking at two different things, most likely. But what I always base my trades on is the same thing every time, so I don't want to change to something else that may tell me something different. I'm just looking at I'm looking at spot gamma, okay, and Texas Instruments is down here in the bottom left quadrant. Whenever that's the case, I know that these are cheap. and most likely could see an upside move. And it'd be something I'd want to buy instead of sell. Texas Instruments. And you can even see it. You can even see it in the chart. Yeah, you can even see it in the chart, which is pretty interesting. Okay, so just something. We're looking at two different things probably. Okay, so I would rather, if I'm going to sell premium, I would rather do it when Bollinger Bands are really wide. So with that in mind, okay. All right. So here's Texas Instruments for your viewing pleasure. Oops. You got me all flustered there, Corey. It's not a big deal. I understand what you're trying to show me is something probably different than what I'm looking for when I think about taking a trade. Also, you see that the expected move. Also, the expected move is only. Okay, so it's helpful. I'm not criticizing. Not criticizing. Okay. Okay, so I'm not criticizing you. I'm just trying to help you understand what I'm looking for if I'm going to take a trade. You asked me if I wanted to take it, so I looked at the things I normally look at, and it's just bing, bang, boom. I know exactly what to look at. Whereas with in phase, I'd probably be interested in phase. Let's see what the Bollinger Bands say on in phase. Yeah, those are pretty tight too. So very interesting. The expected move is higher, even though Bollinger Bands are pretty tight. So there again, this doesn't tell you a whole lot, right? But looking at Spot Gamma's scanners, which I trust, which I trust very much, because the more I use this, the more I realize this is spot on. Okay, so in phase, I'll pass on in phase too, probably. That's weird. That's twice. So that's exactly twice. Yeah, so I'm looking at 34%, 35%, and I can expect to move at 5%. So TOS is telling you 66% IV and 10% expect to move. So yeah, something's not right. So that alone would keep me from taking a trade. I don't want to do it on a gut feeling. Amazon, okay, Amazon's starting to flag a little bit. Okay, buy order block. Looking for that to follow through. What's SPY? S&P. We got an hour. We got 56 minutes to go. 56 minutes to go. I'm your host, Cousin Vinny, coming to you from closingprint.com. Just having a discussion with Corey in the trading room, asking me if I would be interested in selling premium or an iron condor on Texas Instruments. I'm going to pass. The metrics I use, the methods I use, give me a 5% expected move and 35% IV. So with something like that, I wouldn't sell. Always look at the same thing. So I'm assuming that the data that I'm looking at hasn't changed over the years. The volatility metric that is put together by John Carter. Not everybody likes John Carter. Let me just take a look at this real quick and see if there's anything giving me errors. I don't think it is. Edit studies. Let me go to utilities, volatility metrics. Let me see what this does. Yeah. So I imagine it just takes the data directly from Thinkorswim because there's not many inputs here that I can see. High, low. All right. Okay, so that's Texas Instruments. Let's see, got kind of quiet in here, right? Got kind of quiet. Let's see. So the power went out. They had a pretty decent thunderstorm pass through. And now we're fine. Yeah. Okay, Lucas, I'm going to go through this with you real quick. Okay, I'll show you what I'm looking at. So you trade NVIDIA a lot, Tesla a lot? Okay, cool. I'll wait for you to respond. Lucas, if you're listening. Lucas. All right. Okay, Amazon's trying to push a bit higher. Amazon. I bought some. What did I buy? Amazon. I'm sorry, I forgot what I bought. It was in the discussion with Corey. Amazon. I bought some. Survey says I bought the 230s. 230s. I sold the 235s for $198 per contract. I got 5 of those for now. And let me see. Let me just do a calculation here. Duplicate order. Let's see. Let me just look at this. So risk 100 to make 300. Okay, so that Amazon trade, risk 100 to make 300. Amazon. Amazon. Where did that trade go? Did I post it? I thought I posted it. Amazon. I just posted it, right? Amazon. And from me to you. Amazon. Yesterday. July. Okay. Apparently I didn't. So Amazon. Okay. Okay, Amazon. All right, I took these August 1st, 1 August DTE, 230, 235, 230, 235 verticals, risking 100 to make three, what was it? 300, duplicate order, 300 to make 100 to make 300. Okay, Amazon looking for higher highs. Apple's starting to push a bit. Tesla looks like it wants to go some more. I completely closed out my Tesla position. Probably do something tomorrow. If Tesla has a decent amount of implied volatility, I'll take it. Oh, you taking BP again? Okay, let me take a look at BP, see what Frano's doing. BP. You're doing September 19th, 35 calls? Okay. That's spec play. All right, so that makes sense. Let me join you because I was going to do it earlier. I'll join you, Frano. I'm a big boy, so you don't have to say anything other than I'll say thank you, especially if it wins. September. So you just did yourself a favor. That's what I always do. Okay, always question the data, you know. I saw a great quote yesterday. It was really cool. I wish I could remember what it was. It was so prophetic. I was meant to write it down. Something like happiness is a emotion, and attitude. I forget exactly what it was. It was really good though. Positivity, being a positive person. I'm always a positive person. So basically, the tweet was something like, happiness is an attitude, and being positive. I forget exactly what it was. It's going to drive me crazy now. I have to see what it is. Anyway, I kind of got sidetracked here. I apologize. It's we got about 47 minutes to go. 47 minutes to go. BP. All right, so I want to do BP. All right, got sidetracked there. Frano's looking at September's. I thought I took a trade on it this morning, and I didn't. That's weird. Must have been something out weird. So you're looking at the 35s. Those are a 23 delta. I'll join you. I'll go with the 48 delta. That's a 33 for September. I'm going to do that a little bit more expensive at $1. Let's see what happens here on BP. I'll take the September 19th, but I'm going to take the 46 delta there, Frano. That's 33. Okay. Let me see here. Let me just find this real quick. All right. All right. We are fading a bit. So if you did take profits on your S&Ps, I'm out of that position, I believe, right? Yeah, I'm all out of S&P. The great thing about trading S&P big caps, okay? So if you've ever traded SPY and got assigned shares, you know the feeling, especially if you don't have the money in your account and you get assigned 500 shares of SPY, SPY. That happened to me last year sometime. I believe it was SPY. It was on a Wednesday. It was also a Fed day. The next day, I woke up and I didn't realize until after halfway into the morning trade, realized that I'd gotten assigned 300 shares of the SPY. That was last year. So let's go to the weekly. And it was after a Fed meeting. It was after a Fed meeting. And I didn't close the trade. I had like 5 calls and I closed like 2 or something like that. Or maybe I had 10 and I closed most of them. Maybe 3 didn't fill. So it was like over here somewhere. Seems like it was fall. So at 580, right? $580, getting assigned 300 shares can definitely, definitely wake you up, definitely wake you up, $160,000 flashing on your screen. Please deposit 5, whatever. In whatever case, I did have the money. I mean, it's just, I don't like to use margin or anything like that. And I forgot where I was going with that. Oh, SPX. If you trade SPX, right? Let's say, what's the high of the day? Let's say you forgot that you had the 6:30 calls, right? Let's say you forgot you had the 6:30 calls and you weren't paying attention. And by the close, we managed to rally up to yesterday's high. So we'd be a full point in the money. So you'd get assigned shares, almost 99% probable. And you'd wake up and you say, "Holy crap, I gotta figure this out. I got shares." So if you have S&P 500, however, if you have the SPXW and you close in the money, say we close at 63.38, all right? So for every point above your strike, 6,300, for every point above your 6,300 strike, for every call, you make $100. So you don't get assigned, you just get the money, right? I like getting the money better than getting assigned shares. So 3,600 bucks or 3,300 bucks per, no, 3,600 bucks per contract. All right. So you had the 6,300, you forgot about it, and the market's closed at yesterday's high. For whatever reason, it rallied up and you weren't paying attention. Maybe you got bored with the market's not moving and it closed at 63.36. Guess what? You'd be up 36 points for every contract that you own and $100 for every point. So $3,600. Big difference with trading the S&P 500. Now it's a bit more expensive, and they do move quite a bit. As you can see, they move quite a bit most of the time. So that's why sometimes I'll do verticals. Most of the time I'll just buy straight calls. Today we had the 6305. Okay. We had a 6305 from around 10:30. And that quickly got into the money in the evening session. We're still pushing a bit higher right now, actually a little bit a fade. So if you had the 6305s, okay, and you forget about it and it closed at 63.15, you make $10 per contract. 10 points. So times 100, so $1,000 you'd make, right? If you had the 6305s like I bought this morning. So that's the beauty of trading an index like the S&P 500 versus SPY. I very seldom trade SPY unless I'm hedging, and then I'll buy something like Friday and it'll be out of the money like a 40 delta or something like that. Okay, what's going on here? Okay, we got about 40 minutes to go. 40 minutes to go.
As I look at their chart right now, up about 9 3/4% on the day so far on that news. We do want to rally to an all-time high today. We'll dig into this. Joining us to discuss is Christopher P. Davis. He's a partner at Hudson Value Partners. Christopher, thank you for being with us. I'd love to start just with takeaways from Northrop and how they emerged to be such a
Okay, Amazon pushing a bit higher. Amazon.
Yeah, Northrop certainly standout performer from the defense names on the day. Like you said, 3 of them reported. Their key programs right now are the Sentinel missile program, the upcoming B-21, and because of their strong free cash flow generation, they were really able to guide investors to think about the future. I think that's been the real difference.
Okay, kind of a slow day. Not a whole load of volume. I mean, we had some volume, but not like we had previous weeks where the markets kept trending all day.
The day here certainly our loser. They had a profit forecast cut and after doing what they call the portfolio review. What were your takeaways there?
Yeah, and it's surprising because Lockheed Martin, they're the makers of some key components of the Patriot missile system, THAAD, key things for the war in Ukraine with the war between Israel and Iran. So it just goes to show in defense, it's not just about having the products that are in demand. You have to make money doing it. I also thought in Lockheed Martin, their book-to-bill was pretty weak at 0.65 times. That's a measure of orders that are delivered versus orders coming in. So it just shows that a single product doesn't really drive a big integrated prime defense contractor. And, if you look at Lockheed Martin on the chart that you have up there today, in a longer time period, it's broken through just about every level and every measure of support too. So it's in a tough spot.
Yeah, you're certainly having a rough day. One of the worst performers on the S&P 500. They hit a low since October 2023. But they're saying this is no extra charges expected. This is a one-time.
Okay, Tesla, a little profit taking in Tesla. We got Meta starting to turn up. Meta's starting to turn. Meta turning. Okay, it looks like Frank is in Lemonade. Lemonade. LMND, Lemonade.
It's a lot harder for these companies to be able to push through cost overruns onto the taxpayer. So for investors, it becomes a lot more of a show me story. These are long cycle contracts and long cycle industrial businesses. So it's probably going to take more than 1 or 2 quarters for them to turn around. That said, one of the things we love at Hudson Value Partners is to step into one of those great franchise blue chip companies when they have a black eye. And the numbers on Lockheed Martin are certainly appealing at 15 times forward earnings, a 3.1% dividend yield. However, we really would need to see this, start to plane to nose up a little bit and fly straight and level for a while before we could step in. But it's definitely interesting and getting more interesting by the minute here.
So it's not a buy the dip right now, but it's a watch the dip carefully scenario for Lockheed.
Exactly.
Okay, and then as we look at RTX, the other big one we got today, Raytheon, they beat expectations, but they lowered full year guidance due to these tariff impacts from steel and aluminum. What major takeaways did you have from that? Certainly, they are not suffering the way Lockheed is, down just a little over 1% right now.
Yeah, Raytheon, that's a merger of
Okay, looking for Amazon to push here. Amazon. Okay, so I bought those 230 calls. I'm looking for this to ramp up. Amazon. Lemonade. I like that, Frank. Looks good. Lemonade coming off the 50-day. Okay, Amazon.
I'm a little surprised, and I think it might be some signaling out there from these companies to the administration that, hey, if defense is a priority, you need to make sure there's going to be some tariff exemptions in order for us to be able to be that arsenal of democracy in the West that you want your American defense contractors to be. It's one of our prime exports.
Yeah, certainly. And defense spending is growing across the board, both here and abroad. They're just the first round of defense earnings that we've gotten. We've got several coming up here, some smaller names. Is there anyone in particular that you're watching for?
Yeah, there's one that we're watching closely. We're excited for. We're owners of the stock, and we think more people should be too. It's called Amentum. AMTM is the ticker, and this is a small cap name, about a $6 billion market cap, 243 million.
Okay, I don't want to hear somebody talk their book. Okay. Don't need to hear you talk your book.
All right, this is pretty dull. Now, one that's fascinating. The S&P 500 has been above its 20-day moving average for almost 3 months now. That's the
Ryan Dietrich's on. Ryan Dietrich's on.
1998. We're back 50 years. When you go about 3 months above that short-term trend line like we are right now, and then you start the clock, what happens next? 1 year later, up between 19 and 26%. A year later, higher every time, and higher 6 months later every single time. So the reality is this blast of strength the last 3 months, in our opinion, is extremely
Okay, here we go. Amazon starting to go.
Start a new bullish phase. That sounds kind of crazy to say, but that's what we're seeing here.
Rick Reeder was just on with me, and he doubled down on this generational opportunity, both that he says in tech and where bonds are concerned. Give me your view on what are traditionally seen as hedges right now and how those fit into your thesis.
Absolutely. So we've been underweight bonds for a while. We added some treasuries early this year for the first time in a while, but the thing is that diversify your diversity.
Okay, Amazon pushing here.
60% stocks, 40% is the other stuff. We'll talk about the other stuff. We added gold for the first time in our tactical models back in April of 2023. Just recently added some more gold to more of our longer term strategic models that we run for our Carson partners. So we like that. We've got some managed futures in there. We have some cash. I mean, we're not too warm and fuzzy on bonds. We do think there's other areas that can help you diversify your portfolio. But at the end of the day, we're still overweight stocks.
All right, you can see the buy order blocks here.
I want to admit that the thing that I'm really impressed with is that you know when Flag Day is. Ryan, great to talk to you. Thank you.
Thank you.
We're getting some breaking news right now in Washington, D.C. Edmund Jabbers brings us that. Hello, Edmund.
See if we get a run in the day, maybe.
A short time ago, details of a trade deal with Indonesia.
Oh, Indonesia now. Okay. They did Philippines earlier. President announced a Philippine deal.
Of U.S. exports to Indonesia. They're also going to lower, the Indonesians are, non-tariff barriers. According to senior administration officials, Indonesia has agreed to accept U.S. federal motor vehicle standards. They're committing to removing export restrictions on critical minerals and a number of other items that the U.S. considers.
Okay, Meta's going. Meta's starting to run.
Non-tariff-related trade barriers. So a deal here being announced on social media.
Meta's turning. Watch Meta.
A huge win for our automakers, tech companies, workers, farmers, ranchers, and manufacturers. Tess, back over to you.
Certainly keeping all of the correspondents in Washington, D.C. busy as we track down to that August 1st deadline.
Meta's turning as well. Meta turning back up. There goes Meta.
Standing by with his playbook for the sector this earnings season. He joins me right after this break. Closing bell will be right back.
Meta. Nice turn there, Meta. Okay, Meta. Meta. Meta, let's see what's going on with Meta's flow. Meta's flow is turned up. Oh, what happened there? Meta. We go here, come back. Meta. What? That's not right. I must have clicked on something. Okay, Meta. Okay, Meta turning. Too late in the day, but looks good. Mm-hmm.
Big tech earnings set to kick off tomorrow with Alphabet and Tesla reporting after the bell. Joining me now with what to expect, Intelligent Alpha's Doug Clinton. All right, so you've got these two big names. Will there be a similar fuel to what they report?
So Contessa, at Intelligent Alpha, we use the major large language models to actually predict earnings for about 1,000 different stocks that we track and potentially invest in. And our models think, to answer your question, that both Google and Tesla are worth owning.
Okay, Apple, Amazon.
On Google, our models think that they'll have both solid top and bottom line performance. On Tesla, it's a little bit funny. The model's concerned about both the top and bottom line, but it actually thinks that everything is sort of priced in at this point. Everybody knows that Elon sort of created some trouble for demand in the near term, and it still likes the stock.
Amazon.
So those are the two that, even though they might have different outcomes in terms of their actual earnings, we think they're good stocks.
Amazon, the flow continues to move higher on Amazon.
How much computing power it takes to ask AI about Google when there's all of the speculation about whether AI is going to kill Google search. And it certainly seems to be having an impact on what advertisers are willing to spend, considering how much click-throughs have dropped. How do you balance that?
What we, I think, won't get the answer to tomorrow when Google reports is, what about the GPT overhang? I mean, that's kind of how we think about it. If you look at Google's multiple, Alphabet's multiple, it's 19 times next year. The lowest other Mag 6 stock is 25 times, and that's Meta. And so there is this, I think, reality that's priced into shares of Alphabet already, that people expect them to have this gigantic headwind from the shift to AI. I don't think we're going to see that impact numbers dramatically. I mean, we've had a few quarters in a row now where We've had this kind of question about what does the future of search look like? And despite that, we've still seen strong spend, even if we've had volumes and CPCs maybe variable.
And on Tesla here, what could be catalysts, especially when we're seeing the auto market somewhat pressured?
I think you look around at some of the other stocks and things that have been happening even today. I mean, we've talked about Open Door. We've seen the things happening with Kohl's that are quite
Okay.
I think Tesla.
All right. Amazon continues to show flow rising. Now it's starting to taper off a little bit. Amazon. Let's see. Amazon. Amazon. Okay. Amazon with buyer blocks today.
Because I think everyone sort of knows at this point that the core auto numbers will be challenged, and they might be
Amazon buyer blocks.
But it's always with Tesla kind of what's coming next. If we get a sense that maybe robotaxi is going better than
Okay, we've got 25 minutes to go. 25 minutes to go.
in terms of future launches, that could be positive for the stock.
We're seeing some of the other Magnificent Seven rolling out earnings next week. I note that you don't own Amazon. Why not?
We don't. So our models are concerned about Amazon on the top line specifically. So they've sort of noted that Amazon might miss on the top line number. Our models are AI models.
S&P turning back up.
Will be fine on the bottom line, so they might have some solid margin performance. And I think the reality, the underlying reality for that concern is, just look at what's going on with tariffs. I think there's still a lot of uncertainty in terms of how that's ultimately flowing through to retailers, Amazon being the biggest one. And so our models are just sort of cautious going into this quarter about what that top line will look like. And then ultimately, more importantly, what guidance will look like to reflect what's coming with tariffs.
NASDAQ right now is at 29.22, so just slightly below yesterday's all-time high that we closed. Why do you think that there is still momentum behind the tech trade, that there's still opportunity on the upside?
Because I think when we came into this year, the core narrative was sort of about the broadening, this broadening trade. Everybody was sort of the mega
You get the award-winning features.
Amazon looking for a push higher. We've got Tesla turning back up with 9 minutes to go. 9 minutes to go.
No overdraft fees and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst call. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Market
All right, market's holding up pretty well. Going into the last few minutes of the trading day.
Joining us today is Lizanne Saunders, our Chief Investment Strategist, Charles Schwab. Lizanne, thanks as always for being with us. Now, I'd like to just start by getting your thoughts on the week so far and the earnings that we've seen.
Yeah, so far so good. The actual bar in terms of the consensus for year-over-year growth actually was set fairly low at only about 6% growth. And in terms of the most widely followed metrics like the beat rate and the percent by which companies have beaten, the former is in the high 70s. That's about in line with the 4-quarter average. The percent by which companies have beaten is in that 6 to 7% range, which is also in line with the 4-quarter average. I guess what's most interesting is that
Okay, what was that? Okay, bull. Bull moving higher. I just sold some covered calls into that. I've had bull for a while. That's turned back up.
Much more severely, and that's been a trend that's been brewing over the last couple of quarters, and I think it probably persists throughout this earnings season.
And I had been talking a little bit about that with Kevin Hanks earlier, that it felt like we weren't seeing a lot of reward for upbeat reports, but we are certainly seeing the hammer come down on any misses or any guidance that anyone doesn't like. What do you think is driving that? Will continue to drive that?
Well, we're in a skittish environment, and a couple of months ago we saw, or I should say maybe 3 months ago, in the immediate aftermath of the April 2nd reciprocal tariffs, you did see a pretty significant increase in companies that just withdrew guidance altogether. But then you've had a lot of
Okay, 10 minutes, 6 minutes to go, 6 minutes to go.
I just think what the misses being more punished represents is, even though the actual bar was set fairly low in terms of the number, the percent consensus, I think the psychological bar was set a bit higher. And that has to do with the incredible rally off the early April lows in the market. We're just in a little bit more of a, you need to prove me at this point. Valuations have expanded without the benefit of forward earnings having expanded. Complacency has built in, and that's just the setup for misses getting disproportionately hurt relative to the rewards accrued to stocks of companies that beat.
You mentioned April and the beginning of the tariff announcements. We did get, a touch of clarity, at least for the Philippines, on tariff rates today. But as I was reading through one of your notes, you made such a good point about tariffs and how little people actually understand about how they function. So I'm hoping that you can expand a bit on who actually pays the tariff, because I think this is really important for people to know.
It is important, and it still surprises me, given how much discussion there is about tariffs. how much misunderstanding there is at the most basic level, which is who pays the tariff. Because of the, at times,
Netflix still drifting lower. Netflix.
we hear from at times members of the administration that will talk about either, tariffs on China, tariffs on the EU, but maybe more directly would say China's paying us more now in tariffs, or Japan is paying us more now in tariffs. Fill in the blank in terms of the targeted country, but it's the U.S. company importing the goods from those countries that actually pays the tariff.
Okay, Apple at the highs of the day. Apple highs of the day.
I've had people come up to me afterwards and said, I didn't know that's how tariff works. I thought the targeted country paid the tariff in order to send their goods to the United States. That's not how it works. It's a tax on U.S. companies. Now, a valid debate is who ultimately bears the.
Oh, shut up. Markets are at all-time highs, and they keep yapping about tariffs. While I'm sure eventually we're going to feel something from tariffs, I'm not really that worried about it. Markets continue to move higher. Okay, Apple's breaking out now. Apple's breaking out with 3 minutes to go. Apple breaking higher. Apple with 3 minutes to go. Okay, Apple. Yeah, that's a nice move on Apple. Shoot. What do I have left on Apple? Let's see. Apple. I sold a lot of my Apple, what was it, Friday, I believe, right? I have 215s. That's doing well. Okay, I have the 215 call. Apple, can you keep going here? 25, that's Friday. 215 call. Okay, let me take some of this off into strength. Okay. Okay, Apple.
Some of the long-term structural themes that are currently playing out in the market, such as things like artificial intelligence. Okay, so you're looking at tech as one of the big drivers of this in the future. Is it AI?
Okay, so Apple breaking out. I'm going to go ahead and take some profits here while I can.
For several years now, where do you think that there is the most opportunity for investors? Well, I think the AI story remains intact, and there is still some opportunity in that space, and that's primarily because companies are still spending big on it. I think that is the center of this opportunity. So we recommend investors focus on the long-term fundamentals.
Okay, Apple, nice pop on Apple.
And looking at areas like semiconductors, software, internet platforms, rather than concentrating your risk in any single segment or any individual stock. So I think still an exciting.
Nice pop on Apple. The highs from last couple of weeks are over here. Okay.
Well, utilities is a sector. It's involved in the artificial intelligence story. We're going to need more power and electricity to develop.
Okay, less than a minute to go.
That's a sector that's very much tied to this theme. With the utility sector, you also have companies here that pay strong dividends and they're well diversified. And financials, they've performed well this year. It's the key.
All right, let's see how much Texas Instruments moves tonight.
Okay, Julie Fox, it's great to talk to you today. Thank you for joining us.
Okay, S&P just a little profit taking there, dropping off. All right, folks, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. That's the closing bell. I got another hard stop today. I got to take my daughter out. I thought we had our appointment yesterday, and it got canceled, so I have to run. Have a good one. It's been a interesting day. Hope everyone enjoys. Have a great evening. We'll see you in the morning. Ciao.